word right now in the market is about all of the surround sound around data centers. It was described yesterday to us as plumbing around data centers and AI, which is available in India as an opportunity as opposed to core AI trades. You're already seeing some signs of that happening today as well. Is that a space that is exciting you, and is there an element of discovery there that you've gone through in terms of interesting ideas?
Yes, I'm glad you brought that up, because the fact is, you're not seeing this sort of capex in a single sector in India in a long, long time. It's $100 billion of commitment, 15 billion alone from a single company, i.e. Google in Vizag. So I think the opportunity set throughout the entire ecosystem of the data center industry is going to be gigantic. And you'll see a lot of mid and small cap companies that will be beneficiaries. And I'm sure a lot of these small caps will become tomorrow's mid caps, and mid caps, at some point becoming large caps. So yes, that's a big area of focus for us, for sure. Having said that, there's no direct way as yet to play data centers. Yes, I'm seeing Anant Raj pop up on the screen. Again, they've done a pretty good job of starting to get into that business through a subsidiary. But pure play data centers are still not listed as yet. I believe a specific one has filed a DRHP, and hopefully that gets listed soon. But I think until then, the best way to play it would be to try and work around the ecosystem that's being developed and the whole supply chain between now and the next 10 years for the data center industry.
Gautam, hi. So we've spoken about things that you might just be positive on, but what are the clear avoids from your perspective at this juncture? And has anything been added to the list over the course of the last couple of months based on what you've seen?
Yeah, good question. Here's the thing: we are staying away from real estate. We're staying away from consumer. I think the next at least 1 to 2 quarters will be reasonably challenged, given what we just discussed earlier about the West Asia crisis. And of course, the price of oil, and our Indian rupee, assuming it stops falling at some point. But when I look at those areas and potentially a super El Nino, not potentially, I think everyone and their mother's talking about it, so it's probably happening. But the El Nino also will have an impact on farm income. So I think if you add all these things together, consumer stocks right now are best to avoid. Real estate also, we think, is best to avoid. There is a huge concern still out there, and I'm not the first to say it, but about AI impacting job losses in the IT sector. GCCs obviously are as a recent reports, paying up more than what the IT industry does. And if they absorb some of the layoffs from the IT sector, that'll be great news. But incremental job creation within the overall IT sector is clearly a challenge. So we're staying away from real estate. So I think these are sectors to avoid. Even IT, as much as you've seen the one odd investment by TCS, again, a big commitment of $7 billion, but to the data center industry. But we aren't still seeing enough confidence, within the IT space to warrant a comeback into those stocks. But even though they've corrected as much as 35 to 40% in the past 12 months and are trading at now 15 to 16 times 1 year forward earnings.
I guess we're out of time, Gautam. But very quickly though, the sectors which are beaten down and have done capex has come to the fruition. Let's say, for example, chemicals. 30, 40 seconds, please, if you can. Is there interest there, or is it still avoidable?
There isn't that much interest that I've seen from my peers. We don't do cyclical, so I'm not an expert necessarily on chemicals. There have been certain stocks that may have done well, but we're not really the best guy to talk to on that.
Got it. Okay. Fair call. We are out of time, but Gautam, a small conversation, but lovely talking to you. Love the point about everybody and their aunt are talking about everybody and mom are talking about Super El Nino. Yeah. Love that point. Thank you.
Bye-bye.
Bye-bye. Okay. Well, guys, not a bad space the market is in, off the highs of the day, but still about a third of a percent. Not bad.
No, chugging along fairly well with everything concerned, and I think you will have a few sectors which are exciting. But since this is a market where you should have your specific stocks in place and on radar, you should stay on for the next show. That's all the time we have from India Market Open, but stay tuned. Ask Profit up next, where we answer all of your queries. We're back after a very short break.
So I think
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबर शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार अंबर शक्ति SDTMT.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be a chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill
Hello and welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachajani, and with me, as always, is Puneet Zaveri. And Puneet, I think the markets right now are, doing at least a tad bit better. The Nifty 50 is up by about 0.4%, hovering around at the 23,200 levels, 23,300 levels for the Nifty 50. But it's sort of a range-bound trade is what we're seeing. We'll have to see as to whether going forward the resistance of 23,400 is broken or not. The Bank Nifty right now is trading around the 55,200 levels. Also, again, another range-bound trade is what we're seeing on the Bank Nifty as well. Let's try to pull up the Nifty 50 heat map and see as to what are the counters that are, significantly buzzing. There's Hindalco yet again in the red, down 3.5%, followed by Infosys, which is down by about 1.75%. Eternal seeing downtick of around 1%, and you have Tata Motors, Mahindra and Mahindra also under a tad bit of pressure. But on the flip side, you have your consumption names or FMCG names doing very well. Nestle up 2.7%. HUL up 2.5%. There's Max Health, which is up 2% as well. Tata Consumer also doing fairly well, up 2.8%. Trent for a change in the green today, up 1.5%. And there's Kotak Mahindra Bank and ITC, both up 1% each. So that's with regards to where the Nifty 50 goes. Let's try to pull up the sectoral heat map and see as to what action is looking like there. There you go, FMCG topping that chart after seeing a significant amount of pressure last week that we saw, up 1.6%. Consumption also doing fairly well. But on the flip side, you have metal seeing profit booking down 1.2% and defense down 0.5%, as well as media down 0.5%. Pharma doing fairly well in trade today, up by about 0.5%. Let's try to pull up the advanced decline ratio to see as to what that is looking like at the moment. And because that will indicate as to how the broad end of spectrum is doing. Absolutely flat, Puneet, with regards to where the broad end of spectrum goes, and slightly in the favor of advances is what we are seeing.
But yet again, very volatile as well. We did slip actually in terms of the advances at one point of time below the declines, but now just trying to catch favor. So I think this day is going to be very important as well, because yesterday the Bank Nifty was up 2%. You're seeing that move continue today as well. And the PSU banking index also doing well in trade today. So when you look at the mid cap 150, the small cap 250 as well, you are trying to spot these individual movers in trade, but there's not much today. So it's a story of the benchmarks, and it's a story what you're seeing on the large cap names as well as on the banking names today. But there are some which are still making the news flow, and you see that the mid cap, small cap index is absolutely flat right now. But in terms of the BSE 500, you've seen some key movers today that are doing well in trade. Easy Trips, CCI Products continues for the second consecutive day. You're seeing Aegis Logistics also up almost 5%. I think there's a brokerage report also which might be hampering the stock positively today. While Raymond as well as Quest Corp are also some of the other top gainers today as well. On the other end though, the story continues for Sterlite as well as HFCL. But on the downside now, so both stocks locked in lower circuits after a spectacular run over the last few months, and hence continues to be one of the important ones. Rajesh Exports, we've covered the story well this last week. Third consecutive day of stock being in lower circuit. Both the gold financing companies are also not doing well. So down 4% each for Muthoot as well as on Manappuram, and Hindalco and Hindustan Zinc are some of the other losers as well. But let's go and start taking your stock related queries, and if you haven't already, do start sending them on the number that's flashing on the top of your screen. For that, we are being joined to answer your stock related queries. Kshitija Salve, she's the technical analyst, retail research at IDBI Capital Markets and Securities, and Gaurang Shah, as always, Senior Vice President at Georgia Investments. Both of you, thanks so much for joining in. And the first query, being on IRCTC, now Soumya from Bangalore has bought these shares at 774, so currently sitting at a loss. Asking, what should she do for the next 6 to 8 months, given that she's currently sitting in a loss? Kshitija, very good morning to you. How are you seeing this counter? Is it a good time to maybe buy, or should Soumya exit IRCTC?
Okay, good morning everyone. So if we look in a ICTC chart, daily chart, so stock is almost forming a lower low continuously and almost at a downtrend stop. So I feel 500 is our next support level. If 500 breached, then we could see a further selling pressure. So currently, suggestion will be the exit on a rally for ICTC.
Got that view, Kshitija. But the next question, that comes in now, and this one's on Dr. Reddy's. Our viewer G. Shrikant is holding on to these shares at 1308. So currently sitting on a slight loss, but holding 330 shares. He's mentioned, that the last quarter four results were, very weak at this point of time. But Gaurang, his question being that with the semaglutide injection launch, what's the expectation in the near to medium term as well as the 1 to 2 year view? Any coverage on DRL, Gaurang? What's your view?
Hey Puneet, morning to you and to all the viewers of NDTV Profit. Thank you so much for having me on your show. A small disclosure before we go any further that all recommendations that I'll be sharing with you this morning on your show, Puneet, they are part of our fundamental research team recommendation from a long-term point of view. Our company Geojit or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest, but we give similar investment ideas to our clients. They might have their investment interest. So talking about Dr. Reddy's, yes, semaglutide, and not only limited to this product, Puneet. My sense is that there are going to be plenty more new launches coming in from different pharmaceutical companies in India. What matters is the approval in the overseas market and the sale of that and that positive impact reflecting on the top line and bottom line. So while fourth quarter numbers were a little bit shade lower than what the street estimated, but my sense, Puneet, also is that don't look at just one quarter and decide on your entry exit or whether you need to hold or buy it. There are times when 1 or 2 quarters are bad, and that could be for any particular sector and any company in those sectors. Long term, we have a positive coverage on Dr. Reddy's. Stay invested.
Okay, all right. So that's the view coming on Dr. Reddy's. We've got, I think, P. Vora was calling us from Pune. A very good morning to you. Go ahead, ask your question.
My question is regarding Gillette and Gujarat Pipavav port. Are these fundamentally good to buy at present?
Okay. Can you choose one stock? Because both of these are from different sectors. So just want to get a sense as to which one is your preferable bet right now.
Gujarat Pipavav port.
Gujarat Pipavav. Okay, all right. Then I'll take this up with Gaurang. Gaurang, any view on Gujarat Pipavav?
Well, we remain positive on the sector. Mahima, thank you so much. Morning to you as well. But no specific coverage on Gujarat Pipavav. But just to reflect upon the government's policy of Sagarmala Pariyojana and increasing the presence of ports in India, whereby you will definitely have a lot of traffic coming in and handling. We have recently opened a couple of ports down south, and there are a lot more that's going to come up. No specific comments on Gujarat Pipavav since we don't have coverage, but we remain positive on the sector.
Got that view, Gaurang. But the next question coming in on Hind Copper, and our viewer Lalita from Bengaluru is holding shares at 605. So currently sitting on a loss on this one. But Kshitija, her question being, should she continue to hold on to these stocks or average down? What would be your recommendation?
If you look in a Hind Copper chart, so like daily setup is little bit weak, so we could see a further selling pressure around Hind Copper for around 500 and 495 levels. If they want to add, so around they can add around 495 to 500 range will be the better. And higher side like 550, so 560 is a resistance zone for a Hind Copper. So these are the range for the Hind Copper. So they need to they can add around 495 to 500 levels.
Okay, all right. The next one that we have is coming in, and this is on Scient DLM. Our viewer wants to know whether this is the right time and the right bet to kind of invest for the next 5 years. Gaurang, would you recommend that?
Right time, right stock, and right price. Mahima, I don't think there is anybody in this world who can possibly say the right price and time. But yeah, in terms of investment idea, defense related play, we are positive. Defense stroke capital market, I beg your pardon, capital goods related company. So we have an accumulated stance on Scient DLM. And speaking about defense and defense related plays, Mahima, I would also request your viewers that if you eventually understand and decide and do a little bit of homework and invest in defense related companies, please have 3 to 5 years kind of time horizon, because these companies get orders from government, different sources locally and globally. To execute that order, they need time, because these are high complex, very precise engineering products. You make a prototype, get it through all your approvals and certification, and then the mass scale production starts. So you need that kind of time horizon.
Got that view, Gaurang. But the next question that's coming in now, and this one's on a smaller counter, Ever Ready Industries, and our viewers wants to know if it's a good buy for the near to medium term. Kshitija, on the charts, it's a smaller counter. Any coverage?
Not coverage, but from a technical perspective, it is a currently good entry for the Ever Ready. So support or stop loss, one can look 315 and higher side around 350 to 360 level maximum resistance is there. So one can look for that target 350 to 360, and lower side support is a 315 for Ever Ready.
Okay, all right, okay. The next one that we have is coming in on Reliance. Our viewer has 125 shares at an average price of 1305. This is Mohit Mehta, who's writing in from Chandigarh. He wants to know whether he can buy more to average out and whether, from a long-term perspective, is that the right strategy to adopt or not? Gaurang, your view on Reliance?
Well, data center is the theme, right, Mahima, for the upcoming challenges that the world faces in terms of capability and capacity to be in place. And this is going to translate into a lot of positivity, because along with data centers, you have global capability centers coming in. This will translate into positivities not only for power generation companies, but also for power transmission, distribution, and power equipment companies. On Reliance Industries, to be specific to your questions, we do have a positive coverage. If you have it, hold it. If you don't have it, you can continue. You can start accumulating at current levels, and on dips you can add.
All right. Well, let's go across, take another caller from Andhra Pradesh now. And Man Singh has a stock query for us. Man Singh, very good morning to you. What's your query?
Good morning, sir. I am holding Inox India 50 shares at 1210. Should I book my partial profits, and where to invest that partial profit, or should I stay invested in discount?
And Man Singh, did you view the charts, so the fundamentals before investing into Inox India?
Yes, sir. I am following from last 2 years. It's fundamentally very strong, but now it is looking somewhat expensive.
Right.
So last 5-6 trading sessions, it went from 1400 to 1800.
Correct. Well, and you've been spotting it. Got that, Man Singh. But Gaurang, on Inox India, I don't know if you have active coverage, but Man Singh has been holding on for the last 2 years at 1200, stocks trading at close to 1800 now. Is it a good time to book profits for him? And if any related areas or other investment ideas that you like to book that profit of?
Well, Puneet, look, I always say this, like investing in stock market is an art. Booking profit also is an art in the stock market, because eventually you are investing so that your X becomes X plus something. I mentioned him saying that it went up to 1800, he didn't book profits, and now again it is closing close to 1800. So if you think, I'm not giving any advice over here, but if you think that you are getting the kind of return that you possibly had in mind, it is always prudent to do what wisdom tells you to do and what your fine sense of judgment tells you to do. Having endless expectation from your investment in equity market, or having endless amount of greed, sometimes, Puneet, profitable investments also turn into losses because of this greed. So use your common sense and wisdom.
Okay, all right. So that's the view coming in on Inox India. The next one that we have is on Bharti Airtel. Our viewer Prasad from Hyderabad is holding 15 shares at the levels of 1840. He wants to know whether they can continue to hold or exit. Kshitija, any view on the charts for this one?
Okay. So if you look in a Bharti Airtel chart, so like currently stock is trading almost lower formation, and now support is a 1775, and high side their buying price in 1840. So like highest at 1895 level is a possible, but currently view is a sideways. Once Bharti Airtel cross this 1830 levels, then stock could go around 1895 levels.
Got that view, Kshitija. But the next question is coming in from the hospital space. Ashish from Delhi wants to know between Max as well as Fortis, which is a better pick now. Gaurang, actually over the last couple of days, we started to see these hospital stocks, have another round of move, right, on the stock prices at least. Max definitely not cheap in terms of valuations, but between them, if you have a preference as well as your coverage in the hospital space.
So Puneet, I have one more thing to add. The ongoing conflict in Middle East is, according to me, if my understanding is right, healthcare and pharma and diagnostic centers, they are relatively insulated from the external shocks of volatile prices, energy prices. And they are equally insulated with raw material, cost going up because of the conflict and the supply chain side issue. We have coverage on 4 names from long-term point of view: Apollo Hospital, Fortis Healthcare, Max Healthcare, and Narayan Rudalaya.
Okay, all right. It's time to take a look at the F&O space now, and we have Sharad joining by to give us a perspective on what's working and what's not working. I think, Sharad, it's the FMCG pack that's doing well today.
Well, exactly, you are right. And Mahima, of course, some companies came out with the management meet and the tone was quite bullish, and that's why we are seeing a good basket buying happening. And look at the consumption names. HUL and even Trent are leading the pack. Good momentum coming in other FMCG players as well. ICICI Bank, Kotak Mahindra Bank, and even Axis Bank. Largely the private banks and Reliance are doing well in trade. Now, no major sell-off concerns, to be honest, here, and overall the technical setup does look good even in an uncertain market. Also, let's see the key long build-up, what's happening in stock-specific moves. And yes, it's the FMCG pack which is doing well. And we had discussed earlier about the defensives also. They do not have much global exposure. So that's also something which the street is taking some kind of, relaxation on that. Of course, Dabur, Colgate also make it to the list. Colgate, of course, keep in focus on the management meet also, which was there earlier as well. Apart from this, apart from the FMCG names, long unwinding happening for Indian Bank and Sammaan Capital. Little bit of concern the brokerages have raised, especially if you compare PSU banks and the private banking space. So yes, a little bit of sell-off is there in select PSU banking names. And lastly, I'd like to point out the short build-up that's happening for both of the gold financing companies. Gold has, of course, reversed, but it seems like a sell-off has intensified for both of these counters, Manappuram Finance as well as Muthoot Finance. So these are the stocks which should be on your radar in the day's trade.
Got the view. Thanks so much for that, Sharad. But let's go across to another query now, and this is from the tire space. Mohammed Yusuf is holding on to JK Tires, bought at 406 rupees per share, and he's holding close to 1170 shares. So his question being, Gaurang, what should he do with this counter now? We've seen, of course, the crude price volatility and whatever happens in the Middle East as well being an impact. But any specific view on JK Tires?
3 names, Puneet, for the better understanding of your viewers. We have positive coverage: JK Tire, Apollo Tires, and Balkrishna Industries in the market. BKT Tires, they are known, but specifically for truck and bus radial tires. One positive thing that happens with this particular situation, Puneet, is that very conveniently and easily the tire manufacturing companies pass on the price increase in case if they're going to take a hard hit on their profit margins. So consumers like you and me have to eventually pay that particular high price. Point number 2, tire happens to be a very crucial component in any vehicle, whether it is a bicycle, whether it is a 2-wheeler, 3-wheeler, 4-wheeler, passenger vehicle, tractor, agri equipments, or commercial vehicles. Without this, the vehicle is useless. So along with that, but third point, Puneet, is that extremely strong new order markets with the kind of numbers that we are seeing and new launches that are going to be lined up. And equally strong, Puneet, is the replacement market. So positive on these 3 names in tire manufacturing companies.
Got that view, Gaurang. But viewers, let's go across and start the rapid fire round in this edition of Ask Profit. Kshitija as well as Gaurang, keep your answers as short as possible so that we can take as many queries in the next 3 to 4 minutes. The first one coming in from Shobha from Bangalore. She is holding on to Yes Bank at 21.8. Kshitija, is it a good time to book profits for her?
Hold.
Okay, the next one is on Union Bank. Our viewer is bought it at the levels of 170. Rakesh Gupta wants to know if this is a good hold from a long-term perspective. Gaurang?
No specific coverage, would prefer Bank of Baroda or SBI.
Vijay from Chennai wants to invest 50,000 rupees in Samvardhana Motherson for the next 1 year. Gaurang, should he do that?
Auto ancillary space, outperforming company and great export market opportunity. You can definitely buy for long term.
Okay, ITC is a good buy for the next 10 years, Gaurang.
This is pretty long, Mahima. Nobody can predict that.
I know.
But yeah, we are positive on ITC from a long-term point of view.
Kavita from Australia is holding on to Century Plyboards at 770. What's the 3-month view, Kshitija, on this stock?
Exit on a rally because stock is almost trading near support zone. So if it is bridged, then we could see a further selling.
Okay, the next one is on Uno Minda, if it is a good buy from a long-term perspective, Gaurang.
Again, another one from auto ancillary space, and we are positive from a long-term point of view. You can buy for long-term.
Next one that's coming is from Ram from Chennai, and he wants to buy into Aurobindo Pharma for the long term. Gaurang, any view?
Mid-cap pharma-related company, and as I was just referring to, yes, you can definitely buy Aurobindo from a long-term point of view.
Okay, Marksans Pharma is the next one. 1,000 shares bought at the levels of 310. Continue to hold. Venkat Ramani from Bengaluru wants to know. Kshitija?
Hold.
The next one's on Anantraj, bought by Bhairav at 488. Kshitija, should he continue to hold?
Hold with the stop loss of 530.
Okay, Kalyan Jewellers bought at the levels of 350. 2,000 shares what Kamali from Chennai is holding. Continue to hold from a short-term perspective. Kshitija?
Exit on a rally. Support is around 345 level. If it is breached, then we could see a further selling pressure.
Next one's on GV Varnova TND. Stock's been doing well, and Jeet wants to know if it's a good time to enter. Gaurang, would you recommend that?
Positive on the sector, Puneet. No specific coverage, but yeah, power transmission, distribution, power equipment looks very good.
Okay, the next one is on Coforge. Our viewer wants to know, Ishwar from Kolkata wants to know if this is a good stock to continue to hold from a long-term perspective. Gaurang?
Extremely positive. One of the outperforming mid-cap IT stocks. Continue to hold, or you can buy as well.
Karthikeyan from Thiruvananthapuram is holding on to PFC as well as REC. Of course, Gaurang, an impending merger there, but does it make sense to hold for the long term is his question.
Well, again, related to power and financing of power projects, PFC and REC, we heard the finance minister speak about possible merger, if I remember that right, Puneet?
Yes.
No specific coverage, but definitely strong companies in the sector.
Got it. Well, that was the end of the rapid fire in the first half of Ask Profit, but Gaurang as well as Kshitija, stay on. A lot more stock related queries on the other side after this very short break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार अंबा शक्ति SDTMT.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be sharing with you such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertising.
Welcome back. You're watching Ask Profit right here on NDTV Profits, and let's continue with the stock-related queries. The next one that's coming in, it's on Amar Raja. Our viewer, Raja Rao, is from Hyderabad and holding on to shares, but at 930 for this counter. So it's currently sitting on a loss. Asking what he should do with his 400 shares. Gaurang, in the battery makers, there's a very huge investment cycle going on the lithium-ion side of things. And that's putting a constraint on the return ratios as well. But how are you viewing Amar Raja at this point of time? Is it a good time to buy?
So Puneet, like we were discussing about tire, battery also happens to be one of the most important component in any vehicle, whether it is a fossil fuel driven vehicle, whether it is CNG or flexi fuel, as we have recently seen a launch from Maruti, or more importantly for an electric vehicle. So investments are taken into consideration in this particular sector depending upon the futuristic outlook by the managements. So while the capex and new investments will augur extremely well in the future, maybe in the short to medium term it may put pressure on the cash flows and the financials. But long term, we remain positive on Amara Raja. You got in at higher level. If you have investable amount, you can add as well.
All right. Well, but let's also quickly pull up a stock that listed on the bourses today, CMR Green Technologies, and it's one of those rare ones which is listed with a 30% uptick, and in such a volatile time. So it's a good time to speak to the company as well. We're now being joined by the management of the company, of course, Akshay Agarwal, whole-time director, as well as Yugal Kishore Garg, He's the Chief Financial Officer of the company. Gentlemen, both of you, thanks so much for joining in. Akshay, let me come to you first because, in the recycling space, of course, that you operate in, very lucrative at this point of time. But this largely an IPO being completely an offer for sale. So just in terms of how you are, securing yourself in terms of your capacity increase as well as the cash that you have on the books, there won't be any need for any further infusion over the next 1 to 2 years, of course, since just post-listing?
Thanks for having us. The reason this was an all offer for sale is because we had a private equity investor who had been very patient with us for a long time, and they needed an exit. As far as expansion plans are concerned, the business is capable of generating cash, and even though this is the third time that we are coming to the market, we have made projections every single time, and we have met them without having gone public, and we believe we can continue to grow, and having this flexibility finally in the longer term will be promising, and that's an option that we can exercise when the right opportunity arises.
Also, since a lot of your revenues, come from the cast alloy segment as well, that's, directly linked to the auto segment. And we've seen that segment has gotten a big benefit of the GST rate cut. So just in terms of your current order book that you have, I know you can't give too many future forward projections, but does it continue to be a very strong year? Because H2 of last year, I'm sure, was very strong. Are you seeing that growth momentum continue in FY27?
Yes, the auto industry has proved to be extremely resilient. The GST 2.0 rate cuts have proven to be a real lifesaver at this point. And at the moment, we can see a strong order book. We can see that, and we are just at the cusp of entering the festive season as well, which historically we have seen has proved to be a very strong season for auto industry. So we have our fingers crossed, and we hope for the best, and we have strong demand at the moment.
Also, if you can just give us some perspective on, because you're also in the secondary aluminum market as well, and that has been volatile, especially since almost 9 to 10% of global aluminum is coming from the Middle East. So how have you seen prices inch up for that product? Also, I think at this point of time, the demand for aluminum from your company also might be, at its peak essentially. So if you can give us some perspective, what's your current capacity in this segment, and how has pricing as well as your availability for scrap been at this point of time?
Yes, so I think this crisis has created, it's mainly affected in terms of production, the primary aluminium market. As far as the secondary is concerned, since our scrap is imported from around the world, so we have seen long delays in shipping because of build-up at ports, and this did create a shortage at a time when demand was at its peak. But given the strong operating systems that we have in place, we have been able to meet that extra demand for our customers despite that shortage. As far as scrap is concerned, scrap is something that looks like will continue to be imported, while we are growing our share of domestic procurement as well. However, since India uses very little aluminium per capita, so we see it being imported, and of course the import supply chain brings its own set of challenges. However, we believe that we have the right relationships and systems in place to tide over storms as we have in the past.
And what does your current capacity stand at this point of time?
Yeah, company current capacity is 6,05,000 as of now, and company operate around 70% of its utilization. Though company, whenever the requirement is there, company will increase their production capacity. However, we have a sufficient margin up to 70% to increase up to 90%. In the case of auto segment, we can increase up to 80%, and in other like UBC recycling or billet sheet ingots, we can increase our capacity up to 95%. So if additional capacity is required, company will always ready to increase their capacity. Our company has purchased their land for the EV expansion in the Shulagiri near Tamil Nadu, Hosur. So whenever the demand is there, we will increase our capacity.
Got it. And just one last question, because of course we'll get into the detailed numbers post your next quarterly filing as well. But just in terms of what we've seen from the listed players, they have diversified into other materials as well. Like copper has been one of them where a lot of recyclers have gone into as a next venture. Just for you, if you can give us some perspective, if you're looking at copper, lithium-ion cells as one of those other diversification opportunities from the current aluminum business as well.
So about 78% comes from aluminium as far as our top line is concerned, and the balance 22 includes various other metals like stainless steel, copper, brass, zinc, magnesium. So we have luckily a good exposure to those markets as well. And at the moment, what we are focusing on is diversifying into various forms of aluminium. At the moment, bulk of our sales is cast aluminium, but we have recently diversified into wrought aluminium through billets, as well as used beverage can scrap recycling for making new cans here in India as well, which interestingly happens to be for a primary player. So we are seeing a very strong aluminium demand, which is at the moment keeping our hands full. However, we have our eyes open, and we are ready for opportunities as they arise.
Got it. Well, of course, a longer chat warranted post our next quarterly results. But Akshay as well as Yugal, thanks so much for joining in, giving us perspective about the company, as well as many congratulations on that blockbuster listing today.
Thanks a lot. Thanks for having us.
Well, that was the management of CMR Green Tech. Of course, bumper listing, but also bumper subscription that we saw on this company as well in terms of the IPO. But let's continue your stock-related queries now. We are, getting a query on car trade tech now. Rajiv Kumar from Delhi is asking us that he's bought shares at 1994 and he's holding on to roughly 110 shares. Stocks up almost 9% now. But Kshitija, on car trade tech, is the momentum expected to continue? Should he continue to hold on?
I will suggest that book a partial profit around this level, and higher side he can hold around from here 2500 levels to 2600 levels, and support is around 2300 levels for a car trade.
All right, okay, so that's the view coming in on car trade. The next one that we have is coming in on Vedanta. Our viewer Priya wants to know if this is the right time to make an entry into this counter. Kshitija, I'll stick with you for this one. What are the charts indicating?
Charts suggest that there will be a more selling pressure a little bit in the Vedanta. So entry, we need to wait for the fresh position. So around 290 level will be the entry position for a Vedanta. So 290 is currently support. So 290 will be the best position for entry.
Got it. Also on Sri Renuka Sugar as well, Kshitija, Ashish from Bangalore is holding on to shares, but he's bought at 55. So he's down more than 50 to 60% on this counter. Asking if he should exit or hold on to this to Sri Renuka Sugars right now. Would you recommend that?
No, sir, because daily weekly setup is a negative only. Stock is almost trading lower levels only. So suggestion will be exit only.
Okay, all right. The next one that we have is from Priyam, who's writing us from Hyderabad. Yet another short-term query. So Hindalco is the counter that he wants to know about, and wants to know if this is the right level to kind of enter into this counter for short-term gains. Would you recommend that, Kshitija, considering that it's seen quite a good amount of profit booking?
Yeah, overall in the metal space, there is a profit booking currently going on. So for a Hindalco, 1020 level will be the best entry level for Hindalco, because stock may come around this level, 1020 levels. And higher side resistance is around 1090 levels for Hindalco.
The next question, that's coming in from Ishwar, and he's writing to us from Kolkata, asking, that he wants to take an investment in the auto space, and if M&M is what his choice is, if he should go ahead and buy this counter. Now, Gaurang, From those highs of almost, I think, 3,800, 900, we've seen a correction on the stock now. And the long-term plans of the company, of course, stay. Do you feel it's a good time to buy into M&M right now?
Long term, I think one of the best plays in the four-wheeler stroke commercial vehicle, Puneet, Mahindra and Mahindra. And the downside looks extremely protected from here. We have a positive coverage on M&M from a long-term point of view.
Okay, all right. So that's the view coming on M&M. The next one that we have is on Paras Defense. Prajwal Govda has bought it at the price of 657. 20 shares is what he's holding, and he wants to know the technical view on this one. So Kshitija, your view on Paras Defense?
View is currently positive, but after a strong 4 to 5, 6 days rally, we could see a little bit profit booking. If you have already position, you can hold it. For the fresh position, you need to wait for the little bit correction. 930, 935 level will be the best entry point for a Paras Defense.
The next one that's coming in and pull up Dixon Technologies now as well. Companies signed a new joint venture today to enter the telecom product space as well as the networking ones. They will be also used for data centers. So that was a crucial news flow for the company. But Suman from Kolkata actually wants to know if he can start accumulating this counter now. So he's not bought into it, wants to know a long-term perspective there. Gaurang, on Dixon Tech, of course, fallen from the highs of almost 18,000 rupees. And I think that Vivo JV is what we are watching out for. But is it a good time to buy into it, or should he wait for some clarity on the Vivo JV part and then probably take a call?
Well, I think waiting for clarity and whether this deal happens or not. Let us look at the sector first, Puneet, and tremendous amount of positivity in terms of the policy that the government has put in place, PLI scheme, and most of these companies, Puneet, who are into AMS. Now, whether it is to do with PCBs, semiconductor chips, or any other product, they have gone ahead and invested in capex also. And the government's minister's statement and the view is that not only India will be self-sufficient with these products, but there will be a huge export market opportunity, like in defense we were discussing earlier. So this company happens to be the frontline company in this particular sector. No specific coverage since we don't have coverage on Dixon, but we like Amber Enterprises, CG Power and PG Electroplast.
Okay, all right. The next one is on KFin Tech. 152 shares bought at the levels of 927. Our viewer is holding from a perspective of 2 years. But based on the charts is what, do we have the name of this person? Okay, I don't think we do. Okay, this is from Shankar. And he's saying that he's looked at the long-term charts for this one and considered buying KFin Tech. Should I hold average exit, Kshitija? Your view?
From the chart, KFin Technology on a daily chart, it's almost trading the lower low formation. So currently trading near a support zone. If this support hold around 830 level, we could see from here a bounce back around 980 levels from a long term, like 1 year perspective. So 980 will be the higher side resistance as per the weekly and monthly time frame.
At this from a long-term perspective of at least 2 years. So on a weekly time frame, could you give a perspective?
Yeah, so currently stock is trading there in the weekly time frame is a support zone only. So if we have that position, so they can hold for a higher side. If it is 980 levels cross, then we could see a 1150 levels for a KFin Tech.
Let's go across, take another caller now from Andhra Pradesh, and Gauri Shankar dialing in for a stock query. Good morning, welcome to the show. What's your query?
This is regarding State Bank, sir. State Bank of India.
Okay.
Hello.
Yes,
sir.
sir.
It's a short-term view because I bought it around 980 rupees recently.
Okay.
Short-term, within this week, can it go up or is a dicey situation? Can you technical or fundamental authorities?
Got it.
Clarify.
Got it. Kshitija, on SBI, Gauri Shankar has bought it at 980. Is it a good time to book out, or should he ride the wave?
Yes, they can wait for a few more coming trading sessions. So higher side 1070 will be the target and support is around 970 levels.
Okay, all right. So that's the view coming on SBI. The next one that we have is on MRPL. Deepak from Coimbatore has purchased it at the levels of 158. Wants to know if he can book his profits at the current levels or not. 148 is the buying price and currently it's trading at around 169. Kshitija, what would you recommend?
book profit will be the suggested, and a higher side 177 to 180 level they can hold remaining position, and support is around 158 level.
Got that view, Shilija. But the next one, and this query is specifically picked up for Gaurang only, because he one of our viewers has bought Indigo Paints at 1490, which was the IPO price. Now currently, if you pull up the chart, of course the stock's trading below that level, but it had gone up to almost 3,000 rupees when it listed. So he could have doubled his money. And I think Gaurang, you've highlighted us that while not in so many words, there is a good time that you should take some money off the table when you get the chance, and it's a very intuitive call. But on Indigo Paints, how are you viewing this counter now, and should he continue to hold these shares, because paint space also going through its own set of challenges? How are you viewing this counter, and any view that you can offer our viewers, since he's currently sitting on a loss as well? What should Mr. Damodaran do?
Well, it's been quite a while since we had the IPO of Indigo Paints. Puneet, I really don't recollect whether we did cover Indigo Paints during the IPO via IPO note. But on the sector, first of all, Puneet, we remain positive. We have coverage on Kansai, Narolak, Berger Paints and Asian Paints. Now, the reason why there is a concern in the immediate short to medium term is because of the dependency of paint sector on crude and crude derivatives. As happens to be one of the core inputs, raw material for paint industry. But the opportunity is quite big, whether it is to do with the infrastructure, real estate sector, and renovation of your home. We remain positive. Unfortunately, he saw 3,000 plus levels, and that's what exactly I was trying to say. When you double your money, you need to be a little bit proactive, because that's a fantastic return you get. By no ways I'm trying to give any buy, sell or hold advice. But like I mentioned earlier, use your wisdom and common sense sometimes.
Okay, all right. So that's the view coming on the paint space. We've got Sai, who's calling us from Hyderabad. Sai, a very good morning to you. Go ahead and ask your question.
Yeah, good morning. I'm having shares of Punjab National Bank since 3-4 months, I guess. And I'm willing to hold it for 2 years. But what sort of target can I expect? I'm having 700 shares of it, and actually I'm willing to switch some amount to ITC. Actually, is it a good choice, or any other Nifty 50 company can you suggest, please?
Okay. Nice way of swooping in two questions, Sai, but I'll take your question. Gaurang, do you think PNB is a good hold for the next 2 years? And if he wants to, diversify some money in a Nifty 50 stock, which would that be?
So, Mahima, not only investors have become smart about market understanding, but also about asking questions, right? So, having said that, look, on PNB, he asked for a target long term on the fundamental. Our targets are somewhere close to about 135 to 145. These targets would get revised in case if the earnings improve, and which we strongly believe for the BFSI segment. We believe that is banking, public sector, private sector, as well as strong NBFCs would deliver good set of numbers. He also asked about a large cap name. So one name again in banking, if I have to choose, would be private sector bank, ICICI Bank.
Got that view, Gaurang. But the next question, this is from Akhil from Pune, a very interesting one again. Because he wants to invest in some of those battery numbers, and Gaurang did answer a query on Amara Raja, but he started investing in HEG at a price of 543. So he's asking if he should hold on to this counter a little longer. Now, Gaurang, I think this whole space of battery recycling, amongst others, are continuing to gain a lot of traction now at this point of time, because the growth is quite bigger than the large cap companies right now. If not within the active coverage, though, if you can give us some perspective of how you're seeing these recycling companies, and we only have a couple of them in HEG as well as graphite, but do you think that's a prospective area to look at?
These two companies also have a history, Puneet. China Electrodes, Curb, Band, Advantage India, both these stocks, HEG and graphite, they defied the law of gravity, Puneet, once upon a time. But then after that, they've been downward move. No specific coverage on either. But if you want to play batteries and battery related, then instead of going for ancillary names, why don't you go directly for either Amara Battery or Excite Industries? As a disclosure again, we have positive coverage on both.
All right, it's time for our second rapid fire round. Gaurang and Kshitija, you both know the drill. The next one is on Moshchip. Gary from Agra wants to know if this is the right time to enter Moshchip or not. Your view, Kshitija?
Right time for the Moshchip is we can enter this enter at this level. So view is a buy and support is around 199 level.
Got it. Dilit Nandi from Kolkata is holding on to Vari Energies at 2832. Gaurang, should he continue to do that?
Vari Energies, we don't have coverage. Vari Technologies, which we are positive on, unfortunately.
Okay, PNB Housing, 40 shares bought at the levels of 802. Sell or hold? Murthy from Hyderabad wants to know. Kshitija?
The selling pressure will be there, so view is a sell.
Got it. The next question, that's coming in now, and this one's, I think we took a query on Reliance, right?
Yeah.
Okay, IRB Infra is the next one. Then our viewer has bought shares at 31. Kshitija, should Bhaskar continue to hold these counter now?
Exit, sell will be the view.
Okay, the next one is on Ashok Leyland, 400 shares bought at the levels of 174. Average out, hold, sell, Gaurang?
One small correction, Mahima, Vari Energies earlier question, we do have positive coverage. On Vari Technologies, we don't have coverage. I got mixed. Okay. Ashok Leyland, hold for long term.
Got it. And Gaurang, what's your view on Vari Energies? Should he continue to hold?
Yes, we have a buy stroke hold. I mean, you can buy definitely hold and
okay.
even add.
Got it.
From a long-term point of view, Vari Energies.
Got it. Also on ITC Hotels and Lemon Tree Hotels, Gaurang, do either of them, pick in favor for you? This is Surya from Pune who's asking this question.
Positive on the sector again. ITC Hotel has huge, not only ITC, Lemon Tree and others, GVK Hotel, Indian Hotels. We like Indian hotels in this particular sector, but ITC Hotels happens to be a strong play. Okay. No specific comments.
Okay, is my trip? Dr. Lavinia from Eluru is holding 50,000 shares, bought at the levels of 9 rupees. Hold, sell. Kshitija?
Now hold.
Got it. The next one coming is from Sagar. He purchased Wipro at 181. So I think post the correction, Gaurang he's got into it. Should he continue to hold his 250 shares?
The sad part about this frontline IT company, Puneet, is the numbers. Very deserved. I don't even remember which was the quarter in the last many financial years they delivered good set of numbers. We have a positive coverage as a disclosure, but an underperforming stock. Target is somewhere close to about 220.
220.
Okay, all right. So that brings us to the end of course, this rapid fire round. Kshitija and Gaurang, thank you so much for taking all the time and helping us answer all those stock-related queries. But I think a breaking story from Piyush is what we've gotten, and it's important to address that because overall banks have started to hike their FCNRB deposit rates. They're expecting deposit rates to be hiked by anywhere between 300 to 350 basis points. HDFC Bank, Yes Bank, AU Small Finance Bank hike FCNRB deposit rates. HDFC Bank has set the rate at 6%. For Yes Bank, it is at 7.1%. For AU Small Finance Bank, the rate is set at around 7.1%. This, of course, is on the back of RBI that will fully provide for FCNRB hedging costs and facility available till September end is what sources are telling us. So this is, an exclusive story that our reporter Piyush has brought in. So that's with regards to the updates coming in for the FCNRB deposit rates. But with that, viewers, we're completely out of time on this edition of Ask Profit. Do stay tuned. KYC comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury, and we've left all decisions to the wisdom of the jury.
Who will learn?
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, and this is the show where I get you interesting mid caps and small caps, and at times even large caps also, and try to give you the story behind the sector and the company as well. But before that, try to guess the company which we are getting today in KYC. First one, hint is, it's a dairy company founded in the year 1992. Second hint, it's backed by ace investor Sunil Singhania's Abacus fund. Pretty interesting, right? Let's talk about the third hint. The stock is up just 48% in the last 5 years. So definitely they have, tested the investor patience. The company plans to grow their ice cream segment revenue by 5 times by 2030. Pretty interesting to understand this company. And the company in focus, I'm sure you know there are 3 to 4 listed dairy companies, but the company in focus is going to be Heritage Foods. Yes, this is the company which we are going to talk about in KYC. But why are we getting this company? Earnings season is over. What's so special about this company that has taken my interest? The first is the company's strategy ahead, especially with the focus on the ice cream segment. That is where everybody's talking about it. Recently, a lot of companies are moving from oil to milk. So it'll be pretty much interesting how premiumization plays out in the ice cream segment. The margins, will there be under pressure in what was seen in FY26, or will there be any change in FY27? How the milk procurement prices and volumes looking like, and most importantly, any impact of El Nino in the milk industry. Also, I'll be asking the company about the share of the value-added products versus the milk segment, and I'll give you the breakup also of these revenues, the growth expansion strategies ahead for the next 2 to 3 years for Heritage Foods, and of course, another important question to be asked will be the reception of the newly launched product, especially in the paneer and the organic milk segment, how things have panned out, and any other further ancillary acquisitions which the company is planning, maybe a D2C acquisition or not. To understand the entire process, we'll have Shrideep Kesavan, the CEO at Heritage Foods, where Shrideep will answer
most of our queries. But let's try to understand and get in more about this dairy company. It's of course located in the south region, but let's get into the details about it, the history about the company. So it's a dairy company. It was co-founded in the year 1992. It's backed by Sunil Singhania promoted Abacus. That's around 1.4% stake is being held by them right now. Operations, they span of course 16 states of serving millions of customers. And also, what are the products? Dairy, value-added dairy products, which we talk about it, be it curd, be it your shakes, everything is covered in that. This is the overall capacity, the processing capacity as well as the chilling capacity. While on the other hand, there are totally 18 plants and closer to 7,500 distributors and 225,000 retail outlets as well. But how does the revenue show up? What's the revenue breakup like? Milk is still higher, 56%, and every dairy company has a story that they are moving towards higher contribution from VAP. VAP is your value-added products, which is high margin. Demand is also pretty much decent, especially in both rural and urban areas, and that is why the street might start giving value to the stock or the sector if this contribution goes up. So this is the revenue breakup for Heritage Foods. Also, let's talk about the industry growth potential. Interesting data. Ice cream has an organized market share of 40%. Compare that with paneer is just 4%. But let's look at the CAGR growth for the next 7 years. 18 to 20% is for ice cream. For dahi curd, it's 21 to 23%. Look at paneer, 23 to 25%. And if you decode the ghee segment, it's on the lower side, roughly 9 to 12%. But remember, there is a good potential and India is a consumption story play. What are the key numbers for the Q4? Of course, the numbers were quite, you could say, mixed. Procurement prices, that increased by 8% on a year-on-year basis. And if you look at the average selling price, there was a slight increase from 55.6 last year to 57.8 per litre. Apart from this, the value-added product, look at that. That is where the growth is coming in. That is up almost 18% on a YOY basis. And there are some consumption packs also if we talk about it. Ghee, butter and VAP, which is the value-added products, that's also seeing a revenue uptick of almost 22.5% on a year-on-year basis. But what may work for the company? That's the question you'll ask me. Of course, the valuations are attractive. There was once a euphoria 2 years ago. 4 out of 5 analysts have a buy rating. So coverage is less, but nevertheless, it's quite bullish. The milk output is likely to remain strong in the year FY27. And this is despite the El Nino impact. Ice cream business, they are quite bullish on. From the current revenue, they're expecting it to go up to 5x, almost 500 crores by FY30. And this is where we are focusing. But what may not work for the company? Let me get you that reason. FY26 has been impacted by severe milk shortages. The pressure was coming on the margins, procurement inflation, and a weak flush season. So, of course, the FY27, will it improve or not? That's a big question. Sector is out of street's favor. Though it's not in that flavor also anymore. The working capital numbers may get stretched. That is where a little bit of concern comes for me, which I was just checking the numbers. So definitely concern is there in the sector as well as the industry. But another important place for concern is our KYC ratings. And KYC ratings, we try to understand with these 8 parameters on how we get our final rating on the company. Of course, this includes income statement, balance sheet, cash flow. This is of course there, but we also get in the ROC numbers to see, is there a pressure coming in the company? Apart from this, we also have the street cred, which is nothing but how much the money has actually been made by the stock for a long-term investor, short-term investor, and also we get in shareholding, valuations, we compare them with the other dairy players, and of course the outlook, both company specific and the industry. We get you all of these details compressed in the 8 ratings. So let's start with the first rating, and that is the income statement. An income statement, largely the 3-year CAGR numbers. Top line is not that impressive, it's just 12%. But if you look at how the EBITDA is panning out, or even how the PAT is panning out, that's where we see almost 20% plus CAGR gains coming in. But my concern is in the fourth quarter numbers and also the FY26 numbers. There was an impact, and that is where we are seeing it, and it's an aberration. So both EBITDA and PAT, that is where the hit has come in on a year-on-year basis. And largely we see the margins have been in between that 4 to 8% range, but there is a correction from 8% coming down to 6% odd. So there is compression of margins. The management also stated, I gave you the reasons for it also. So it is giving a very mixed signals right now. So I'm going to give this a neutral rating. Let's talk about balance sheet. Balance sheet is largely for a company's this size. They have maintained it decently. But the borrowing, of course, this of ex-lease liabilities, the number comes in at 324 crore rupees. When it comes to the bank numbers also, it's kind of decent. But yes, in case there are some payment issues, then receivables might be in question. But it's nothing there right now on the balance sheet as of now. It's quite decent. A little bit of increase is there in the debt equity ratio. It's almost 0.3 times, but no major concern. So it's a neutral rating as well when it comes to the balance sheet. So we spoke about income statement, balance sheet, largely neutral ratings I have given. Let's see what's happening in cash flow. And of course, look at the cash flow numbers. They were pretty strong in FY24, but that cash flow from operations seems to have come off in FY25 and 26. Largely the conversion has been pretty strong, and the net cash flows also, a little bit of adjustments are definitely there. But net, nothing much major to learn from this cash flow, to be honest. So I'm going to give this a neutral rating as well. Now a little bit of concern comes in for the return ratios. Largely it has been very volatile. You saw in FY22 the company enjoyed almost a 20% ROC numbers, and after that it has been kind of downhill, and it's tried to come up and it's back at that 24 in FY25. But then again the margin pressures which came in the business, that also impacted the ROC numbers, and it's at 14% right now. So a very volatile kind of a setup for a dairy company when it comes to the ROC. And remember, expansion is at play. आइसक्रीम का बिजनेस भी धंधा बढ़ा रहे हैं और 2-3 नए लॉन्चेस भी कर रहे हैं कंपनी. So it's a neutral rating right now when it comes to the ROCE. Let's talk about shareholding. What has happened, what hasn't. Promoter stake hasn't been touched over the last 2 years. But look at the variations for FIs. March 24 it was 2%, it went up to 6%. Again it's back to 2%. So FIs haven't moved out, but a lot of volatility has come in. DI is also a little bit of concern is there. It was as high as 11% in March 24, but after that it fell to 4%, and now a little bit of DI buying is happening. Can you call it smart money entering again to the stock? We need to see and wait it out. So net, it's giving us mixed signals for the shareholding pattern. So I'm going to give this a neutral rating. Let's also talk about street cred, what has happened, and I think that's where the concern lies. I had given you the hint. The company has just made 48% in the last 5 years, and that is not good. If you're a long-term investor, the stock has tested your patience, and from 2025 highs, the stock is down 40%, and if you look at the last 1 year, stock is down 32%. A minor increase coming in from March lows this year, but a lot of stocks went up. So net, yes, the stock hasn't made money for much of the investors, and I'm going to give this a thumbs down as well in my analysis. But the question is, if there is so much stock fall, does this make the valuations quite attractive? Well, the entire sector has seen a churn, and that is why most of the stocks which were trading at 40-50 times almost 2 years ago all have corrected, and they are stabilizing right now. Does it mean it's quite cheap? Well, it's evenly priced, I would say. I wouldn't make it very cheap also, because the sector has seen a derating. And remember, there's a cyclicality in a dairy sector. 20 times, 23 times, 26 times. Most of the stocks are in that range, except Hatsun Agro. That is where it's trading at 57 times, the forward P numbers. So I'm going to give this a neutral rating when it comes to the valuations on the peer analysis. But let's try to understand the outlook segment. What's more important? Let's get in. The first important point is the expansion happening across fresh, ice cream and modern trade channels. Of course, quick commerce is also coming in, and they can have high margin value added products which are coming on the shelves. So that is an expansion strategy. The value added portfolio, that's one of the most important things to track when it comes to a dairy company. Now recently they launched Heritage Creamy Shakes. It's something like an Amul Cool, just to simplify it for you. These are your milkshakes, and also the frozen Malai Paneer cubes. Remember, these products have a higher shelf life also. India's milk output is expected to rise 7% in FY27 despite weak monsoon risk. So this is a positive point as well. So for this outlook, I'm going to give this a thumbs up. But let's try to revise the numbers for Heritage Foods right now in those 8 parameters which we have tracked at KYC. Largely it has been quite neutral: income statement, balance sheet, cash flow and return ratios, because there is some positive, there is some negative. Same thing happens here, but street cred, the stock hasn't made money for the investors. That's my concern. But on the other hand, the outlook, both industry and company specific, does show that the company is at a point of inflection. So let's see what's the total story all about. And the KYC rating is 4 out of 8 for Heritage Foods. It's largely quite neutral from our analysis. But which side will the story go? Positive side or the negative side? So to get that, we'll have Shrideep N. Kesavan. He's the CEO of Heritage Foods. He joined this company as a CEO over the last, you could say, 5 years, and more than 2 decades of experience he has in business leadership. One interesting snippet about him is the ex-VP of Coca-Cola India and South and education from Excelrai Jamshedpur. So pretty interesting take from Shrideep. But before all this conversation, we'll come back in a very short break. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be sharing with you of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world. from markets and the economy.
Welcome back to Know Your Company, and now we are joined in by Shrideep N. Keswan. He is the CEO at Heritage Foods. Good afternoon, Shrideep. It's always a pleasure to have you with us, and it's a summer season and everybody's talking about ice creams, and I'm sure you have also given a very strong bullish guidance on the ice cream segment. A lot of news flows are happening across this segment. As a company, how do you see this ice cream segment going? Of course, you have a plant also now. So just let's get some details in. And of course, almost a 5x jump in revenues we are expecting by 2030. So your view on that, Shrideep.
Thanks, Sharad, for having me on the show. It's always a pleasure. Yeah, the summer we are a vertically integrated dairy company, which means that we procure milk from the farms to selling the product. So whenever we have very harsh summer, it's excellent news as far as the consumer side is concerned. But at the same time, I'm a little bit concerned about the milk procurement as well. Now, coming specifically to the question that you asked, ice creams, at this point in time, it's doing fantastic. We commissioned our greenfield ice cream facility sometime earlier this year. From the month of March of 2026, it's been operational. In fact, we are scaling pretty well. It's actually working exactly on budgets, on our plans. And the viewers might also remember that earlier this year, we had acquired controlling stakes in a new age ice cream company called Peanut Butter and Jelly. These are makers of the very famous brand Getaway, whose entire business comes from quick commerce. And that's also doing exceedingly well for us in the last couple of months of this particular quarter. Ice creams is been the focus area for us. Because it's also an area where we have made a capex investment in recent times, also the acquisition, and the weather has been exceedingly good.
Yes, weather and for customers, the ice cream has been very good. It's a summer, it's on, everybody is enjoying that. But you're in the business also of ice cream, and there is something called the milk procurement prices and the volumes. On the raw material side or the supply side, how are the pricing actually looking? Are they firming up? And it's pretty much interesting to understand, even your butter prices. I was just checking a very interesting take you have put in your presentation. It looks very nice and you've given more details. So kudos to your, ideas on that. But I want to understand this pricing, the raw material pricing. Is it still on the higher side? Or is there an impact of El Nino which you are factoring in also?
Yeah, see, the raw milk prices started going up from Q1 of last financial year. In fact, if I look at Q1 of FY26, the raw milk prices were up about 4.5% compared to same quarter in FY25. That 4.5% went up to 6.5% in Q2, and eventually we closed the year with 8.3% higher raw milk prices in Q4 compared to Q4 of same period last year, right? So that has been the kind of steep climb that we had seen through the last financial year. In a way, the raw milk prices, the price increases were due to two factors. One, on the production side, we had seen a mild decline while the volume seems to have grown across the nation, but grown at a rate of about 3.5%. Whereas the ask or the demand in the market would have been about 5%. So that gap in supply demand is probably one thing that affected. And the second thing is actually the input raw material cost increases for farmers. If you recall, actually, I was watching your presentation before I was brought in for this interview, where you analyze the numbers from FY24, FY23 onwards. And if you've seen FY24 and FY25, were reasonably good run for the company because we had very stable milk prices at that time. So, you can call it law of averages or evening out.
Right.
The raw milk price had to happen because the farm sector was also under pressure because the input raw material prices were going up for the farmer. So in terms of farmer profitability, this had to happen.
Okay. So this is, of course, right. Shrideep, so this is basically an industry specific thing. It's not company specific. And it's we understand that what's happening. But I want to understand the margin outlook. Will that pressure continue in FY27 also? Because FY26 we saw a little bit of pressure was there. in the margins. I'm talking about the overall consolidated margins. So will that pressure continue in FY27 or any signs of bottoming out right now?
Right. So going back to what I was saying, in the Q4 of last financial year, we had seen procurement prices increase of about 8.3%. And as a company, we had been able to pass on about 5% of that to the consumers, not purely through price increases alone, but also through expansion of value-added products. Price increase per se would be around 4% or 4.1%. The balance 1.5% expansion in our net revenue would have happened because we expanded our value-added product contribution by about 3%. Last year, we closed at about 40%. So the reason why I'm giving all these details is for the viewers or investors to unpackage what's happening. They need to understand these dynamics, and different companies might be operating at different level. And I can explain you how this works out for us. That 8% increase in raw milk prices is not going to come off in a jiffy. And this is something that everybody should understand. It will come down naturally because with volume expansion that is expected to happen, and we are already seeing early signs of that, this will come off, but probably it will take about 4 or 5 months or 6 months for it to happen. We are expecting probably towards the end of this calendar year, the raw milk prices should stabilize, at least 1 or 2% should come down from the current levels. But that's not going to happen in a jiffy. But that said, we should expect going forward increasingly resilient behavior from our company because of our because of operating leverage kicking in, because of productivity improvements, because of value-added product shares increasing over a period in time.
Right, and Shrideep, apart from this, let's talk about the growth and expansion. You already have a proper nationwide network, but are you looking at any geographies for more expansion here?
Not immediately. Within our geography, we are spreading our value-added products in a more effective fashion. For example, we have always been present in Maharashtra as a state with the acquisition of Getaway, as well as our own ice cream plant coming in. We are looking at expanding our ice cream portfolio into Maharashtra. So if you call that as a geographic expansion, that is there. But if you're looking at any totally new markets being entered in this particular financial, no.
Enough. And there were 2 new products which I was just checking that had been recently announced. Paneer with a longer shelf life and organic milk also, even though they are quite niche right now, but there's a big, huge market for it, especially in the urban regions. So I wanted to understand how is the reception happening right now, initial feedback, what's coming in?
Yeah, though your question is on frozen paneer cubes, I'll demystify that. Primary market for that is actually exports. Exports is a growing part of our portfolio. We do not export commodities. Our exports are primarily on B2C branded products, and we are slowly and steadily expanding our presence in Southeast Asia as well as Middle East Asia. So these are markets that are the primary targets for this particular product. Even though we think that there'll be a small minor opportunity in India as well. In India, because fresh paneer is available, we feel that the opportunity for frozen paneer would be limited. But that said, as a company, we've been innovating continuously in the last several years. And primarily, we have been able to achieve that because of our superior consumer advantage, consumer knowledge, and our R&D capability. And in paneer itself, last year we launched Nourish Plus High Protein Paneer, which has already become 15% of our overall paneer portfolio.
Exactly. Paneer means for a vegetarian, it's a protein source, and we all know protein, how important it has become. Shrideep, it's wonderful to talk with you. You have given us some important dynamics about your company and also the industry which you are operating in. It's a bit tough, but nevertheless, a brave face, and of course, some operational efficiencies also at play. Thank you very much, Shrideep, for your time, and best of luck for the future. So interesting take coming in for a dairy company and how it's actually moving to an export play with value-added products and ice cream segment, which they are going very bullish on. So for interesting stories like this, stay tuned to NDTV Profit, and yes, keep watching KYC.
केसरिया से मन जोगी
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति STTMT।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective.
Benchmarks on Dalal Street hover close to today's high, with Nifty defending 23,400 levels and Sensex gaining more than 500 points. FMCG financial services lead the gains today, while defense and metals remain on the back foot. Fertilizer stocks surged after reports that the government may double this year's fertilizer subsidy outlay. The move comes as the West Asia conflict drives up global nutrient costs, raising expectations of stronger policy support for the sector. Equity mutual fund inflows saw a sharp slowdown in May, falling from the previous month's levels. SIP contributions also eased marginally, while gold ETFs witnessed outflows as investor preferences shifting during the month. Gold prices sharply fall after the US launched strikes on Iran, triggering a broader market sell-off. Despite rising geopolitical tensions, investors booked profits in bullion as concerns over a wider conflict and disruptions around the Strait of Hormuz intensified. CMR Green Technologies delivered a strong stock market debut today, listing at over a 43% premium to its IPO price. The strong showing comes after the issue attracted robust investor demand with a massive 127 times subscription. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar and let's get going on the market. And yes, it's a good day of trade today with the market really gaining, Nifty 50 gaining almost 0.7% in trade. It was trying to defend that 23,400 odd levels, but just slipped lower than that at a kissing distance nonetheless. But let's take a look at what's really working in the market and what's not. Well, in terms of the contribution to Nifty 50, take a look at the banks, and some of the large banks are the ones really are the biggest gainers, like ICICI Bank. Even yesterday it was gaining. Axis Bank, HDFC Bank, big boy Reliance Industries, L&T are all the gainers, adding to the momentum of Nifty 50. But on the downside, remember, there are IT companies as well as metals are not doing well. So those are adding to the pressure points when we talk about the markets. When we talk about also the sectoral play today, it is clearly the FMCG as well as financial services. And remember, financial services is to a large extent a quasi-consumption story in India, and these two sectors are really doing well in trade. But on the downside, there are sectors like media still beaten down. Even defense, metal, energy, PSU banks are the ones which are really the laggards. Nifty Bank, though, even though not outperforming the key indices today, but at least is pretty much in line with the gains today. So that's adding to the momentum. IT also flattish in trade, not a drag as much. But when we take a look at the broader market, that's where the news lies, because in last few trading sessions, the broader markets had come out with exuberance, outperforming the key indices, while today it's a down day. Also keep an eye out for crude movement, because a large part of our market sentiment is driven by crude still and the war-related discussions. So slight bit of escalation in US-Iran war, but on the other hand, crude prices remain softened. It's down about 0.5% when we talk about Brent crude. Is at $91 per barrel, and that's a good news. Also take a look at rupee, because the RBI has come up with several measures, and that's really strengthening our rupee momentum also. So there you go, 95.15 is where rupee is. Let's get chatting more about markets and how to really plan the strategy for making returns. Ashi Anand is the founder and CEO of IME Capital, joins in now. Good to have you on NDTV Profit. My first question, it has been a volatile market with different themes really emerging, but the constant is the uncertainty. How do you play a market like this, and what are the pockets that really look good?
Hi, firstly, thanks so much for having me on the show. Yes, it is clearly a market with a large amount of uncertainty, and it's just extremely difficult to predict what's happening in the US-Iran conflict, and hearing a lot of conflicting signals, and week to week, you're kind of expectations around potential resolution are actually changing. Now, it is important to understand that India is quite directly impacted by what's happening with US-Iran. Oil prices at around 100, between 90 to 100. Every $10 increase in oil prices leads to a $15 billion negative impact on the trade deficit. If passed on to consumers, you're looking at about 25 basis points impact on inflation. So until there's not some clarity around what's happening on US-Iran, we are actually choosing to remain defensive. So we hold between 8 to 10% cash across the portfolios that we manage. And we probably remain with a bit more of a defensive stance, because if you don't see a resolution over the shorter term, further downsides in the market cannot not be ruled out. In terms of the kind of sectors that we like and the sectors we're really focusing on, one, we very, very clearly like new age digital platforms. So these are companies like your Eternals and the Paytms and the Nykas, etc. We see a very clear and a very strong value migration from traditional businesses towards these new age digital platforms. And we believe this is a theme that will actually continue over the entire coming decade. So that is a space that we clearly do like quite a lot. We are also aware of this very large global AI data center capex that is taking place. And while India really doesn't have a great number of companies which are exposed to the computing hardware part, electricity demand is likely to move up very substantially, and you are seeing large increases in capex across all global markets when it comes to the entire electricity sector. There are certain companies in the capital goods space that are actually direct beneficiaries of this demand. These are kind of vendors to the global supply chains of major electric companies such as ABB, Schneider's, GE Bonovas, etc. So that's another space that we have actually been quite aggressively building out exposures to.
All right. So lots of aspects there that you mentioned, Ashi. Let's now focus our discussion more on what could be a value buy in terms of the midterm and also the themes which really remain for the long term. You mentioned about the new age companies, the consumer, digital trust given companies, and you are playing defensive. So any recommendations on what could be value pick? Because also some of the valuations have gone all over the place in terms of the uncertainty as well as the inflation really playing out.
Yeah, sure. So if you're looking at things from a value perspective, I think the one segment which clearly we're the most comfortable with is the entire banking space, right? And there are multiple different ways to play banking. Either the highest quality banking franchises, traditional corporate banks are actually seeing an asset quality normalization. As well as some of the smaller banks, and PSU banks also fit within that larger asset quality normalization space. What we clearly like about banking is that while valuations are quite attractive and a lot of these banks haven't really performed too much over the last 12 to 18 months, it is a space which has structural growth. These are companies that can grow quite consistently at the mid-teens plus. And depending on some of the higher quality private banks actually can grow closer to the 20%. So you actually have the ability to buy high quality banks with fairly decent growth prospects, yet available at fairly decent valuations.
Right.
The other space which is clearly in a value zone is IT services. But I think considering the kind of concerns of AI's deflationary impact on their revenue, that is a space which we are at least staying away from right now, because there is a lot of uncertainty on what the impact AI is going to have and will there be a deflationary impact. So until there's not some clarity around there, while value is very, very attractive, we'd probably stay away until you don't have greater clarity on business momentum.
All right, Ashi Anand, quite a bit of, those topics and themes that you like, you shared. Thank you so much for joining us right here on NDTV Profit. So that was about market. Keep an eye out on Nifty 50, also defending its 23,400 levels. But the stock that we are really focusing on currently is Wakefit. It's a new entrant in the public markets, debuted in December 2025. And the price at which it debuted was around 180 rupees per share, but now it's trading at 123. If we really take a look at the 1 month momentum, also this is the highest level. In fact, the chart that will really show you how things are really moving. All right, in today's trade, it has really picked up to over 7% gain, and now a slight bit of profit booking has taken place, but still carrying on with 4% gain. Ankit Garg, who's the chairman, CEO and executive director of Wakefit, joins us now to discuss more about the discussion on how the company is going to grow. Ankit, good to have you on NDTV Profit. Of course, the company has expanded its strategy to many more plays of having a full house when it comes to home decor and all things needed for a beautiful house. Give us a sense on the strategy and vision of Wakefit.
Yeah, so Misha, I think we are currently looking at expanding our horizon, which has been a case for in the last 5 years. We started as a mattress company, and then we eventually got into sleep solutions, specifically selling bed sheets, pillows, mattresses, and trying to improve quality of the products which you're using while sleeping. Eventually, the dream elaborated to become a complete home solutions company. The idea is to make a destination for consumers where they can buy really good quality products at a very affordable price. And all the extension that we have done in the recent past, which I'm sure some of you would have noticed in terms of new categories, whether it is fertilizers or building materials, etc., it is in conjunction to we launching a new format store, which is a jumbo store, we're calling it internally. It is a very large format, about 1.5 lakh square feet size of the format. We are opening up in Bangalore, and hence we took a permission to make sure that we are able to give an exhaustive experience to our consumers when they walk into a store. They should be able to see plants, And hence, when you're doing plantation at your home, you should be able to buy fertilizers. Similarly, products like that. So this whole extension of new categories is in combination to making sure that the new format store should be able to accommodate a larger set of solutions for the consumers when they walk in.
Right. So, Ankit, definitely trying to capture the consumption of India. But on the other hand, you started like an online company where the costs were lower. You could be competitive with this shift and a bigger shift towards offline with much larger stores as well. How is the profitability going to pan out, and what will be the difference from online to a big shift towards offline?
So, Misha, I think it is in conjunction to how the company has grown and how the consumers are also evolving in the online D2C world. I think we started our journey in 2022. We launched our first store in Lucknow, and when we saw some of the metrics in those early stores, we were surprised that a lot of people who were buying online, they wanted to actually touch feel a lot of products as well, and hence if there was a hesitation to not buy a product, that converted into an excitement when they walked into a showroom. So as a result, our AOV improved, our number of categories that we could sell to a consumer improved, and we could let them try a lot more beyond mattresses. As we said, right, we wanted them to sell sofas. We wanted them to buy sofas, beds, dinings, etc. A lot of products that we have, and when they walk into a store, they're able to experience and buy that. So essentially what has happened because of the offline journey, the profitability is still very good because a lot of customers who walk in to buy one product category, they end up buying a lot more categories in a long period of time. And hence, the same customer, let's say we were doing 20,000 rupees worth of transaction in 5 years, because mattresses once in a while you buy, the same customer, we are able to sell a lot more product, probably go to 5x or 10x of from the transaction value perspective in next 5 years. And hence the profitability is very intact, and consumer at the same time is very happy experiencing the product because our product stores are very nearby to a consumer's home. Anywhere in the 3 to 5 kilometer radius, you'll find generally a metro city, you will have a store from Wakefield. And hence it became very convenient and at the same time exciting for consumers to try more categories because they love the brand for the products that they have consumed, let's say in the past. They would want to experience a lot more. And the other part, Misha, there is a lot of offline segment in the market where people are still hesitant of buying products online. I think this going offline has also opened up, a good place for a company like Wakefield, where we can let them try a lot more product, has less anxiety, and ask a salesman if they have queries, etc. And hence, unorganized to organized market movement, I feel it will be propelled because of this offline expansion. So we are very, very hopeful that we will run this profitably and execute this well.
Right. And when, Ankit, we talk about your present category mix, we have the largest share of over 60% coming in from mattresses, then comes furnitures around 30%, and then comes the furnishings at around 9%. With this shift and with this new strategy, how is the category mix going to change?
So, Misha, I think as we go live with these large format stores, we are hopeful that these categories which are furnishing and decor, categories like furniture, which we have been selling for last 7-8 years, we believe that the share of volume will substantially rise from these categories, and hence we expect that mattress, furniture and home furnishing and decor products should probably become almost equal in revenue. But in terms of volume, we hope that some of these small categories, let's say bed sheets, pillows, protectors, comforters, all of them will become much larger in volume. So our expectation is that revenue basis, all of them might end up contributing almost similar in revenue, but volume basis, some of the low SP categories will do really well.
And what is the target for going live with these stores? Give us a sense on the timeline.
We are expecting, first to the second quarter of the coming fiscal is when we should go live with this format.
All right, so that's quite fast. And then what about the profitability as well as the capex aspect over here with this? Give us a guidance on that. You already said a little over 100 crores in the stores. Any other capex requirement for this? And how will profit and profitability will get impacted? Because you had a journey of converting loss into profit. Will that sustain?
So, Misha, I think in terms of these categories that we are speaking about, I think many of these categories have been existent in Wakefield for a very, very long period of time. So we have figured out what right capex, what kind of machineries, what kind of land, what kind of sheds, what quality of people, etc. are required, and hence not a new subject for us. I think today what you are seeing as an outcome in financials of Wakefield, it is already contributed by some of them. But when it comes to logistics, let's say from a large product standpoint, I think Wakefield started, we knew this problem would occur to us way back in 2019.
Right.
Until then, we were using all 3PL partners. We were dependent on them to deliver products to across India. But we realized that, heavy and bulky is a very tricky category. And if you are not investing early in the stage to build the supply chain yourself, you will end up depending on someone who's not focused on building this supply chain, specifically on heavy and bulky, because a lot of heavy and bulky is still regional, very local. So what we did is we invested in this, and today I think we own about 37 distribution centers. We have a large mile, very large fleet who does delivery at the end of the consumers. Almost about 2/3 of the products that we manufacture and ship, or take orders from our customers, we deliver ourselves. So I think today, while it looks like that it's a new port for Wakefield, but I think in reality, we have been in this market for quite some time, and we have been building these blocks and making them very efficient every quarter on quarter, so that when we have an opportunity like this jumbo store, large format store, we should come and deliver very solid experience for consumers.
Right. So you are present in many of these categories. But one thing that stands out, Ankit, is that you are not asset light. You are looking at, owning a large part of the infrastructure for supporting this business. What is the kind of cost efficiency as well as the capex, and how will it impact profitability?
I think we have given this in our quarterly guidance, and we have been profitable as a company for quite some time now. We continue to expect that we will continue to grow our profitability as time passes, because there are a lot of efficiencies that we are unlocking, whether it is manufacturing cost, whether it is logistics cost, whether it is return cost, whether it is cost of marketing. I think every area we are targeting to improve marginally on every stand, and hence we foresee that in the next 3 years, the profitability should continue to compound for us.
All right, next 3 years it will compound, and I think, Ankit, during COVID times, we all have learnt about cost efficiency. That's going to be utilized now. But what about the supply chain disruption, the transportation cost inflation, as well as the demand on the ground? Give us a sense on that.
So I think when it comes to the supply chain volatility because of the global turmoil that's going on today, I think everybody in the industry has faced this problem, whether it is about you have to stack up inventory a little bit more than what you were doing earlier because there are uncertainties in terms of shipping timelines. And similarly, on the pricing side, we always have to make sure that availability of the material plus availability of the right price is there. There has been a very significant inflation in the raw material prices in this industry. But we have been fortunate enough that we've been working in the industry for the last 10 years, and we have very solid reputations with some of our suppliers. Like couple of my old suppliers that go as long ago as when we started the business. And just because of that, I think we have been able to safeguard ourselves compared to a lot of competitors. And there's still an impact, but it's still on a lower side. And we are hopeful that as the crude, we are not sure though, but if the crude softens further, we would be the first one to actually take the opportunity just because of the relationship. So we have become a lot more opportunistic in terms of buying wherever we get the right price, the right supply. Because of the relationship, we end up buying it and safeguard the interest for our consumers.
Right.
But when it comes to demand, I think, Misha, we are still seeing very solid demand. Fortunately, the traction is still good. I think just because the summers are on and maybe in the northern part of India, there's a little bit restriction in terms of people coming out of their home and trying to buy something from retail stores, which is a very regular phenomenon. Every year it happens. But we're not seeing as such a demand softening happening to us at least.
All right, Ankit, you sound very confident. That's very infectious. I must say all the best for your new strategy and bigger expansion into experiential big jumbo stores as well. Thank you so much for joining us on NDTV Profit. Take a look at that particular counter, a further downside and a more enhanced profit booking on that particular counter, which had risen by over 7% in trade. But let's shift our focus on rupee as well. And that's really something to watch out for, because RBI's measures are likely to really show results, and 95 rupees 17 paise against the dollar is where rupee is trading today. After RBI's measures, remember, and the leeway on FCNRB deposits for NRIs, bank have really started hiking the interest rates for the same, with HDFC Bank, Yes Bank already increasing the rate. And Piyush, my colleague, is right here with all the details on this development. Tell us, Piyush.
That is right. As expected, banks have started hiking the interest rate on FCNRB deposits, which is essentially meant for NRI customers. Banks have actually gone ahead and passed on 300 to 325 basis point in private banks' case, the full hedging cost benefit, almost full hedging cost benefit that they got from the RBI's new move where they said that they will provide for hedging cost. HDFC Bank has raised their FCNRB deposit rate to 6%. Central Bank has also raised their FCNRB deposit rate to 6%. AU Small Finance Bank has raised its deposit rate, FCNR deposit rate to 7.10%. And one more private bank has also done the same. We are aware that banks are in a requirement. They require deposits to fund their credit growth. This, as the RBI is bearing the hedging cost, this is a cheaper source of funding for them. That is why banks are going all out and raising as much FCNR deposits as they can to fund the ongoing credit growth and expected credit growth that they will see in the current financial year.
All right. Thank you so much, Piyush, for getting all those important details. But now, currently completely out of time on this edition of Markets at 12. But a lot more about markets and news and views on the other side. Stay tuned to NDTV Profit. And thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out on 3rd July at the NDTV Profit Business Leadership Awards. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works.
Where's the hook?
There's going to be celebrities and guaranteed eyeballs.
Where's the hook?
Think about this. Front page advertisements and hoardings.
Bro, where's the hook?
Cross-platform, digital first, virality.
Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where...
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey, who's standing at the Profit Market Pit. Sharad, good afternoon. An interesting day of trade. You know, the kind of enthusiasm that I'm seeing in terms of the consumption pack, very interesting. A lot of stock-specific action is what you're seeing as well. And you have banks which have now started increasing the FCNR deposit rate, which is also one of the positives that we were hoping for. What are you picking up so far in terms of markets?
Good afternoon, Hiral. Of course, consumption and banking is something which good buzz is happening in these segments. But remember, there is a little bit of sector churn as well. Looking at Nifty, we are near the day's high level and it's sustaining. It's not going bad. So that's a good technical support coming in from Nifty. Nifty Bank, we have already seen that up move much more better than Nifty. So some signs of exhaustion is coming in. So we'll talk about that as well. But let's look at the factors today on the day's trade. What's actually working and what's not. First and foremost, the strong technical momentum is there for the Nifty and it's comfortably at almost 140 points up in the day's trade. Nifty sustaining above that 23,400 levels. If it goes past that, a new range opens up between 23,600 to 23,900. So this is something which we'll be watching out for, at least in the closing session. Apart from this, the Nifty Bank, the up move is likely to get capped at these levels because we are seeing some signs of, the numbers coming down. Benchmark indices are outperforming SMIDs today if you compare that with the broader markets. So definitely a little bit of index management is also at play here. And buying is coming in the FMCG pack, as Hiral had mentioned, a good commentary coming from some listed players, and selling pressure coming for the gold financing companies and metals also. There has been a downtick in majority of the metal prices from their highs, and now that selling is intensifying. Rupee has shown a strong technical strength today in the day's trade. A little bit of yields also have cooled off, so that is giving a good strength to the markets. Crude levels again below that 92 mark, and that is where a little bit of more conviction is coming to the markets. The marginal decline in the May SIP data, nothing much to be scared about, but nevertheless this is the data we should look at. Asset classes are still in a tight range looking at the geopolitical developments, and if you are tracking macro, US May CPI data is there tonight, so of course the inflation risk, the rate cut trajectory or the rate trajectory in US will be something which we'll be watching out for. But net right now, good index management is at play, and Nifty showing a better technical momentum than Nifty Bank.
Absolutely, I mean, that's reversed, right, Sharad? All last couple of days, the momentum, the setup with regards to banks was something that everyone was watching out for. So interesting coming in there. But in terms of the watch list, RIL, you have Meta, which is partnership for an AI data center, and RIL, along with that, you have CleanMax Energy as well. Both of these counters are buzzing in trade. You have HFCL at a 87 PE versus a 14 times industry median. If you look at the stock, I mean, you've seen a major rally. What's in store? Inox India, the stock is up 21% in 5 days. AFCON, order win worth 5,000 odd crores, 50% of the market cap of the company as well. Black Box is up 33% in a month. Kaplan Point also buzzing and seeing some good trend. Kempro has also had strong volumes. FMCG companies are buzzing in trade. You have a bullish outlook coming in from the management and from the brokerages as well, and that's what has kept the sector afloat. I think one of the top gaining sectors in today's session. Hindalco has extended selling pressure, and as Sharad was pointing out, it's the metal pack which is down and about in trade. Ease My Trip also doing pretty well with the CCL products, which is seeing some buying momentum. You have a TD Power, which is down 11% in 5 days, so companies come into a correction mode. Where from here on is the question. Oil India, ONGC, you have Morgan Stanley preferences on both these counters. Aegis Vopak, Jefferies has upgraded the counter along with Aegis Logistics, where JP Morgan has maintained an overweight. PI Industries, yesterday we saw some strong momentum there, but now Citi has maintained a sell rating on the back of the same news, and that stock is under pressure. Me show another one. Jefferies has initiated a buy. So that's what the watch list is looking like. But Sharad, over to you to take the rapid fire with Kripali Prakash Kumar Nakar.
Thanks a lot, Hiral, for that. Good afternoon, Kripali. It's always a pleasure to have you, and we'll start our rapid fire segment. First, a stock in focus is Inox India. Your views on it? Earlier, of course, some positive corporate developments had come in 2 to 3 days ago, but technically, what's looking good here?
Hi, Sharad. So I believe the stock has just made a new all-time high. On Monday, it jumped around 7%. With heavy volumes, it touched around 1698, and in 1 week, it has gained around 17%. So while Sensex fell 0.5%, but stock has performed very well. The company make a cryogenic tanks for industrial gas, LNG and hydrogen. So first year 26 revenue was up around 1587 crore with a profit of around 258 crore. So business is excellent, but the stock is currently expensive as PE is trading around 60 times more. So existing investors should stay invested. If you new investors are there, then they should wait for corrections.
Right. And Kripali, a short technical answer coming in for Hindalco. Of course, selling pressure coming in the metal pack, but any important levels to look at? Any trade to be made?
Roughly around, for Hindalco, if you see, market cap is around 2.37 lakhs. So it is current revenue is 2.75 lakh crore. So profit is around 13,000 crores. So it in US because of the US Army novels recovering the market. So if you see around 1150 to 1200 is my target for this stock, around 6 to 12 months. Buy on dips is recommended.
Buy on dips. A CCL product stock has been doing really well. Good momentum coming in. Good time to book some profits in this counter.
Yes, definitely. And if a new buyer is there, then they have to buy with stop loss near 1100. Because the only risk here is that coffee bean prices can squeeze the margin in the future.
Right. And TD Power, the next stock in focus. Your views on this?
So I believe that existing investors should hold and book profit around 25 to 30% of the profit. No fresh buying at this price is expected because PE is around 80x. So I don't recommend buying at this level.
A brokerage downgrade also coming in for Oil India, and also some reversal happening in the crude prices, which is of course negative for this counter. Do you see this counter having more selling pressure going ahead?
Yes, definitely. If any new investor wants to enter, then that investor can enter around 460 to 490. You can accumulate wealth around 460 to 490. A sharp fall in crude price is expected.
Interesting initiating report for Meesho also. At least on a monthly chart, if you could just give us any positional targets, if any, right now at these levels.
So I believe that existing investors should hold it with the stop loss of 150. Conservative investors should wait for the company to turn profitable. As now it's been 6 months, Meesho is about to complete the IPO, and now there will be more selling pressure from the institutional investors and the promoters as well.
All right, so a little bit of absorption at play is there for Meesho as well. But that's the end of the rapid fire round, and over to you, Hiral. What are the stocks you are seeing in the Google trending segment?
Thank you so much for that. We had interesting names yesterday as well. Let's pull up what's trending in today's session, because whether there is a repetition coming in, because that gives you the actual trend. Only CMR Green Tech, and the obvious reasons as to why this one is trending on Google. CMR Green Tech is the one which is just listed today. In fact, the subscription details were also pretty strong, and an absolute premium listing is what they've seen. Sustainability is going to be the key, but because it's a recent listing, I think no reason to ask Kripali a question on this one. But thank you, Kripali, so much for joining in. It's always a pleasure to speak to you as well. But moving on, we have Sachin Jasuja also probably who's joining us from Centricity Wealth. Sachin, good afternoon, and I think you would be the right one to talk to about as well when it comes to CMR Green, listed today on the bourses. Subscription was very strong, listing also absolutely strong. If you have to talk about the business post-listing now, would you advise, any buy calls on this one?
Hi, good morning. Good morning to viewers. So see, CMR got listed today. It had got tremendous response from the markets also at the IPO level, in the subscription level, and even going forward, we have seen that the company in last 1 or 2 years, the company have turned around from losses to profitability, and they're going strong on the alloys business. And if that, so we have a very limited data. And very limited track record in terms of financial stability. So if 1 or 2 quarters again we see some kind of strength in the margins and the profit uptake, with the management has already expected that the revenues should be strong even in the coming financial year. I think the valuations are reasonable even at the current levels, and there is more to come. But yes, very limited data. So provided we see 1 or 2 more quarters and see how things pan out in terms of business and the margins. So I think then we can give the clear picture on that.
Okay, so that's with regards to where CMR goes. But moving on, Meta has actually expanding its footprint in the Indian markets. They partnered with Reliance, and this is a strategic partnership for AI-enabled data center. The stock, after seeing a strong surge, has actually cooled off and is at the day's lowest levels. The data center will be located in Gujarat's Jamnagar, and Reliance Industries will be developing a 168 megawatt data center as well. The project is expected to be delivered within 2 years, and they have an option to scale capacity as well going ahead. Reliance actually will be providing end-to-end services, which include design, construction, management of utilities, renewable power, network connectivity, and managed services. In fact, this will be the first built-to-suit data center capacity in India for Meta, and Meta will actually lease the capacity from this facility. Earlier as well, they formed a $100 million JV for enterprise AI solutions in India. So this is a good extension, a strategic extension coming in there. Apart from this, Meta has also partnered with CleanMax Energy and Fourth Partner Energy. If you pull up a CleanMax Energy on the screen as well, that stock is up 9.5%. And this will be where both of these companies will back the 1 gigawatt of renewable energy. CleanMax will build a 837 megawatt of new solar and wind project in Rajasthan as well as Karnataka. Whereas if you talk about Fourth Partner, they will construct a 88 megawatt of new solar and wind projects across 4 states. CleanMax seeing some smart gains there. Sachin, any view on this? I mean, this is one of the largest that is coming in there. A call, if you have to look at the data center side of the business for a Reliance Industries, and more than that, a clean energy solution, that is the one which is firing.
Yeah, so see, data center boom is there, and we know that at Indian side, we know that we can play a very major role on the infra side, right? So like, Reliance, Adani, or many large conglomerates, even like TCS have announced on the data center expansion plan. But yes, there, the revenue recognition, or you can say the profitability, will come later. First, you have to spend a lot. Like Reliance is spending a lot on the Geo AI, hiring a lot of engineers, doing a lot of great work on the green energy side also. But the profitability will be delayed. The Geo Telecom IPO, if it gets delayed, so I think that is an overhang on the stock. But yes, for the companies like Clean Max Energy, where the low base effect is already there, and with these kind of orders and with these kind of partnership with the larger giant IT companies, giant global companies, I think that gives you the clear picture that they are in the right direction. From that side, we see major uptick over there if things goes in the right direction.
Okay, so that's with regards to RIL and Clean Max Energy. But moving on, Afcon Infra, 5,300 crore LOA from Vadhavan Port, and the project is a contract for breakwater project as well. 5.5% up move coming in there. Sachin, the market cap of the company is close to around 10,000 odd crores, and order worth 5,300 odd crores. How are you looking at the company when it comes to execution capabilities as well? Size of the company, size of the project, and then it comes to deliveries.
So I think size of the order book will not matter much. See, execution is very key play thing, when we consider EPC business. And even last year, their order book was quite healthy, but we have seen they have missed in terms of execution in FY26. And Shapur Palanji Group has already got a pledge. Overhang is also there in the company. I think it is more than 50%. So even if there is a big order win, execution will remain the key thing, how it pans out. And there is a finite tenure of these order books. And after that, you have to look forward to, order books. So looking at only market cap and looking at the order book, I think that will not only solve this problem. I think execution is something, and maintaining solid margins will be the key thing for evaluating such businesses.
Well, that's an interesting take coming in from Sachin. But the sector of the day, you can say, is the FMCG pack. The consumption names also doing well. Management commentary also coming in, and broking houses actually coming out with that analyst meet. Stocks such as Colgate and HUL, all of them are there. But why are they buzzing in trade? What are the details? They joined in by Mahima. For that, Mahima, your sector of the day today?
Yeah, absolutely. I think it's the key commentary that's coming in, right? On the weekend, we had Nestle annual report coming in, and I think the key takeaways are that, all of these companies are still kind of focusing on premiumization, and with a calibrated growth between both volume as well as pricing. Now, in terms of Colgate Palmolive, they've said that premiumization playbook remains intact. EBITDA margins, of course, will be capped because of higher, ad spends on brands. And overall, FY27 outlook will be balanced between volume and pricing. Oral care category should relatively be resilient and should widely be driven by premiumization in brands like Total, Whitening, Perioguard, etc. In terms of urban, that's the overall urban demand is improving while rural remains stable. But there is, of course, risk to inflation. For HUL, I think the management reiterated the stable demand outlook and supported by calibrated price actions. They've also said that overall segment-wise liquid within home care will be doing well for them. Premiumization in the beauty and wear care will be their focus, and foods portfolio scaling will also be a part of the focus. Margins, they've largely maintained their guided range of 22.5 to 23.5%, and overall, premiumization-led gross margin gains is expected to be reinvested in brand building. So I think these are the key takeaways from the management commentary that's coming in from FMCG companies.
Thanks a lot, Varsha, for that. And of course, the markets are rewarding the consumption also. It's a defensive also at play. And remember, this is domestic focus as well. Sachin, wanted to get your views on these consumption names. Mahima pointed out HUL also, Colgate also. Anything which is looking good here, or do you think the valuations are still on the higher side?
The valuations have moderated some bit, but yes, still, whether you talk about Nestle, Colgate, HUL, so slightly on the stress side, looking at the growth which these companies have seen in the last 3-4 years. But when you look at only the growth number for these, for such companies, I think there is one outlier, which is Tata Consumer, whether it is tea business, coffee business, or even the breakfast and the kind of pulses through that quick commerce business, they have taken it off. So from that angle, Tata Consumer, Onasa, in some way, it was a kind of a good pullback from the lows in terms of volumes and on the margins. So there are few players which have, done well looking at last financial year. But yes, HUL, Nestle, huge respect for these kind of companies. Even at a larger base, they have been maintaining their, even it's a meager growth, but they have been maintaining that kind of growth. But Tata Consumer, Onasa have been growing at a faster rate as compared to the old traditional bigger FMCG giants.
Right. Apart from the FMCG, two companies, of course, from the same group. One is your Aegis Logistics, other is Aegis Vopak. Jefferies has turned bullish on both of these counters. For Jefferies, in Aegis Logistics, they are increasing the EPS estimates, and that is going by almost 14 to 18% in next 3 years. And Aegis Vopak, it's been upgraded to buy from hold as well. A bullishness coming in from both these counters, and both of them doing well. If you could just get these on the charts as well. Sachin, either of these two, which one looks much better fundamentally? Aegis Vopak Terminal or Aegis Logistics?
Both look good, but yes, I think we can discuss on this. See, LPG, LNG, these segments are growing well, right? And specifically for Aegis Logistics, who is in the partnership for, with the Netherlands company for the Vopak terminal. So that company, because of the ammonia thing, the new product which will be added and maybe contributing by more than 50% growth in coming years. So as the management expect, that they can actually grow by 60-70% also for next 2 to 3 years. So yes, growth is more with the Aegis Vopak, but yes, the valuations are also stretched as compared to Aegis Logistics. So I think if you look at only on the growth prospect, I think both the companies have reasonable kind of valuations, even though these have run up. But looking at the creating infrastructure for the energy transition theme of India, I think these companies can play a very vital role in coming years.
Okay, so that's with regards to two interesting names. Now, PI Industries, that's very interesting because yesterday that stock saw some smart moves, and this is because Kumiya Chemicals, a key customer, revised their Feb to April sales forecast. And overall, the only question over here is the revision is absolutely nothing in terms of the full year. Now, the stock did see some smart moves. Now, we have a Citi which has come and said that they will maintain a sell call and they have a target price of 2,600. So they are expecting to see pressure, and that's the reason why probably the 2% profit booking that's coming in here. Let me take this question with you, Sachin. Sachin, the outlook that was upgraded for that particular period, though nothing has been done in terms of full year sales guidance. Everyone took it positively yesterday. The stock saw some 6-7% gains. Today, Citi has come out and said that this is not a major positive yet because your full year guidance still remains the same. How are you looking at this?
So we don't actively track these companies for either, so can't comment on Citi thing.
Sure. Okay, and what about a Max Financial Services? You have a HSBC which has initiated a buy and they have a target price of 2,120. Now, hospital companies have been in the flavor of the season right now. They are transforming for tomorrow. There is growth on all fronts is what they've said. Axis Max Life Insurance is the key operating subsidiary of Max Financial and one of the fastest growing life insurance companies in India. They think its focus on diversifying distribution and products will drive sustainable, predictable growth with stable margins. Sustained operating performance and progress on potential mergers are the key catalyst. Your view on a Max Financial?
So overall, the franchise is super good in terms of growth we have seen in last 4-5 years, whether it is Max Health. Again, the highest number of bed growth in next 4-5 years. It is an outlier, even on the finance business with the insurance. So I think the whole pack is growing very well, and the industry tailwinds are also very, very strong. And when you look at the longevity of the business, the revenue stickiness for multiple years going forward. So whether you value HDFC Life or Max Financials or even on the hospital business, so you see that kind of stickiness, and the valuations are reasonable now. So from that angle, we like the whole pack.
Okay. So that's with regards to where, your Max Financial goes. But auto companies have been in focus as well. Now, a structural shift is what we're seeing in the month of May. Rural demand improving while CNG and EV share and two-wheeler electrification has accelerated. Puneet is here with the key analysis. Puneet, over to you.
Well, thank you for that. Well, there are some structural changes visible in the retail sales data for the month of May, and we picked 3 of them that seem to be one which are being pointing out to what could be another interesting year for the companies as well. Now, rural car sales outpacing the urban ones in the month of May. CNG and EV car sales are actually showing a much higher growth and has seen a change essentially in terms of the shift of all the total 100 cars sold in the country, much higher share for both these segments. And the two-wheeler EV sales have actually grown by almost 300 basis points to 9.2% versus 6.1% earlier. So when you look at this first data point, now when you see this is the growth actually on a YY basis. For rural, it's a 30% growth versus an urban growth of 18%. And this points to a structural change that we've seen in the last 2 months, and it's continuing as well post the GST rate cuts achieved in September 2025. What could be leading to those are that the small car revival seems to be playing out, and that's reflective in the rural numbers. But also, dealers are also pointing out to a similar revival, coexisting with a sustained SUV mix as well. When you also look at Maruti Suzuki, their share has improved meaningfully to almost 41% compared to just 37.8% on a YY basis. And this comparison for the month of May so shows you that trend playing out for the players as well. When you look at the CNG in the two-wheeler space, though, it's another very interesting trend that's pointing out, and we'll get to that. But before that, the car maker specifically, 23% is what the total share is for the CNG as well as the LPG mix. This was roughly around 19% in May 2025. And you also see a big shift in EVs, which has now jumped to 6.6% versus 4.5% in the same time last year. So you're now almost seeing 30% or 3 out of 10 cars within the CNG and the EV space as well. When you look at what this means, fuel price revision has actually helped the companies at this point of time with the growth as well. And that apart from that, the Tata Motors has gained market share also. Finally, in the two-wheeler space, we spoke about the electrification journey as well. And you see a meaningful shift from roughly around 93% for petrol. The two-wheeler sales have dropped to 90%, and the similar jump is visible in EVs at this point of time. This means that the structural growth trending is playing out for the EVs, and only TVS and Ather have actually gained market share on a YY basis. Finally, what you have to watch out for, price hikes will have an impact on demand, so you could see a higher shift towards CNG and EVs, and the momentum could continue with new as well as entry-level launches as well for both the EV space. And the growth within the hybrids, that's a global trend, is yet to play out in India right now.
A lot, Puneet, for that. And of course, the EV has picked up, CNG segment has picked up. Sachin, wanted to get your views, especially on the EV players, especially Ather and Ola Electric. Out of these two, if you had to compare them, which would be better option right now, looking at the fundamentals going ahead? And remember, Ola Electric for last 2 to 3 odd months has been seeing an increase in their registrations as well.
Yes, you very rightly said, Sharad. But see, when we look at very, very long-term picture from the automobile segment, we know that any good company who does superb execution will come up with a superb technology, can actually become a 5 lakh crore company also. But when you look at from that perspective, you look at actually, Ather doing that kind of work in next 4-5 years, I think that is very well placed to play that game. We know that the companies like Bajaj Auto, Hero Moto, or TVS kind of companies are nearing, or they have closed 1 lakh crore kind of mark. So Ather is at 34,000 crore mark. Even though agreed that they are at around maybe 3,000-4,000 crore kind of sales, but they are growing very, very fast. Unit economics are getting in a better shape for Ather as compared to Ola.
Right,
so we'll
Sachin. Right, Sachin, we are running out of time. Thanks a lot, for coming at NDTV Profit and giving valuable information on the stocks. It's always a pleasure to have you. But, folks, that's all for the show for Trending Stocks from me, Hiral, and the entire team which have put together this wonderful show. Stay tuned to NDTV Profit.
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K, the works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings.
Bro, where's the...
Hi, thanks so much for joining in. One of the big talking points today has been the data released by the mutual fund industry for the month of May. And as is usually the case, there's a lot of data to look through, but a few takeaways have stood out to me. And the first of these is actually the alarming bit. So let me get the bad news out of the way first. The inflows into active equity mutual fund schemes have actually fallen very dramatically, as much as 40% on a month-on-month basis. They came in at 22,908 crore rupees compared with 38,440 crore rupees in the previous month. Now, it's important to note, and I'll get into the nitty-gritties of that, but before we do, a few other takeaways for you. Other ETFs have actually seen an outflow of 620 crore rupees compared with an inflow of over 10,700 crore rupees in the previous month. Index funds have seen an inflow of just about 940 crore rupees. That's pretty low. Now, beyond this, the flexi cap category, which is the diversified equity category, has been getting inflows of over 10,000 crore or very close to that mark on an ongoing basis in the recent past. And that has fallen to about 5,000 crore or thereabouts. It's halved. You've still seen inflows of over 4,000 crore each into mid cap as well as small cap, which is actually a little heartening. You see those numbers on your screen. Now, what is actually also important to note is that gold and silver inflows have dried up almost completely. In fact, gold ETFs have seen an outflow of 725 crore rupees, and that compares with an inflow of 3,000 crore rupees. And remember, in January of 2026, you had inflows into gold ETFs of over 24,000 crore rupees. And finally, and this is the heartening bit, I saved the best news for last, and that is the SIP book continues to remain robust despite the kind of drop that you've seen in active equity inflows. It stood at 30,954 crore rupees in the month of May, compared with 31,115 crore rupees in the month of April. To talk about this and to talk about investor behavior as they see it, I'm joined today by Ashish Somaya, the Chief Executive Officer of White Oak Capital EMC, as well as Kalpen Parekh, who will join us in just a bit, Managing Director and Chief Executive Officer of DSP Mutual Fund. Ashish, I'll come to you on your initial reading on this active equity component, because as much as you take heart from several of the data points that I've talked about, particularly that SIP number looking robust, you must address the issue that there has been a substantial drop in active equity.
Yes, definitely, Alex. So, one can clearly see, like you said, 38,000 crore kind of net flow in equity funds has declined to about 22 or 23,000 crore kind of net flow. And clearly that is, maybe in response to the fact that now we are over 2 years where people are seeing, more like a flatlining of the market. In fact, from an all-time high, market is 10% lower. And, while it is par for course when one is investing in equity, but all said and done, there is a reason why, behavior is as important as understanding of maths and finance. So people are obviously more excited to invest when the past return looks good. And when there is a prolonged period like a couple of years, when the past return starts to get dragged down, is when people feel a little bit disheartened or demotivated. Apart from, when we are talking May over April, yes, we can see that there is a decline. But if I take slightly longer time frames, the decline is still there. But if I, since you mentioned a lot about different categories of funds, if I actually go back and look at a slightly longish comparison over the last year or two, what is worth noticing is that the biggest decline, actually almost the entire decline, is attributable to sector funds and thematic funds. See, at different points in time, sector funds, small cap funds, mid cap funds, flexi cap, the allocation or inflow outflow in each of these categories, it varies. That's fine. Even hybrid is, by the way, steady and stable. The biggest change, 2024 versus 2026, the biggest change I can see is actually is in sector funds and thematic funds. A couple of years back, almost 18,000 crore of net flow used to come in sector and thematic funds. And in May, you must have noticed it's less than 700 crores.
Yeah, that's an important point that you raise. In fact, people use this as tactical allocations. Kalpen Parekh joining me as well. I introduced him earlier, but Kalpen, I do know that you don't look at these numbers on a month-on-month basis. You may not give too much attention to it, but I'm still curious about what you think about the ongoing SIP number. Because when I looked at the active equity flows for the month of May, I must confess that I had butterflies in my stomach because I wondered, had the SIP number cracked at all? And the fact that it has not is something that I personally take heart from. What do you make of that?
Alex, SIP numbers are very lazy numbers. They take a lot of time to build, and they'll also take a lot of time to unwind, because they are like fragmented across crores of investors. So it doesn't change in a hurry, but the lump sum numbers change very fast. So, this drop in the month of May versus April is primarily where some redemptions from the stock of assets have happened, and larger ticket size redemptions have happened. And typically, larger ticket sizes are more connected to what's happening day to day. They enter early or they get out early. Could be combination of both. But trust me, 28 years of being an investor and also being in the same industry. I track these data points just to know the pattern of how my business is doing versus competition. But as an investor, personally, and you might not call me again, I think this is noise. Monthly data for most investors who are your viewers, my father is a viewer, he would be probably watching me on TV. He has to take care of his money 10 years out. Or my son is an investor. He is right now working or studying, so he won't watch me. He has to invest for 30 years. What happened in May 1998 when I started my career is irrelevant to the size of my portfolio today. And that is why I feel this is noisy data. Of course, this is important for experts or fund managers or analysts to just try and get a sense of how is the trend moving. And what Ashish said is spot on. We started our career in the same company together. What he said today is what we have been saying since 1998-99, that returns create the behavior of whether investors want to invest or not invest. We are generally always pro-cyclical. We invest when returns are high and we start getting out when returns are low. Whereas the reality is one should invest the opposite. So, two things. Most investors first make a mistake of investing at highs. So we all, in 2024, so much of money came and chased equity markets, and nobody spoke of conservative investing, multi-asset investing, hybrid investing. Few of us did. The industry made a lot of effort to, focus on SIPs and asset allocation strategies, and one should also look at those categories. So while you are showing all categories here, you should also look at multi-asset category, and that category has been growing over time, which is a good data point. And the second point is, generally when returns fall, flows will fall. There is no rocket science in this. Universally, it is nothing about India. It is a human race problem. And it is a problem that even experts come and opine positively on what is gone up. So you should look back at all interviews and everyone who gave views on silver and gold in January when we saw the market. Is something that investors should start realizing, that anybody who talks of an asset class when it gives abnormal returns, you should switch off from that and focus only on your goals and your cash flows. My cash flow is monthly. I have no choice.
Sure. I want to actually talk about that in some detail. So, Kalpen, allow me to come back. And you're completely wrong when you say that I may not call you again. This is the reason why I did call you. So I'm glad that you made the point that you did. But Ashish, I do want to, before we get into some of the longer term conversations, I do want to drill a little bit down into some of the numbers that you spoke about, right? What stands out to me, and this is something that I was wondering as well when I looked at the first flush of the numbers, and you pay more attention to the gross inflows and the redemption value, right? Rather than the net number. So what has that told you? Because I look at 57,000 crore rupees of gross inflows into active equity in the month gone by. And that's a little worrisome because it's far off the peak, but it's far off the average over the last 1 year as well. What does that tell you?
Yes, Alex. So, when we spoke about the net flow number falling from 38,000 to 22,000, needless to say, like you rightly pointed out, the gross flow number has fallen from some 70 all the way down to 57,000. 70,000 gross flow has become 57,000, and the redemption is a tad higher. Correct. So I think the key message out here is the point that, last whole year, maybe people were investing average 65,000-70,000 per month. But in the month of May, they have decided to invest 57,000, which means, which talks to the point which I mentioned, that when the past return looks less attractive, then, people are less motivated to put in money. So if you look at the net flow, 38 becoming 22,900, what you see on the screen, you might not get the real picture. The real picture is that it's not like people are redeeming a whole lot. The point is that people are making less allocation towards equity. And that is where also the point comes that, in the last couple of years, the big decline is in sector and thematic funds, and the parts of the market which have held relatively steady. If you look at diversified categories, Even if you look at small cap, mid cap, large cap, multi cap, flexi cap, all the diversified categories, they've been relatively stable. All the hybrid categories, except for arbitrage, they also have been relatively stable. While there is a decline in May there also, but if I take a longish sweeping view, like couple of years, that also is stable. Again, I'm repeating, the big decline in numbers over the last couple of years is sector and thematic funds. And that's what happens, right? I mean, when 2024 market was booming, the narrative is very different. And now, in 2024, everybody wants to do sector fund, thematic fund. In 2025, everybody wants to do gold and silver. And today, everybody wants to invest abroad. So that is how things move, unfortunately.
Yeah, it is. In fact, which is why a lot of people say the contra indicators are something that you should watch out for, and moving against the crowd is not often the easiest thing to do. But speaking of that, and Kalpesh, now I want your view, because on our very platform, there have been views that have been described in the very recent past about SIPs being the root cause of several problems. At least this is a view that has been it's been described, and this is a platform for all views. So I'm going to invite both of you gentlemen to talk about what you think about this as well. The view that has been suggested by Shankar Sharma is that the SIP is resulting in an avenue for foreign investors to exit at a very decent price. It is leading to, in his words, a hemorrhaging of your forex flows and significant outflows over a period of time. So he's actually called for a stoppage of SIPs. Kalpesh, question to you: is the SIP such a unique proposition? Is there nothing in the world that describes the same kind of monthly inflow? Because ultimately, dollar cost averaging existed in 1955. So how is this dramatically different?
You have the answer to your question, and anything of recent past should not be extrapolated in the future. I think Shankar's point broadly is, on one hand, there is merit that if there is a lot of buying from one constituent, there is selling from some other constituent. But let me again take it back to why are we discussing this? The question is, I am a retail investor, and I take myself as an investor who earns his salary every month. On the 20th of every month, I do my SIP, and I've been doing it for 28 years, and I'm a very happy investor. There are periods of 3-4 years where everything will disappoint because nothing goes up permanently, and particularly when we are retail investors, we don't keep jumping our portfolios frequently. For the last 3 years, I am proud to say that most of our flows, 65% of our flows, have not come into equity or gold funds, but they've come in hybrid funds or multi-asset funds. And our investors are very happy with that. So I think the learning for all of us is that, if risk in a certain category has risen in any point in time, we guide investors that, okay, if you are a long-term investor, allocate to this category or that category. That is all we need to do. And investors need to also, take care of their greed accordingly. Actually, the best time for SIPs starts when we feel that SIPs have stopped working. So who has said that every year SIP will make money? It is not a fixed deposit. It is not meant to deliver fixed deposit returns. We have data to show over 30 years, since 1996 till 2026, 74% of times a rolling 5-year SIP just in Nifty 50 would have earned more than 10% return. And most likely this will be tax-free, because this is for retail investors whose tax slabs are very low. 74% times it has earned more than 10. So enough percent times it would have earned 12, 14, 15, 18 also. So why should I complain if on a rolling 5, and if someone is coming for SIPs for 1 or 2 years, that's not the right category. SIPs in an equity fund should have minimum 10-year horizon. Now, if I extend this to 10 years, the number will improve. We've done this analysis for almost 25, 30 countries. In almost all countries where markets are volatile or any asset class which is volatile, SIPs work if you allow them to work by purchasing more units when the NAV is lower. SIPs obviously will also purchase units at higher NAV and peak NAV also. But left to ourselves, most investors end up only buying in the peak of the cycle. At least SIPs are averaging it out. So SIPs are not like the holy grail. But what option do you and I have if we are going to earn our inflows every month? If we earn every month in a market of high risk, do a SIP in a hybrid fund. In a market of low risk, do a SIP in an equity fund. It is as simple as that. We should not overcomplicate this. I think it's a brilliant product. It generally works 95% of times and for 95% of investors.
95% of time. So the point has been made in the past that getting average returns is not the easiest thing to do. But I would like to invite Ashish to weigh in on this whole debate on the SIP and whether this is the root cause of a lot of problems as things stand right now.
I think it's a little unfortunate that we are drawing that conclusion. I don't think it was programmed or predicted or it was managed or it was deliberately done that way. So I think after something happens, it probably is a misattribution, because I'll tell you an example. In 2008, when the global financial crisis happened, FI sold $15 billion. Nobody asked us whether you'll be able to absorb the supply or not, but they did sell $15 billion and we were down 55%. So are we saying that if we didn't, I mean, at that time we were not able to absorb the supply, but they still sold $15 billion. And that time, by the way, $15 billion was 1.5% of our market cap. Okay. So they sold 1.5% of our market cap without mutual fund being a big player. And we saw what happened. So now they have sold, let's say this year they have sold $25 billion. I don't think it is 1.5% of our market cap. It's a smaller percentage, and the market didn't decline. And yes, it so happens that on the other hand, if somebody is selling, there is somebody buying. And I can tell you in 6 to 12 months, there will be a day when FIs will be buying and we will be selling. That's how the market works, because there is that many number of people. Second point is that I think that we should look at also the other perspective. 10 years back, I know for a fact, I have been also around, like Kalpen said. 10 years back, do you know, Alex, what was the biggest criticism? There were two big criticisms 10 years back. FIs own 22 or 23% of our market. And what we used to hear is that Indians will always remain poor. They don't own enough of India's growth. Indians are just customers and employees of these big banks and these big companies. And when these big companies have great results, the bubbly is flowing in Singapore and New York, right? And 10 years later, the criticism is that why are Indians owning so much of equity? So I mean, unfair criticism. And the second point, 10 years back, there was also a criticism that why will foreigners invest here? 10 billion selling and you're down 50%. There is no liquidity. There is no depth in this market. It is not fit for institutions to be investing here. There is no free float. There is no local market. So now the criticism has unfortunately become the reverse. I don't know whether it is criticism or compliment. Okay, so I think, it's a passing, macro headwinds. By the way, what we are witnessing now, rupee depreciation, FII selling, geopolitical crisis, high energy prices. In 25 years, we've seen it 5 times.
Sure.
From 1998 to 2001, in 2008, in 2013, 2018 to 2020, yet again in 2022, and here we are in 2026. Each of these crises today feels like a missed opportunity. Only today's crisis feels like a threat. So I think we've been through all of this. I just feel that it's a passing headwind as far as macros are concerned. Let's meet 6 months down the line, things will be very different.
No, I'll be speaking to you much more often, but Kalpen, I do want to get your opinion, because a few months back, correct me if I'm wrong, as a fund house, you changed the view to say this is now the time to buy domestic equity. And there's also a statement that you've made, or rather has been made in Netra, about the real effective exchange rate and the fact that this is at a value that would suggest don't bet against domestic assets right now. This is at a time when a lot of people are looking at equity markets around the world and saying, hey, what has India done over the last couple of years? To your point where you're saying that now is the best time to accumulate. Can you give us a sense of what your fund house is believing right now with regard to Indian equity, and what kind of timelines are appropriate for an Indian investor that is looking to make long-term results?
Yes, we opine very frequently through Netra every 5th of the month. And one disclaimer, the team, Sahil and team work with the best of intent to objectively, let data speak to form a view versus forming a view and then creating the data. And broadly, 2/3 of the time, our views go wrong. 1/3 of the time, they don't work, or we are either early or we are wrong. Even the last Netra doesn't say that, jump in all in. It just says that start accumulating because we are coming closer to fair value. every market has an intrinsic value or a fair value. And there are different, templates through which you assess that. There is some bit of art, there's some bit of maths in that. But broadly, what we feel is that some components of our market have given, zero returns almost for 5-6 years, have seen 20-30% correction from their peaks. And these are solid businesses, good businesses, having headwinds right now. So there is an opportunity to start accumulating that. Equally, there are some components in our market where growth rates are moderate, but valuations still remain high. For example, we have said small and mid-cap fund NAVs are almost at all-time high again. So while all of us are struggling that there is market correction, people are anxious, nervous. But when I look at the small cap and mid-cap funds, the fund managers have done a reasonable job to not be in stocks which have corrected 30-40% because their NAVs are closer to all-time highs. So there are pockets where there are opportunities, there are pockets where there are still risks. We still believe this is not a time to be very excited. This is not a time to be very scared. We have to be in the middle, and that is how it always should be. I, as an individual, and we as a fund house have never had a very clear binary points in the market. That we can give you only at extreme points. Like 2 years back, in February 2024, we highlighted that our margins are at all-time high and revenue growth has started to slow down and valuations are at almost 2 standard deviation. So this is a setup of risk. Now, we didn't know that this will mean tomorrow onwards markets will correct. It took 6-7 months for markets to keep rising and then start to slow down. So our view is we should be, moderate in our assessment. We should be invested in hybrid funds still more. And if our portfolio has to be built for very long term, then equity funds are, a better point to start today. We are at a much better point than 1 year back or 2 years back. If we were all bullish 2 years back, we should be more bullish today. We still will have headwinds. We may still have a period of 1 year of, moderate returns or returns that we are not happy about. But it's never possible to forecast in advance. Remember 1 year back in March, almost so many people said that, stop your SIPs. And since that day till today, the SIP investor has been a better investor because he averaged out all through the low. So I think personal finance is more personal and less finance. When markets are correcting, the risk is coming down, not going up. And when markets are rising sharply, the risk is rising, but we always think of it the opposite. So our house view is that, invest through SIP for a 5 to 10 year period. If you're doing equity investing, it has to be long term. It cannot be short term. If you do not understand volatility and cannot sleep well with volatility, you have an amazing range of hybrid funds across 45 mutual funds. You can pick and choose. You have a choice. Nobody is telling you that invest only. I think investors need to also start listening right advice and then building the portfolio.
Okay. So good points. Ashish, just closing comments. We're running out of time, but I'm still going to give you the opportunity to describe what the White Oak Capital call is right now when they look at Indian equities and global.
No, I think I'm also in the camp that, there are all the contraindicators in place when the narrative, you have to think in terms of the pendulum, which Howard Marks very ably describes as the market cycle. I think we are on a left swing. The beauty about any pendulum is that if it swings further than what you thought, you should keep patience because it will swing that much more on the right extreme also. So I think we are getting to a place where people should seriously start investing. At least if they can't invest, they should just continue the SIPs and do what they're doing because that's how they will benefit. And the second, Alex, one thing I'll tell you is that in 2024, if I told you that instead of a clean majority, we'll have a coalition government, Mr. Trump will impose tariffs, there will be a war between India and Pakistan, there will be Iran and Israel, there will be billions of FIs selling, there will be a war in West Asia, oil will cross $100. If I told you all of this, a couple of years back, you would be sitting in cash. But guess what? Our mid-cap fund NAV is positive from the market high in September 24. The mid-cap NAV is positive. The multi-cap NAV is positive.
Yeah.
Last I checked, the flexi-cap fund was barely 2-3% down.
Yeah.
And all the hybrid funds and multi-assets have given positive returns. So I think that the kind of mood and environment that we are discussing versus what is really happening in the numbers with mutual fund investors, yes, direct equity investors may have had a hard time. Because 2 years back, what we were told is that a 25-year-old kid can buy a stock and double money in 6 months. What are you guys sitting with your diversified portfolios and, pathetic returns? Now, 2 years down the line, the criticism is very different. But I think we've done well protecting investors' wealth, amidst really tough macro environment.
It is indeed. Okay, gentlemen, on that note, I'd like to thank both of you for taking the time. Pleasure speaking with you as always, and look forward to speaking to you soon.
Thank you.
All right, well, let us know what you think. This platform is meant to have views that are as varied as you can imagine. And we've got one view yesterday, we've got a different set today. Let us know what you think. And in the meanwhile, stay tuned, lots more coming up in just a bit. This is NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Welcome. You're watching Small Cap Buzzers here at NDTV Profit. I'm Mahima Bachajani and with me is Varsha Chandani, and this is a show that talks about a lot of small cap names. And let's take a look at what we are going to discuss on the show first today. The first one is going to be Sejal Glass. We're going to speak to the management. Now the company is entering into the railway space. Right now the revenue mix from new products could go to 7% as per the target by the management, and up to 20% by FY28. With regards to where the other counter is concerned, that is Hinduja Global. Let's try to pull that up. Overall, I think this counter has been in focus because, Yogi Adityanath has flagged off Project Ganga. And on the back of that, this follows a signing MOU with the company in March 2026. And this project is for over 20 lakhs home. It will connect over 20 lakh home. And that is why we're seeing a strong uptick in volumes for this particular counter, almost 23 times its 30-day average. The next one that we're going to talk about is Genesis International. Now here, overall, the stock is up almost 41% in the last 1 month. It's up, almost 3 out of 5 trading sessions, and that's the up move that we've seen. Strong volumes also coming in. So that is one that we're going to talk about. The other one is Kothari Industrial Corporation. Now this is an interesting one because last 3 sessions it did see an uptick in the counter. Today it corrected significantly, but again has recovered quite significantly for this one. So it will be an interesting thing to watch out for as to what the company does and what are the stock moves and volume moves actually telling us about Kothari. So now this is all that we have on the show for today and what we're going to talk about. But let's also take a quick look as to how the markets are doing at the SAR. Let's try to pull up the Nifty 50. There you go. It's up at around 0.6 odd %. Almost at its day's high point, a 140 points of an uptick is what we are seeing, but it's just a 200 odd points, range of trade is what we are seeing. Let's try to pull up the Bank Nifty as well. The Bank Nifty is trading around 0.4% higher, almost in line with the Nifty 50 today. Let's try to pull up the heat map as well for the Nifty 50. You have a lot of your FMCG names doing very well. HUL, Nestle, Tata Consumer, ITC, etc. Topping those charts. Now, of course, we're seeing gains coming in for HDFC, Kotak Mahindra, Axis Bank as well after, seeing that FCNR deposit rate hike news coming in. But we have Hindalco that continues to be under pressure, down by about 2.7% Infosys, Tata Steel, Coal India, ONGC are some of the names that continue to be under pressure, Eternal also being one of them. Let's try to pull up the advanced decline ratio and sectoral heat map then to see as to how things are looking like. You have more declines right now than advances, and that gap is unfortunately widening by the hour, and that reflects the pressure in the mid cap 150 and the small cap 250. Let's quickly try to pull that up. The mid cap 150 now. The mid cap 150 and the small cap 250 if we can, that's the sectoral heat map of course, down 0.4% at almost its day's low point, and the small cap 250 also down by about 0.4%, almost at its day's low point. But Varsha, what are some specific names that are seeing action in trade today?
Talk about first is Northeastern Caring Corporation. Let's see what that stock is doing. That stock is up almost 15% in trade though. Hinduja Global Solution, as Mahima was pointing out, is also buzzing in trade. You have Unichem Lab, is buzzing on the back of volume, strong volumes there. The volumes are trading at 25 times of its 30-day average. The stock is up almost 16% in trade. You have Electrotherm also buzzing. Then Easy Trip is also buzzing again on the back of volumes. Volumes are trading at 6 times of its 30-day average. There you go. Stock is up almost 13% in trade. Quality Pharma, well, a huge run-up we have seen in this counter. Overall healthcare sector, if you see, we've seen a strong momentum when it comes to the healthcare stocks. Amanta Healthcare is also buzzing. Over here, this company can actually see a huge margin uptick in the next maybe in 1 to 2 years. Keep a watch on this counter as well. On the loser side, you have Panacea Biotech, of course. Profit booking on the cards. You have Ismo. Analon Health is also, sulking in trade, but good growth expected there as well. So overall, these are, the small cap stocks which are buzzing. But one stock, which is in focus is of course Sajal Glass. We have not spoken to the management since Q4. Company met the guidance, then they are entering into new verticals as well, considering the railways. But to speak more about this and what's the outlook going ahead, we are here to tell us more about that. We are here joined by Mr. Amrut S. Gara, who's founder and promoter at Sajal Glass. Mr. Gara, welcome at NDTV Profit. Pleasure to have you.
Thank you.
Last time when we spoke, and after I did go through to your con call also, you are seeing some kind of slowdown when it comes to UAE. Now, considering that, because of the slow demand when it comes to real estate, now considering that, how is Q1 looking like? What is the consolidated revenue expected in Q1 FY27?
See, particularly looking to the UAE's geopolitical situations, though there is a challenges, but for the Q1 of 27, we are stable, and mostly we will, be at the same at what last Q4. So there will be no deep down on the turnover, and also we will maintain the EBITDA level.
So you are saying that you are expecting around 115 crores of odd revenue in Q1 FY27 with 16% of EBITDA margin. Am I right?
I think we will little bit of 2 to 3% there will be jump from last quarter, because the domestic will have a little bit more good performance in the domestic. We are ramping up the capacity of our last two acquisitions from the Taloja plant and the Erode plant. So UAE we will maintain the same. There will be little bit of growth in India. So overall, I think we will touch around 120 or 122.
Okay. Mr. Gada, hi. Mahima joining this side. Let's talk about railways, because that is exciting. If I'm not wrong, you've said that you want to, reach that 20% mark by FY28 in terms of total revenue contribution. Just want to understand, help us identify as to what are the kind of opportunities that you have in terms of, Vande Bharat coaches for the next 2 to 3 years. And when you say that you want to scale this to 15 to 20% mark, what will be the levers scaling it, and do you already have orders in place? If you can help us give some perspective on that, and what is the order growth going to look like going forward?
Yeah, Mahima, we have already started, supplying to the railway, and also we have got the Vande Bharat order. But current finance year, I think the railway segment will contribute around 2 to 3%, and going forward, it will be 10% on the total contribution size. And we are more, participating in the railway tenders, and particularly also we are working on enhancing the little bit of the quality parameter for the luxury trains and all. So majorly this year there will be 3% contribution from the railway, and other value added product 5% contributions. And next year, more or less we will cross the 10% of our contribution from this kind of special segment.
Okay, got it. And then, just want to understand then how will your margins fare by the end of FY28? Do you think the margins are going to be better as compared to where they stand today? The blended margins, considering that your contribution from railways can go as high as 20% by FY28.
See, overall, for example, the situations remains same, and little bit of improvement on the geopolitical. We are going to have a 25% growth on the compared to last year. And secondly, around 1.5% to 2% growth on the EBITDA level. So more or less, we will cross 500 crores at a consolidated level, and EBITDA we will touch around 18% or 19% this current finance year.
Okay, so 500 crores of revenue and 17 to 18%, 18 to 19% of EBITDA margin. So,
moderate situations, considering that geopolitical situation will not worst, and that will improve. And the situations are coming in control within 1 or 2 months, then maybe we will overcome that 25% also.
Okay, so minimum 25%, maximum 40% is what you had guided last time.
Because we are driven by more also the India growth story, Viksit Bharat, particularly now Viksit Mumbai is a new Bombay is also growing. So everywhere the real estate boom, particularly in the luxury residential segment, high commercial segment, then the hospitality, hotels, hospitals. So that's also driving us, and also little bit of OEM where the industrial supply for the glass that also driving us. So we are confident that India story will drive our product.
Right. So 500 crores of minimum revenue that you are expecting in FY27, I got that point, sir. But considering the tax and the depreciation, I also wanted to highlight on the PAT margin, because for FY26, your PAT margins, you did a PAT of around 29 crores, which was in line the guidance that you had given. What about FY27, sir?
See, we will, I think, maintain the 1 or 2% higher margin PAT level because of the increasing EBITDA. So last year our margin was 29, plus with the forex income it was a 36 crore. And there will be a little bit of interest margin also. We are going to save the interest compared to last year. And third, there is a 1 or 2 acquisitions on the card, so that also will increase our turnover.
Can you give us more perspective on the acquisitions that you're talking about? Are they in the works right now? And if yes, what is the nature of that acquisition?
We are in discussions. So I think within 1 or 2 months we will conclude one acquisition in India.
Any idea on what side of business that you're talking about in terms of acquisition?
That is again the architectural glass and maybe little bit of contributions on the automotive glass. Okay. So that new segment will be again we are starting.
Got it. And how are you planning to fund these acquisitions that you're talking about?
I think our own cash generations and little bit of the debt, as because of the last year's our preferential issue, our debt equity ratio is quite in comfort zone, and plus we are generating the cash margin every month, every quarter. So we are at this stage for the moderate acquisitions, no fundraising is required.
One more question on the side of capex, because you said that there will be order inflows coming in for the railway side, etc. What is the kind of capex that you've planned for FY27 and 28, and that is also going to be funded by internal accruals, or are you planning to raise funds, raise debt, etc.?
For the current year, there is no planning of fundraising, and more or less there will be a capex of around 50 to 70 crores, which will be the sell for this. Current year's and from the bank little bit of.
Sir, you are also expanding to Africa and the other and also in Europe. I think you have started exporting to Europe as well. What contribution can these new geographies bring in FY27, and how quickly can exports become a meaningful revenue for you apart from UAE, of course?
26-27 Africa will contribute around 5% from the UAE sale, and Europe will contribute around 5 to 7% for the India sale. So Europe we are exporting from India, and Africa we are exporting from UAE.
And so just wanted to understand, you are expecting a good growth from India as well. 60-40 ratio, you have to maintain that for FY27. Now, as far as I believe, India, wanted to understand how this is going to impact margin, because currently India doesn't have that value-added products. You have plain glass that you sell over here. So will that pressurize your margins maybe in short term until and unless you come up with the value-added products?
No. See, India, we are ramping up the capacity. Because of the capacity utilization, so fixed cost will be divided. Because right now in India, we are in new plants, our capacity utilization is very less. So that's where the EBITDA doesn't have a more pressure, and also little bit of the value-added product. And we are also in commercial. We are very niche product for the. Particularly our this,
right. No, so I think Mr. Gada, what Varsha is trying to ask is that in India you don't have the presence of value-added products which are high-margin products, which is what she is trying to understand, that if you plan to bring them, then what will be the EBITDA margin impact?
No. There is we are by Q3 our fire product will start in India, and also so there will be the value-added also available.
Okay, and then you still maintain the margins that you've talked about?
Yeah, we'll maintain that margin, and maybe we can increase 1% more EBITDA.
1% as a whole is what you're saying, EBITDA margins. This is by the end of FY27?
Yeah, FY27.
All right.
Sir, With that, I know I'm asking you again and again this question, but for FY26 you did around 7.3% PAT margin. For FY27, will it be more than 7.3%, or you're going to maintain that?
See, we are targeting 10%. I think we will maintain that around 9 to 10% this current year.
All right, 10% PAT margin for FY27 is what Mr. Gada is aiming at. Mr. Gada, thank you so much for taking out the time and helping us answer all the questions that we asked you. But let me also welcome in Neerav Asher, Head of Equity Research Analyst at Latin Manharlal, joining us now. Neerav, a very good afternoon to you. Any view on Sajal Glass? You heard the management.
Well, good afternoon and thank you for the invite. There are clearly too many variables for a 500 crore revenue company.
Yeah.
And yes, and I think one factor which comes to mind is the fact that there have been certain disruptions with respect to the UAE market. That is quite understandable at this point of time. But the domestic market is doing quite well. So they would be having good B2B relationships with various construction sector companies, and that would be driving the architectural glass demand. So I think that is one positive. At the same time, I think when we spoke about the margins, especially about the margins, I would be inclined to believe that once you cross the 15% threshold margins, I think as you go further, the PAT margins also automatically tend to improve. So what the management has guided that if it is a 16% margin, you end up with a PAT of around 7.5 to 8%. But when you go towards 18-19%, automatically you come towards 9 to 10% PAT margin. So I think that is workable. But I think a key monitorable going forward would be the railway business. Not very sure whether they'll be able to get attractive margins over here.
Right.
So I think that would be the crux of the whole.
Got that view. Well, viewers, time to dive into the F&O market setup and the Q shaping in trade today. Let's bring in Sharath for more details.
Well, a good technical setup is there and it's sustaining, especially for the benchmark indices. And now we are having HDFC Bank, one of the top gainers. We already mentioned the consumption names doing well, especially the FMCG ones. But a good strength coming from both private banking names as well as FMCG, and that's actually holding up the markets also. No major concern for sell-off, but yes, Infosys sell-off, that has intensified. That's down 2.5% as well. Long build-up, let's see what's happening there. And largely, Phoenix Mills becomes one of the top gainers in the F&O space. And of course, we had mentioned earlier about Colgate also, the FMCG pack. Short covering, we have Shree Cement. That's a new entrant making it to the list in the last time at 10:45, and Kotak Mahindra Bank also showing good volumes. Long unwinding names includes BHEL and Hindustan Zinc's. Metal sell-off has intensified, and of course the other group is the gold financing companies in the short build-up, and yes, one makes it to the list. ONGC, Oil India also is seeing selling pressure in Oil India, especially on back of the downgrade from foreign broking house. So these are the stocks from the F&O space which are buzzing in trade.
Thank you so much, Sharath, for all the details. Well, viewers, small cap heat continues after this break. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews, a across the NDTV network.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet.
Welcome back. You're watching Small Cap Buzzers here at NDTV Profit. Now, the other one that we're going to talk about is Genesis International. The share has surged almost 14%, 15% in trade today and is up 22% in the last 1 month. What seems to be exciting the street? Let's get in Shivam to understand exactly that. Shivam?
Well, yes, Genesis International is the company that provides advanced mapping system and the surveys and geospatial services. The product portfolio includes the 2D and 3D maps, aerial LiDAR and HD maps, and also the street imagery as a product segment. Now, there is no specific trigger for the movement in today's session, but the company has recently won an order for National Mission for Clean Ganga, and the order is currently valued at 2.8 crores. And the project includes the data collection using field surveys, remote sensing, and data compilation. Now, talking about the financials of the company, the Q4 numbers were higher on the lower quarter-on-quarter basis, and the labor code has impacted the profit after tax by 51 crores in previous quarter, and that's why we have seen a higher profit after tax in this quarter on a comparison basis. Now, the operational performance of the company in this quarter has remained weak. That was due to the project expenses and finance costs were higher in this quarter. Now, if we talk about the stock's performance in 1 week, the stock has given a 21% of up move, and in 1 month the company has given around 41% of move.
Okay, all right. So that's the view coming on Genesis International. But, I think we don't have the time to take more links. But with that, we're completely out of time in this edition of Small Cap Buzzers. Do stay tuned as Profit comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is in across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plate.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and solve all those stock-related queries. So if you haven't already, do start sending in your queries on the numbers that are flashing on the top of your screen. You can also call us on the landline number as well as speak to us as well as our guest on those stock-related queries as well. But before we do that, as we do, let's take a quick check of how the markets are doing, because today we've seen that in the morning we were up and now again have actually just receded slightly a bit from the highs, but continuing to be above that positive zone of 23,300 on the Nifty 50. So 100 points up. We'll hopefully continue this momentum yet again in the closing 90 minutes of today's trading session as well, because you've seen pressure on the index over the last couple of days. So hopefully a better end today. When you look at the heat map also, there were some individual movers like Indigo that were doing well in trade today in terms of the morning session. But HUL has continued to be in one of the top gainers. Kotak Mahindra Bank also doing well. So there are a lot of stocks. So is Nestle actually at the 2% mark. So they are changing hands between the top gainer for the Nifty 50, but all these four counters continue to do well. You're also seeing some pressure on Hindalco as well as Infosys today. Also on Oil India are some of the other names that are doing a slightly weaker show today as well. But very, very balanced screen at this point of time for the Nifty 50, because you're seeing a 23 to 28 stocks that continue to do well in the green, 22 stocks for the Nifty 50 right now in the red, and we continue to monitor what is happening with these moves as well. But also in terms of what we have seen, the sectoral heat map. Now that is also showing you some interesting signs, because yesterday was a day of the PSU banking index as well as the private banks. So while the private banks have continued to do well, PSU is largely a little off from yesterday. But the Nifty FMCG is a clear winner today, while media is consolidating after there has been some stoppage essentially of moves on Z Entertainment. But when you look at the advanced decline ratio, that is the other interesting one, because we have seen that in the morning it was a crisscross patterns, unfortunately for the modern markets, and today that position has been reversed. They have become a market of benchmarks. So you are seeing that the Nifty as well as the Bank Nifty continue to dominate the news flow, while the broader markets are under pressure. That's visible in the mid-cap 150 and the small-cap 250 as well. Mid-cap 150 was flat at one point of time, now down 0.5%. Similar for the small-cap 250 as well. But for the individual movers though, in terms of the BSE 500, you have HFCL as well as what we've seen, for the other counters as well, like Sterlite. Both are down by 5% and continue to, have the wrath essentially of that strong up move, money being taken off the table. Oil India has slipped to 8.5% now. Welspun Corp also under pressure. And so his Manappuram Finance as well as Muthoot Finance, was also down in trade, has recovered a little bit as well. Ease My Trip, Chambal Fertilizers, Crystal, Apar Industries are some of the other gainers in today's trading session. But let's go and start taking your stock-related queries now, and to answer them, let's welcome our guest, Narendra Solanki, Head Fundamental Research Analyst at Anand Rathi Shares and Stock Brokers. Sachin Janardhan, who's the independent market expert on the technical side of things. Gentlemen, both of you, thanks so much for joining in. The first question, Sachin, coming your way on Dynamatic Technologies. Our viewer has bought shares at 10,855. Stock's done well in the last 1 year, but is that move expected to continue, Sachin?
The trend of the stock is up only. Only the structure has right now not good, and even the momentum is weak. There is a support levels around 9,300 levels. If that support level is holded, there is no problem. But if it is closing below 9,300, then we can see a deeper correction like 8,000 and 7,000 as well.
And what is the time frame for this move, Sachin, which could be on the downtick? Is this more of a near to long-term call?
So yes, the medium term and the long term outlook will be changed as it will close below the 200-day EMA, and the overall trend will be changed, and the structure is already right now not good.
Got it. Well, the next question is from Sriram, who's writing into us from Chennai, and his question being on Shakti Pumps. He's bought shares at 560 rupees per share, asking if he can average down or continue to hold this particular counter now. Let me welcome in, our fundamental guest also at this point of time. Narendra, just in terms of this particular stock, you've seen both Shakti Pumps as well as Oswal Pumps last year. I think because of the delayed PM Kusum scheme, not get too many orders, and hence the working capital was also under pressure. Any coverage on either of those counters that you have?
Yeah, definitely. Since Shakti Pumps is one of the leading providers of solar and electric submersible pumps, definitely they are the leading executors of the PM Kusum Yojana. Plus, the next round of PM Kusum Yojana was got delayed, and that's why they have faced short-term problems. But I think medium to long term, when the ordering activity would pick up, I think the performance would come back. And if the person has a time horizon of holding the stock for more for about 1 year or so, then I think he can continue to hold the stock.
Got it. And the next question coming in is now on Mazgon Doc, and our viewer wants to know if it's a good time to accumulate this counter for the next 1 to 2 years. He does not hold the stock, but he's looking to enter, Narendra. Would this be a good level?
Yeah, we are. See, generally, we are very positive on the defense sector theme. But just one rider of caution is that defense sector is a very lumpy sector in terms of execution and order inflows as well. And the projects have a long gestation period. So ultimately, to generate a revenue from this point onwards in any defense stock, I think the time horizon should be at least 3 to 5 years, because that is the kind of timeline of execution all the defense projects have. So if the person is ready to invest and remain invested for that kind of a time horizon, then I think this place is very interesting, and the growth room, the headroom for growth is very huge for the sector going ahead.
And any direct view that you have on Mazgon as well, Narendra?
Yeah, we have a positive view on the stock as well.
And any targets that you're watching out for?
See, in the near term, we have. I think we can have a 15 to 20% upside right now.
Got it, Narendra. But let's go across and take our first caller for today. And this one's dialing in from Hyderabad. Murli has a stock query for us. Murli, very good afternoon to you.
Yeah.
Welcome to the show. What's your query?
Yeah, very good afternoon. This is Murli from Hyderabad. I have remaining 10 shares of Sem India project at an average of 562.
Okay.
After booking some profits, I wanted to know if there is still upside to hold it for under 6 months to 1 year.
Got it. Sachin, would you recommend that, or is it a good time to book profits on Sem India?
One disclaimer I would like to give: this call is open in our investors are also holding. So of course he can hold. There is no problem. From a long-term perspective, medium to long-term, the stop loss will be 900 levels, and we can see around 1300 to 1500 levels in the near term.
Got it. Well, viewers, also standard disclaimer: the channel that you're watching is part of the Adani Group, and so is the stock that we just discussed as well. So just to let you know as well. But the next question coming in now, it's from Gautam from USA. Now, he's a regular viewer. He's holding 2,000 shares of Eternal, bought at 289. So currently sitting on a slight loss. He's asking what's a good view for the next 12 to 18 months on this counter. How are you viewing this, Narendra? Because we are seeing that, of course, in the quick commerce space with Blinkit, they have had a larger coverage compared to its peers. But the stock just doesn't seem to move and has been consolidating at this zone for a while now. How are you viewing Eternal right now?
We are very positive on the stock. We also have a buy rating on the stock, and the major part of performance for next 2 to 3 quarters we are eyeing is from Blinkit, where we would continue to see the kind of a strong momentum in the growth, and the market share also gradually rising, and the profit from profitability point of view also it would be the momentum would be sustaining. So we are positive on the stock, and right now we have a target of 400 rupees
on Eternal. So that's very interesting, and continuing to be bullish at this point of time. The Andati on Eternal has been consolidating though in this zone. But the next question coming in now is from Sagar Pathak from Mumbai, and he wants to know view on Powerika. Has seen some correction over the last few days, but Sachin, is it a good time to add this counter?
So overall, what we have seen right now from the all-time high levels, there is a huge correction. The structure has changed of the stock. Basically, the higher high, higher low pattern has been like lower and lower low. So one support levels I would like to give, which is around 412 levels. If that is hold, then we can see a turnaround in the stock, and it can again achieve its all-time high level. But however, if 412 levels is not holded, then we can see 360 and lower levels.
Got it, Sachin. But the next question, we did discuss defense with Narendra just a while ago on the question of Mazgon Dock, and K. Guru from Chennai wants a specific view, and he wants to buy into Zentech or BEL at the current level for the next 2 years. Narendra, you spoke about the long gestation period that investors will have to hold these counters for. But for specifically for BEL and Zentech, do they come in favor at this point of time as a buy call?
Yeah, definitely. Bharat Electronics, we do have a buy rating. Zentech, we do not have any coverage or recommendation. But yeah, Bharat Electronics, we are very positive on. And the person can definitely get exposure into the Bharat Electronics. We have a target of around 500 rupees. Apart from BEL, we are also very positive on Astra Micro if he's looking for some small cap, mid cap kind of exposure. And the kind of radar and aerospace orders we are expecting from Astra Micro in the near term are very decent. And I think this stock is also has a very good long-term future.
Got that view. And for Astra Micro also today, the interesting news is that they are demerging their space, meteorology as well as hydrology business into a new entity called Astra Space Technologies. So how that shapes up will be something to watch. But it's really heartening to see what's happened with these smaller defense companies over the last few years getting scale and now looking at diversification, demerging to unlock value. So keep this stock on your radar. Next one coming in now, and this one's on Chambal Fertilizers. Nagashri has bought shares at 573, asking if she should continue to hold or what should she do with this counter. Sachin, we are seeing a 5% uptick today on this counter. Any view for her?
Overall, the trend for the stock is down, but right now it has actually moved out from that zone, and today it has recaptured its 200-day moving average. With this kind of a candle and with good volumes, she can definitely hold, but definitely with a strict stop loss. The stop loss will be around 445 levels. If it is closing again below 445 level, again the structure and the trend will change from up to down.
Got it. Well, the other counter, and which has just fallen off a cliff today, it's Oil India. Now, a viewer, is holding shares, 55 of them at 481. Stocks down 9.5% today, and you can see that consistent move. This is Jatin from Chandigarh asking what he should do with his 55 shares. Narendra, any coverage that you have on Oil India, and because you've seen that over the last day, just in the last 12 to 18 hours, you've seen the geopolitical crisis again taking shape, multiple attacks on US airbase as well, and probably the volatility in oil is impacting the stock. Any view on Oil India?
Yeah, right now we do not have any coverage or recommendation on this stock. However, considering the geopolitical crisis, I think the space would continue to show this kind of volatility based on different outcomes in terms of resolution and escalation of the war, which is at this moment is very unpredictable and very difficult to predict. So I think there are many other opportunities available in the market which are expected to give better returns in near term.
Got it. Well, the other question now coming in is from Avdesh Ojha from Delhi, and he wants to know in the power equipment space, which are some of the key aspects to watch out for. So Hitachi Energy, Siemens Energy, GE Vernova, as well as some of the other stocks like CG Power, he feels are expensive, at least in the near term. But Narendra, any coverage on either of those or the space that you like within the power space? What's your preference?
Yeah, definitely. Transmission and distribution segment in power space is one of our favorite spaces where we are actively recommending to our clients. The stocks like CG Power, TD Power Systems are one of our top pick. Even we have a recommendation on GE Vernova, but right now it is it is already trading above our target price, so it is under revision. But yeah, definitely this space is looking very interesting, and the kind of investments which we are going to see, and the kind of demand, the demand for the power, and the need for solar and wind and renewable energies to provide a transmission distribution network so that the power delivery can happen to the consumer clusters. So all these factors are very positive for the T&D segment, and the ordering activity should continue to remain very, very strong for next 2 to 3 years. So definitely we are very positive on this segment.
Got it. Well, our viewers, Narendra as well as Sachin, it's now time for the rapid fire round in this edition of Ask Profit. You both know the drill. The first question coming in now on Anthem Biosciences. Our viewer Rajan Iyer wants to know if it's a good time to purchase. He purchased the stock at 776. Narendra, any coverage that you have on this one, and what's your view?
No, we do not have any recommendation on this.
Sachin, on the charts, any view?
We are holding this stock and continue to hold. There is no problem.
Got it. Kane's Tech is the other one. Our viewer wants to know if at 3062 is what he's purchased that. Should he continue to hold, Narendra, for the next 2 years?
See, as far as coverage is concerned, we do not have a recommendation, but overall electronic manufacturing space is a very interesting space and growing space. So from that perspective, the sector is going to perform. However, looking at the valuations and execution, one can take a call regarding the individual stocks.
Also on Motherson Wiring, our viewer is holding shares at 43 rupees, currently sitting on a loss. Any view that you have, Narendra, for the long term?
I think it's better to switch to another different auto ancillary companies like Minda Corporation and Gabriel India, because the company has a high exposure to export markets, and right now because of the global volatility, the stock is not able to perform. So it's better to switch to different auto ancillaries.
Well, the next question coming in on Havels, and this is from Pachka from Tiruvananthapuram, holding shares at 1150, Sachin. Asking what's the near-term view. He's just bought yesterday is what he's saying.
So the trend of the stock is down. Basically, you should not hold this.
Got it. The next question coming in now, it's on HCL Tech. Our viewer is currently sitting on a loss of almost 5,000 rupees. Any view, Narendra? Should he continue to hold?
Yeah, can continue to hold.
Next one's on Bajaj Housing Finance. It's our viewers, Shreyas has bought it at 95. Stocks trading below that level. Is it a good time to average down, Sachin?
No, the trend is down. We will not suggest to average, basically.
On Central Bank of India as well, our viewers bought shares at 40. What's the view here, Sachin, on the stock?
Even the trend is down, the view is basically to exit.
Got it. The next one's from E. Venkatraman. He's holding shares of both NHPC as well as SJVN, but is in a loss of between 14 to 17%. Any coverage on either of them, Narendra?
No, we do not have any coverage.
On the charts, does anything look interesting right now, Sachin?
All stocks are in downtrend, basically to exit.
Got it. Sriram from Vishakhapatnam wants a view on the hotel space, Narendra. He's holding on to ITC Hotels, but at 206, and wants a 5-year view on the stock in the space.
In hotels space as a sector, we are very positive and constructive right now. And in near term, there are few challenges regarding the inflation rising, and so the near term performance can be disappointed. But yeah, long term, we are very positive on the sector.
Got it. Well, that was the last question of the rapid fire as well as this edition of Ask Profit. Narendra as well as Sachin, thanks so much for joining in and giving us your views. But viewers, that's all the time on this edition of Ask Profit. Thanks so much for watching. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूम
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon. When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes.
Welcome. You're watching India Market Close, and we've managed to stay up. I mean, that's the headline, and that's the best part of it, frankly. 0.37% up on the Nifty. The advanced decline ratio, although skewing towards the sellers as the day has progressed. Pull up the intraday chart of the Nifty. And Alex, you'll see that we've stayed pretty much range bound. Maybe come off a bit in the last 20 minutes or so.
Yeah, and it is some of those heavyweights that have come off that is probably resulting in this, because pull up the heat map for the Nifty 50 and you will see that Reliance Industries does not rank on the top. At one point in trade today, it was trading with gains of about 2%, but it is now given up all of that. It's trading just about flat with cuts of about 0.2 or 0.1%. Axis and the private sector banks once again ruling the roost and contributing most in the way of points.
Along with FMCG.
Yeah.
FMCG has been an interesting play today. Nestle, HUL, ITC, all of them coming to the fore. Max Health also looking interesting, but on the losing side, Hindalco continues to struggle. The metal pack entirely, even Tata Steel is out there. You're seeing Infosys taking a bit of a knock more than its other IT peers, and Coal India and ONGC not doing too well. ONGC, because Brent prices have actually come off, and we'll pull up the Brent for you in just a second. But let's just get you the broader indices as well, if we can. And okay, there you have it. You have the Brent very quickly there. See, it's kind of come off. Yeah, it's under the 92 mark right now. So ONGC is cooling off a fair bit as well. Just pull up the broader indices for a second, and that's where, Alex, we have lost steam, isn't it?
Yeah, absolutely. 0.6% lower for the mid-cap index. Pull up the small-cap index, similar. And so therefore, what you saw at the beginning with regard to the market breadth tilting very sharply in favor of the declines, that has taken place around the mid part of today's session, and it's widened. It currently is at the widest point. So if yesterday there was considerable strength in the broader markets, what you were saying in the morning today, it's tic-tac-toe.
Yeah.
It's one day forward and the next day back.
Yeah, we're still seeming on the positive, at least for the benchmarks, if that's anything to go by. Yeah. Let's pull up the sectoral indices for you, and then the gainers and losers, just to round off this quick update. FMCG is firing today, as much as FMCG fires. I mean, 1.5% up, but at the pace that these very large companies move and their stocks move, 1.36% up there. Private banks, like we told you, are the heroes, and so all of that Nifty concentration is showing very clearly. On the losing side, media, energy, metal stocks are the ones which are not doing too well. But Bank Nifty, private banks are okay in that space.
What is interesting is to watch the PSU banking pack, right? After it's moved 3.7% yesterday, it's taking a bit of a breather today. It's the private banks that are coming to the fore. And it's that FCNR conversation.
Completely. I was just going to say that. So FCNR deposit rates have been increased. So here's what's happened. If you recall, the Reserve Bank of India wants to make, is helping out, and it's the government's policy to make deposits in government bonds more attractive for people sitting outside the country. So this new scheme was announced. A lot of private banks today have announced the uptick in their deposit rates, maybe ahead of the public sector banks, and that could be one of the reasons that you're seeing these banks come up. In fact, this is what's happening in the market today. It's a strong technical momentum for the Nifty. Nifty is sustained above the 23,400 mark, and this actually opens up a new range of 23,600 to 23,900. The Bank Nifty up move is likely to get capped. Benchmark indices have outperformed the small and medium companies today, and you're seeing buying in FMCG and banks, selling pressure in gold financing companies, metals and IT. The rupee, meanwhile, has shown strength. Crude levels are remaining below $92 a barrel. And this May data, which came in, is important. Marginal decline in May SIP data. What should you track? The US May CPI data will come in today, and that's very, very crucial. Ajit Mishra, SVP Research, Religare Broking, joining in today. We're also going to be speaking with Dharmesh Khan, Head Equity Research at Chola Securities. Dharmesh, are you excited by seeing this FCNR news with all of the banks talking about their rates, and is private banking looking like it's going to have another run?
Yeah, good afternoon, Tamanna. I mean, it's a welcome news, and at the same time, it allows banks to raise more deposits, which is a lower cost of fund. So, particularly, public sector banks, where this gap was very high, credit growth was 15-16%. whereas the deposit growth was 9 to 10%. They were struggling to mobilize deposit growth. So through this route, I think that should take care of it. Though it's a long tenor fund, 3 to 5 years, but still the cost of funds are likely to be marginally down after that. So all the banks have not announced the rates, and how it's likely to sit into the overall scheme of things has to be seen. But our sense is at least it would be NIM accretive. I mean, 10-15 basis point of an appreciation in NIM one can see, and higher deposit population. So definitely, yes, a good move on the profitability front. And having said that, let me just highlight FY26, the internals of the entire credit growth was very good. But if you look at the reported PAT numbers of banks in the Nifty 50 basket, it was hardly 3 to 5% kind of growth on a year basis. So that will be taken care of. One is through a stable and a better NIMs, and the second is better net interest income growth. So I think both the triggers should play out in FY27 for banks.
Okay, very interesting. All right. Let me take that forward and ask Ajit Mishra what he thinks about the banking back, because private banks is where the strength is at today. And good afternoon to both of you, gentlemen. And the Bank Nifty has shown relative resilience, right, Ajit? So when you look at the indices, is that where your attention is?
Yeah, good afternoon, Alex. Good afternoon. So what we are definitely seeing, Alex, is breather, when it comes to the Nifty index after this phase of underperformance or correction. Banking is the major reason why we are seeing the downside momentum capped. Means on every uptick, anyways, we are seeing pressure emerging from one way or the other. But banking definitely looks promising. Despite this recent surge, we still feel that maybe around 56,000 mark, where all the major averages are aligned, could be the area where it might find the next resistance. But having said that, for Nifty, the first area of hurdle is still intact at 23,500, 550 mark, which is the 20 EMA zone. Until we break that, I doubt that we can inch toward the upper band of this declining channel that currently we are trading in, which is around 23,800. So banking looks comparatively better. It's a buy on dip for banking. For Nifty, is still a sell on rise. So it's a kind of a diverge move that we are seeing in the index, but that is how traders should plan or align their positions.
And what individual stocks are looking attractive to you, Ajit?
So Alex, considering the market tone, I feel that healthcare, pharma, and banking is something that you should be focusing on the long side, and then we have other opportunities on the short side as well. So from the healthcare part, Biocon, which has witnessed a decent rebound after this marginal pullback from the support area, we anticipate a gradual recovery towards 439 levels in the near future. So with stop at 408, one can look to accumulate Biocon. Eternal is in fact a shorting candidate after this failure of recovery or a rebound retest of this major averages. So here we are anticipating a dip towards 230, 228 area in the near future. So here one can look for shorting opportunity with 247 as a stop loss.
Got it. Okay. Let's focus in on the stock of the day. And there are quite a few stocks that are buzzing in trade, but this one in particular stands out. It is Car Trade. And this is a stock that has gained as much as 12% today, or 11.5% right now, just a tad bit off the high point of the day. The question is, why is it buzzing? Let's go across to Puneet to find out. Puneet, is it the outlook?
Well, it's one of the key aspects is the outlook, but also it's been a very volatile journey for the company in the last 1 year. So you of course see that 11 to 12% move today. It's up 47% in just the last 1 year. But trading at that 2400 odd level, stock actually was at 1650 on March 30th. So you've seen almost an 800-point jump from the lows, but still down 25% from the highs of almost 3,290. So it's at a one-way swing up. It has collapsed again, and then again the second set of recovery just in the year itself. And the reason for that has been growth, which has been quite strong for the company as well. We should have the historical growth trend before the guidance, but we'll come to that in just a bit, because the guidance is about 1,000 crores in profits that the company wants to earn in the next 4 to 5 years versus 244 crores which they did in FY26. So that's point number one. And the other aspect is that the cash levels have already crossed 1,200 crores for FY26 by ending FY26, but they have said that they want to do no inorganic acquisition at this point of time. So they've just acquired OLX about a year ago, looking to revamp it, but very interestingly that they don't want to burn cash reserves in acquisitions and no inorganic plans currently. The other aspect is the new elite buyer program, which has been spread across its key consumer verticals. They feel that right now just about 0 to 5% of revenue will jump to 30 to 40%. This is the premium base, the higher base, and hence it's something to watch out for as well. Let's go across and see what the next plate is as well, because we have analyst coverage now, because that's on Kotak Institutional Equities. They've raised the target price to 2,300 on June 3rd. Mentioned that the stock corrected on AI disruption concerns, but they feel the dealer database is quite strong, and hence a lot more to offer for the company at this point of time. And finally, Citi, they had of course upgraded it on the back of higher OLX valuations. Citi has also done the same as well. But very interestingly, 9 analysts cover the stock. All 9 have a buy call, but seeing limited return potential of just about 11% at this point of time. And stock's trading at 34 times FY28, so it's pricey in terms of valuation also.
Got it. All right. Thanks so much, Puneet, for that. Very interesting tabulation there of the experience that you might have had if you held on to the stock. By the way, the stock cooling off even as we're speaking right now in single digits. The question to you, Dharmesh, is if you've looked at this analysis and if you studied the company in the past, what's the view on it?
Yeah, Alex, good afternoon to you. The recent trend which I have seen with most of the management is they are playing out 4 to 5 years kind of a projection. And there the picture painted is very rosy. 4 years down the line, the projection which they have given 240 crores, 2,000 crores on a PAT is doable given the, penetration level of the four-wheeler industry into India. Around 5-6 crores of cars has been sold into India so far in the last 20 years. And if you look at the addressable market is around 30 crores. So premiumization and migration to four-wheelers can happen. How much it will go to, sell a car, that has to be seen. So we are not very particularly bullish on car trade. We have seen it, but always did not have the, conviction to go on with a report on a buy call on this, so we have avoided it. However, we are bullish on the OEMs. So Maruti remains the top pick out there, along with Tata Motors on the passenger vehicle side. So TMPV and Maruti, any decline should be bought into from a structural and thematic play for the next 3 to 5 years. Volume growth so far has been very strong, and it's likely to be the case going forward as well.
Okay, let's talk a bit about FMCG companies, because that's where it's looking really exciting. Outlook has remained steady with premiumization driving volumes and volume-led growth. But having said that, reports today that there are price hikes that have been taken across categories. Let me go across to Mahima for more. Mahima, is that the reason we're seeing that spike?
Yeah, so yes, partially the reason. And plus, we've seen a lot of annual report and management key takeaways coming in that suggests positive growth outlook for FMCG companies as a whole. Now, I think it's at this point of time, it's important to take a look at what the key commentary and common commentary has been like. The first one, premiumization is the playbook, is the way forward from here on, and premiumization with a volume-led growth is what the management is aiming at. Margins will remain in the range as they were in FY26 because one, inflation, and two, management is expecting whatever gains in terms of margin happens will be reinvested in brand strategies and growing the brand at the moment. Balanced growth between pricing and volumes, of course, will happen, largely led by volume growth is what the common commentary suggests. Plus, urban demand is improving and the rural demand right now is stable, and that's something that could lead to growth going forward in FY27. Fewer, bigger and bolder bets. This is what a lot of companies are focusing on their key categories and premiumization, and that is going to lead the growth from here on. But overall, raw material inflation will remain the key headwind from here on, because that is something that could hamper margins as well as volumes. But in terms of where valuations go, we've talked about this as to how a lot of these names are trading below their 5-year average. For example, Tata Consumer trading at 52 times 1 year forward versus a 5-year average of 80 times. Something like an Marico at 46 times versus that of 54 times. Something like an ITC trading 1 year forward at 18 times versus that of a 5-year average of 23. I mean, if you take a look at a 2-year forward also for something like an ITC, it's at 15 times, which is, which has never been the case. So a lot of these names available at attractive valuations. Now, if you take a look at the Bloomberg consensus and see as to what are the stocks with highest return potential at the moment, you have Emami topping that chart with a return potential of 45%, Varun Beverages 27%, and of course Radico Khaitan also at the 27% mark, and then followed by GCP and Dabur both at 24% mark. So this is the overall view of what's causing the rally, and as to what outlook looks like for FY27 for FMCG names.
Okay, Dharmesh, I wonder if you're buying into the FMCG enthusiasm today.
No, Tamanna, I think it's more to do with our trading blip, which we are seeing in the FMCG space. And I mean, I buy all the thesis of the commentaries which the managements are making about premiumization.
Are you calling it a trading blip?
Yeah, definitely, yes, Tamanna. It's a trading blip. I mean, see, one thing which can add to, the consumption in light of inflation and the weak monsoon, still, the consumption may still be there, is the wage code revision. So through that, the take-home salaries of most of the people have gone up because the PF contribution has come down to 1,800. Many companies in the country have adopted that kind of a CC. So your cash in hand goes up, which in light of, previous dole-outs like direct tax cut, indirect tax cut and interest rate down, balances things out. But going forward, one has to be very clear. The thesis which is playing out in the market is valuation resetting based on the projected growth. So if you are doing it for historical thesis, like it used to trade at 80 times PE multiple, so it should go back to 50, 60 times. I don't think in next 2 years we are likely to see that kind of a reversion to mean based on 10-year, 15-year-old valuation multiples.
Okay. So then, and you've already pointed out the OEM, so I won't ask you to detail that further, but is that the only way that you're playing, Dharmesh, the consumption theme?
Yeah, consumption. See, OEMs, again, Alex, is a structural theme in the making. I mean, whether it's two-wheelers or four-wheelers, if you're buying that. But this year itself will be a difficult for automobile industry. What we are advising is buy on declines. The reason being, first half will be marked with higher input costs, which will be eating into operating margins. But the volume so far has been good. So on absolute reported operating profit, there may not be a big decline. But second half, the base will be very high. All the OEMs has reported 20% plus kind of a volume growth from September till March. So you will be fighting against that. And if this situation continues of this inflation, it will be a bit of a spot. But structurally, I mean, it can be a blip for some time. Eventually, things are going to go out. As far as consumptions are, concerned, OEM is one play, and other is consumer durables. I mean, the stocks have been beaten like LG Electronics and all. Getting into the festive season, we can see some traction building out there as well. And there we find the replacement as well as the new, buyouts will come into play. Because last 2 years particularly have been very dull for this entire space.
Okay. Just, Ajit, want to get a quick view from you on the FMCG consumption story that we were just discussing on charts. Are you also finding this as a trading blip and uninteresting today?
So, Tamanna, if you see that the price performance clearly reflects the overall scenario that we are in, means after IT, I guess FMCG is one of the consistent names wherein we are seeing underperformance broadly from majority of the stocks. So if you exclude a couple of names like Marico and Nestle India, majority of the stocks, they are reeling under pressure on witnessing selling pressure on every rise. So yes, selective buying in stocks like Nestle, Marico, Varun Beverages is something that one can look at. But largely, if we talk about the sector, the indications are in the favor that underperformance is likely to continue.
Okay. Stay on with us. Let me go across now to Hiral for a special report. We're putting the deep dive and spotlight on HFCL. The stock has seen a sharp run up, but are the fundamentals matching up? You're, of course, seeing some of a drawdown in the last week or so, about 11 or 12%. If you look at it from a monthly and then an annual basis, you'll see the extent of run-up in that stock, still about 20% up for the month. What are the fundamentals? Rich valuations and weak cash flows, among other things, are key concerns. Hiral coming in with that deep dive.
Thank you so much for that. absolutely, if you see in terms of the last 5-day chart, you will see the kind of downtick that you're seeing. 2 days of lower circuit is what you've already seen on this counter, and 11 to 12% is the downtick that is coming over here. Now let's understand the performance. If you see in the last 2 months, April 71% up move is what the counter has seen, May 55%, and from its 52-week low, the stock is up nearly 250%. So that's the run-up that we're talking about. But what are valuations telling you? You know, if you look at the valuation math, it's trading at around 87 times price to earnings versus an industry median of 14 times, which is clearly telling you how expensive the stock is and the way investors are really paying heavily for future execution from here on. Very quickly, if you see the price to earnings and the ROCE of HFCL in terms of the peers, here your peer matrix is telling you that the price to earnings is expensive versus your return on capital employed is lower versus what the peers are giving you. If you have to look at the peers, we're talking about names like HFCL, Indus Tower, Altius Telecom, Pace Digitech, Bondada Engineering, and Vidya Telelink. All of them are in that range of what, 11 to almost 46 times, which is the highest, whereas HFCL is 87 times. Moving from here on, if you have to look at the cash aspect of it. Now, the profits have been constant for the company, but they're not really converting into cash. That's the problem over here. And growth which is coming in is becoming absolutely cash intensive. If you have to look at these charts as well, from FY25, your operating cash flow from a negative 45%, it's actually ballooned to negative 378 crores in FY26. And if you have to talk about your free cash flows as well, from a 454 crores, which has gone down to a negative 723 crores. Whereas your net profits absolutely the same in between FY24 and 26, 338 to 329. That's the number that you're looking at. Now your working capital has also come in under pressure. If you look at the working capital days, they've actually improved. They've worsened from 62 days to 212, which is 3.4 times. Your cash conversion cycle, 10.5 times is the kind of uptick that's come in there. And your inventory days, 3.9 times. So there is a cash crunch which is building up. This is what the numbers are indicating so far. And if you have to talk about the debt, the borrowings, it was at 783 crores in FY22. You see the chart, it goes up to 1,744 crores. So your debt has been increasing. Your interest cost has also been going up. And 1/3 of your profit now is going in terms of paying the interest amount. And that's the concerning area over here. Now, what we need to watch out for from here on is that with all of these concerns, if anything positive has to happen, then the execution needs to justify this 250 percentage points rally that we've seen from its 52-week low. Secondly, a very strong order book. 21,000 crores is the order book that HFCL has been sitting on, where defense, exports, and AI-linked fiber, these three are the major opportunity areas for the company. So yes, run-up is very strong, order book is very strong, but the execution has to actually justify the valuation, justify the rally, because your balance sheet matrix are slightly off right now.
Very well put and very detailed analysis there. Dharmesh, you've heard the numbers and you've heard what Hiral has put together. What is your commentary on this stock? Because a lot of people would have thought that they missed the bus because it was pretty much in a one-way rally higher. And now it's been correcting quite considerably. Right now it's at lower circuit. What would you do?
Alex, only two comments out there. One is, even if you take the profit for last 10 years and FY15, it has been the same. The range has been 330, 340 crores. It has never reached that. The other is, the last 2 years, the promoter holding has come down from around 39% to 28%. So 10, 11%, promoter holding has come down. And this company has a history of its own. Beyond that, no comments from my side. We don't cover it actively.
Okay, fair. By the way, pull up the benchmark Nifty 50 intraday chart, because from where we started this program as well, with gains of about 0.4%, we've erased quite a bit of that. In fact, most of that. We're trading just about flat. Pull up the heat map for the Nifty 50, and barring a few private sector banks that are holding out, it's a gash of red seemingly, and the cuts that you were seeing earlier for some of those stocks have gotten worse. Something like an Infi is now trading with cuts of about 2.9%. Hindalco in any case was under pressure, but some of those heavier weights. Take a look at Reliance Industries, and perhaps that's going to explain quite a bit of this. Pull up the intraday chart for Reliance Industries. It is now trading with cuts of about 0.6%. So as a heavyweight that accounts for about 1/10 of the benchmark as a whole, when you were gaining about 2% at the start of trade today and now seeing cuts of about 0.5%, that is possibly where that pressure is emerging from. On the charts, Ajit, is this the considerable amount of pressure that we're seeing on the benchmark right now? And what would you say about the index and its most recent move?
So Alex, like what we have explained it earlier also, that it's just a breather that we were seeing in Nifty, thanks to the banking index, which has not only outperformed, in fact, it has witnessed a decent rebound. But at the same time, if we talk about the heavyweights, like you've rightly mentioned Reliance, IT majors, which have completely engulfed the move or the recovery that we were seeing earlier. And then we have stock from the FMCG basket also, like ITC, which holds considerable weight, Eternal, Bharti Airtel. All these names were putting pressure, or rather they were maintaining the negative tone despite this recent recovery in the banking. So that clearly shows that the recovery is also very shallow. At the same time, the downside, we still feel that there could be a rotational buying in the heavyweights. The pace of decline could be capped. Means we might again continue to see some buying interest emerging around 23,000 mark, but broadly the tone is negative. So that's something that one should be keeping a close eye on until we decisively reclaim 20 EMA mark around 23,550. I feel it's prudent that one should look for shorting opportunities on rise, especially in the Nifty index.
Okay. Let me just talk a bit about gold. And yes, in the middle of markets and in the closing hour, we're talking about gold, but there is some impact on gold financing companies as well. The reason we're talking about gold is that the yellow metal is under pressure despite escalating geopolitical tensions, with prices now slipping below pre-conflict levels as safe haven demand remains surprisingly muted. Rising US yields and a firmly restrictive Fed outlook are weighing on bullion, while technical breakdowns and weak investor flows add to the downside. Brokerages like Citi have turned cautious in the near term. Even as longer-term bullish bets remain intact, we're now joined by Kunal Shah, Head Commodities Research at Nirmal Bang. Kunal, thank you so much for speaking with us today. Logically, when you have an elongated period of geopolitical crisis, gold should start showing some strength as a safe haven commodity. Why is that not happening this time around?
It's a very good question to start with. The reason for that is gold has risen by 70% in the year of 2025. So the gold prices have entered in a corrective phase and a consolidation. So like you rightly said at the start of your show, the long-term fundamental trend for gold continues to remain very bullish. But in a shorter term, the rising bond yields, the rising inflationary expectation, raising the prospect of the rate hikes across the globe, these are the factors which are pulling investor down. We must not forget about what has happened, what our government has did. The gold imports are going down. So the Indian gold imports are going down. India accounting for one of the major consumer of gold, and if we are not importing, that is going to create some vacuum in the international market. That is also a factor to watch out for. More steps are likely to be taken by government to further curb the imports of the gold. So these are the factors which are weighing on the gold prices. But the good news is that gold prices have corrected. And generally what happens whenever there is correction, people wait for more correction and they don't buy. But I believe that from here, the maximum downside, what we see is another 3 to 4% downside. So $4,000 remains very good levels to re-enter the long position for the structural bull run which can take place. This is a good opportunity because if you look at the Indian prices, you must factor in the 10% custom duty hike, what we've seen by the government. So if you take that out, gold prices are already at 1,40,000 at the peak, which was somewhere at 1,86,000. So another 3 to 4% correction from here. All eyes will be on today's CPI data from the US. And I believe that gold is definitely going to witness some correction in near term, but this is a good time to enter in long position for the longer term perspective.
Interesting. I like the way that you've described this, Kunal. But over the last 2 years, and good afternoon, this is Alex here. Over the last 2 years, some of the traditional dynamics for precious metals and gold in particular have had to be thrown out of the window, right? Gold prices not moving up when they are supposed to, moving lower when they're not supposed to. But having said that, one traditional view is when bond yields go up and the dollar strengthens, which is what we're likely to see going forward as well as monetary policy in the US tightens, gold will have a negative view, right? Or you'll have a negative view on the pricing of gold. Is that not likely to take place this time around?
Yeah, it's a great question. But I look at this question from a different point of view. So let us say the bond yields shoot up by another 30 to 40 pips from here. I think at that point, US will have no choice but to infuse liquidity in the market to bring down those short-term rise in the bond yield. Because the only thing what US cannot afford right now is a sharp surge in US 10-year or 20-year or even 5-year for that matter. Because that is going to create big problem for them. They are sitting on a 40 trillion debt. And if, let us say, the bond yield shoot up by another 30, 40 pips from here, their debt servicing will shoot up and they will be left with no option but to print or to infuse liquidity and bring those yields down. So I believe that whenever bond yields rise and gold prices goes down, that is an opportunity for investors. All the traditional, like you said at the start, all the traditional theories have gone for a toss. Okay, ever since from last 3 to 4 years, we are in a multipolar world. We are not in a globalized world anymore. And all these traditional theories, higher geopolitical uncertainty, higher gold prices, all those theories have gone for a toss. So I believe you should look gold as with a fresh view. The hard asset trade will continue to dominate in years to come because the world is searching for an alternative currency. The US dollar as a reserve currency is gradually losing its sheen. It is going to remain a reserve currency, but it is losing their sheen. And if you look what has happened, there is a complete divergence. The US bond yields have been, the bond holdings of the global central banks have been going down and gold has surpassed that. So the structural story will continue to remain there. Hard asset trade is, there is a pause right now because of what is happening with the inflation globally, and that is on account of what is happening at Strait of Hormuz and between US and Iran and Israel. So even if this factor continues, I believe at some point gold will stop reacting and it will find a good floor. And the people who have missed the bus, for them, this is an opportunity rather than to be fearful. Try to find an opportunity in this fall. $4,000, $4,500, $4,050. I think these are the great levels to build again long position. And I think not extraordinary, but gold will be poised to give you 15% CAGR return for next 2 years.
15% CAGR return. I mean, it's better than what most fund managers can talk about. Kunal, very simple question. ETF. The best way to go about this in your view, and what are the targets that you see for gold?
Yeah, so gold ETFs, obviously the best way to invest right now. There are a lot of schemes which are putting restrictions because of the what government has come up with. But I think still gold ETF will continue to remain one of the best options to invest in gold. And my targets conservatively, if you buy at 4,000, by the end of the year, you can see gold somewhere at $4,800 to $4,900. And by next year, 5,400 to 5,500. So conservatively 10-15% return is something, it will keep giving you. And these are the times, generally these are the times when the opportunity comes. Everyone is, now everyone will start to talk about $3,500. But we have already seen a 50% correction from the peak if it comes to $4,000. So these are great time, rather than being fearful. One should buckle up and really start building position. Don't worry about the short-term pain, but these are the good times to enter.
Times to enter. You can't be clearer than that. Kunal Shah, thank you so much for joining in and giving us perspective of that. If you missed the first part of the gold rush, this is the second one. Please be clear, we're not telling you to go out and buy gold. Remember, the government is telling you not to buy physical gold. You don't want that import bill for India to blow up. So digital gold is the best way to actually make those investments. Having said that, gold financiers are under pressure, tracking a sharp fall in gold prices, and also after news reports suggest that the finance ministry has sought information on gold loan lending from banks. Shivam joining in to tell us what's going on with some of these stocks.
Yeah, few of the key reasons that the gold financing stocks are down is the rise in the gold prices in international market, which has further exerted the downward pressure on gold on MCX and gold financing companies. Now, profit booking is also one of the key factors that have added to the decline. Technical indicators also remain weak, and additionally, according to the media sources, the finance ministry is seeking data on gold lending, which has created a caution too. On the macroeconomic indicators side, the ongoing geopolitical tensions like the US-Iran has created the pressure in the price, and the higher crude oil prices are also adding on to the that. Interest rates and bond yields have been remaining higher on the globally, and the strong US dollar is also reducing the appeal of the gold. Now, what will be the impact of the gold loan on the gold loan companies? The falling gold prices will result in the decline in the value of the collateral that the company holds against the lending, and this will also result in the loss given default at a higher rate. Now, looking at the gold price movements in recent times, so the gold has declined around 8% on month till date basis, and nearly it has corrected around 25% from January 2026 highs.
Yeah, absolutely. Okay. All right. Thanks so much for that, Shivam. Dharmesh, I want to come to you on a gold financiers, and ultimately there is always a sensitivity to gold prices, right? And there is a sharp move either one way or the other based on what gold prices do. They've maintained, and Muthoot on an ongoing basis has maintained that they keep their loan to value, which is ultimately the value of what they lend as per the collateral that they receive, at very close to that 60 mark or even below that. So it's not really a problem. What do you think about them right now?
Yeah, Alex, I mean, very true. It's absolutely 60% is the benchmark which both of them sacrosanctly hold to. And I don't think there's a NPA-related issue or something like that will happen because they are more than secured. But structurally, I just heard Kunal saying that 70% kind of a movement in gold price was there last year. So typically what happens if you look at 10, 20, 15 year kind of a period, so a couple of years for gold price hike when the gold goes for an up toss, it's there, and then it goes for a sideways kind of a consolidation with correction setting in. I think this is a phase where some correction is setting in. So next 1 year would be difficult for if you are pure play gold financier kind of a company based on the growth rate, because we have already seen a couple of good years of lending happening out there. Secondly, if you want to play it out, then there are multiple options in the banks itself. I mean, most of the banks have started providing gold loans, and Federal Bank, I think, is a much better, place to where you can play both as a direct lending as well as gold lending. So we are not advocating, just pure play gold financiers at this juncture.
Okay, let's talk about, I would say, a stock that has gotten completely hammered today. That's Oil India. And here's what's happened. Pull up the intraday of that stock and you'll see kind of drubbing it's taken. This note came out this morning actually. Morgan Stanley has downgraded the stock to an underweight from an overweight. Look at the drop in target price by Morgan Stanley. Their target price earlier was 566 rupees. They've downgraded to 404 rupees. The stock is currently at 427 rupees. Now, what is the reason? They're saying delayed natural gas, average selling price increase, lower refinery margins until fuel retailers recover their current losses, potential discounts on diesel sales after the 3x rise in refinery capacity as India reaches a diesel surplus as early as second half of 2027 is what they see. Slow increase in domestic production growth should surprise the street negatively in coming years after 50% 2027 EPS estimate cuts year to date. They see a 6 to 7% downside risk to street estimates as oil prices normalize once the Middle East conflict ends. Harsh outlook there for Oil India coming in. Dharmesh, I wonder how you're seeing Oil India and a cohort of those stocks which could be impacted for the same reasons that they're talking about Oil India, and especially the part about crude prices normalizing very quickly once this ends.
Yeah, Tamanna, I mean, that would be a big blow. And last time also, when I was on your channel, we were very clear that be it downstream or upstream companies, we are not touching any of the oil plays, be it refiners or, upstream plays. The reason being, if you see, I mean, the current data shows the last month, the world consumption of oil dropped to 104 million barrels per day from 106. So there's a contraction happening, and it has speeded up the, adoption of renewable energy and other form of energy as a replacement of fossil fuel or crude oil. So we have been structurally, it was already in a downtrend, and if this things normalizes, our own sense is oil will fall below $60 a barrel, given the kind of contraction we are already seeing in the consumption space. So, I mean, if you were lucky to get at a lower level, book your profits and be out of it.
Got it. All right. On that note, gentlemen, thanks so much for joining in. Ajit, Dharmesh, pleasure having you. But to slip into a very quick break, as we do, just mark the benchmark Nifty 50. It has slipped into the red. It was threatening to do so. It finally has. But it's hovering very close to yesterday's close. We'll come back on the other side to talk about a cohort of stocks that's holding it where it is, and maybe a few others that are putting pressure on the benchmark. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India is rewiring. The way it builds, the way it connects.
विकसित भारत के निर्माण के लिए जरूरी हर क्षेत्र में भारत तेजी से काम कर रहा है।
From infrastructure to digital access, from reform to real impact. But the big question is, what will define the next India? NDTV Ignite, the Future India Summit. A closer look at governance, growth and the future of a new India on the NDTV network.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury.
Okay, welcome back. You're watching India Market Close, and we're definitely having a seesaw kind of a day. We talked to you about this on the opening show this morning, that we're looking like we're going one step forward and two steps back. So you're about 200 odd points off the day's high at 23,425. But also pull up the chart to show the current price if we can. And look at what's happening with the Nifty. So it's not a big plunge, but definitely losing momentum from the day's high, just about 20 points down right now. What's doing relatively okay are private banks. I actually want to look at some of those private banks on the intraday and see where the pain is coming in from. Let's pull up Nifty contributors as well if we can. HDFC Bank is doing okay, about 1% up. But in Nifty contributors, what's dragging down the markets even more is an Infosys. Bharti Airtel has also joined in. Can you give me the intraday chart of Bharti Airtel? Just want to take a look at what's happened there. Is a bit of a dive come from Bharti Airtel? Yes, there it is. That's one of the culprits there. Infosys was anyway showing a 2% weakness. Let's pull up the intraday of Infosys as well. And yeah, that's continuing to be weak. But yeah,
RIL as well.
Reliance Industries is already weak, but has it dropped more? Yeah, it's at the lowest point of the day right now. So it's just some of these heavyweights which is showing that pain coming in. But the reason private banks are up is because of what they have announced today. After RBI's measures and leeway on FCNRB deposits for NRIs, banks have started hiking interest rates for this particular product. These are basically special deposits that NRIs can make. So these rate hikes have been announced with HDFC Bank, Yes Bank, already increasing the rate. Punjab National Bank has increased it as well. Piyush joining in with more details.
Banks have actually started hiking the interest rate on 3 and 5 year tenure FCNRB deposits. We have seen banks such as HDFC Bank, AU Small Finance Bank, Central Bank of India and Yes Bank and CSB Bank hiking their FCNR deposit rate. These are the first lenders to take the lead in hiking the FCNR deposit rate. Now depending on each bank, the hike that has been done is around 175 to 325 bips, which is on the higher end of the expectation that economists had. And if we see HDFC Bank and Central Bank have raised their FCNR deposit rate to up to 6%, whereas Yes Bank and AU Small Finance Bank and CSB are offering an interest rate of as high as 7.1% on 3 and 5 year tenor FCNR bonds. Now, why are banks going aggressive? First, lower borrowing cost, as the RBI is managing all the hedging costs for these fresh FCNR deposits. And second, the more deposits the banks get, the more credit they can provide to the financial system. And apart from that, we have seen the RBI has also given some dispensation on these deposits with regard to SLR and CRR. So banks are finding this a very attractive sort of offering for their investors, and are offering rates as high as 6 to 7% on the fresh FCNR deposits.
Today morning only, in fact, first you are the first channel where I am going to announce. Today morning we had that ALCO committee meeting, and we have finalized the rate for 3 years, 4 years and 5 years. Up to 1 million FCNR deposit rate will be 6%. 3 to 4 year period will be 6.05, and 4 to 5 years it will be 6.10.
Okay, Shivangi Sada joining us and on this leg of the conversation. She's analyst, equity derivatives and technical at MOFSL. Welcome, Shivangi. Sudeep Bandyopadhyay, market expert, also joining us on this leg of the show. Sudeep, I'm going to talk to you about private banks simply because, we've addressed that story right now. FCNR deposit rates have been going up. You've seen a lot of those banks talk about what those rates are. For 5 years, for Punjab National Bank, for example, it's 6.10%. Now, this is better than what the street was also expecting in terms of the kind of hikes they would give. Do you see this as an advantage for banks overall?
Fantastic opportunity for the banks. I would especially single out HDFC Bank. They had a structural problem post the merger with HDFC Limited, and they needed to mobilize and still need to mobilize quite a lot of deposits to be in a position to continue their lending and grow the loan book. And there were challenges in deposit mobilization. So this is fantastic for HDFC Bank, and I expect them to go all out and garner as much as deposit as possible. So offering attractive interest rate to NRIs for this deposit scheme is definitely warranted. This actually brings down the overall cost of funds for the bank because RBI is taking the hedging costs. Some favorable dispensation on the SLR, CRR also will help. And of course, this will enable them to lend more. It's also good for all the other banks, including PSU banks. And that's why we are seeing this excitement in deposit mobilization. As a country, I think through this FCNR plus the ECB scheme, we are looking at $78 to $80 billion mobilization, which will kind of repair the deficit which we have in our current account.
Okay, I want to get Gurmeet's view in it as well. He tracks the space closely. He's managing partner and CIO at Complete Circle. Gurmeet, we're talking about banks here. We just had one comment that HDFC Bank could be a key beneficiary because of what has happened in these FCNRB deposit rates going up. Do you concur with that? Do you see any clear advantage to some of these banks? And does PSU have it better than private or the other way around?
No, I think it's this. I mean, anybody with good NR presence, NR book stands an advantage. I think in relatively smaller size bank, I think Federal Bank has a very strong NR book, especially Middle East. SDFC and ICICI also have both in Southeast Asia as well as overseas, ICICI in particular. So there'll be some advantage. We need to see leverage some of these banks offer vis-a-vis the foreign banks. A lot of these foreign banks run a country-specific line, and they are able to offer far more leverage, 6, 7, 8, 9 times sometimes to arrive at a double-digit yield on dollar. Borrowing money in Japanese yen, LIBOR plus 100, 200 basis points, and then giving some spread. So we need to see how much. I think MNC banks also will mobilize a lot of deposits, the likes of HSBC, Standard Chartered in particular. And some of the Indian banks also will do. The game is more of leverage here, but I think it's a clear plus in terms of mobilizing some of these deposits with RBI hedging it and getting some cost of funds also lowered. Even some of the PSU entities will take the ECB route in terms of doing dollar-denominated bonds and do that. So I think it will be a win for most of the sector. But banks like ICICI, HDFC Federal in private banks have a larger NR base and may get slightly higher benefits.
Gurmeet, hi, Alex here. So a couple of questions, right? From the bank's perspective, you just described why this is beneficial. All of these guys are doing 300 basis points of an increase in the rate. So they're effectively passing on the benefit of that currency hedge being provided by the Reserve Bank, right? So that's one. Two, from the perspective of the NRI, how much can you explain why this is something that is very positive and should be considered?
So a lot of these NRs, so RBI has also allowed that deposit to be used as collateral for giving credit. If you see the operational guidelines, which means, let's say, for example, Japanese LIBOR is, let's say, 3%. I'm just taking, it could be anything. It could be even in Swiss francs, or depending on where the cost of funds is lower for that particular bank. You can borrow at, let's say, a particular LIBOR rate plus 100, 150 basis points, where the cost of borrowing could be, let's say, 4.5%. And you're getting, let's say, an FCNR deposit at, let's say, around 6%, from 3-4% to 6%. And so you have a spread of 1.5%. And if you leverage it number of times, if let's say you do 6-7 times leverage, you can go to double digit. With obviously you run a bit of a currency risk in terms of sharp movement here, but over a 3-year period, let's say you're doing the deposit, a lot of that gets negated. So, and here MNC banks tend to offer more leverage than Indian private banks, and that's why I think some of the MNC banks will also mobilize, and depending on and every bank has a country-specific line, like X $billion for HSBC or Stan Chart. So I think the game is more leverage rather than, say, for 6% dollar deposit, non-leverage, it's not as appealing. You are still getting 5% on some of the money market funds in dollar terms, right? So I think once the leverage comes, this 6 becomes 8, 9, 10, 12, depending on the number of times of leverage, and that's how it becomes more attractive.
Okay, so on the leverage rate, and then as you've described it for the banks that will benefit, those that have a pretty substantial NR presence, is this 1 year down the line going to be a significant benefit in your opinion on the cost of funds standpoint and margins as well? Because if we have hit the bottom of the rate cycle and we're heading higher even at the end of the year, one would assume that even NIMs might have bottomed out?
It looks like, but as I said, the benefits will take time to accrue. There has been a little bit of an upward pressure on yields, which if you see the short-term borrowings from banks have gone up quite substantially in Q1. Look at the 3-month CDs at which banks are raising money, and 1 year short-term borrowings banks are doing at a CD level. Those prices have gone up. So may not reflect in this quarter, but definitely once you, assuming we do mobilize 30, 40, 50 billion of dollars in the banking system, eventually it will have an impact of, at least 5-10 basis points on NIMs for banks which are able to do that. As I said, with higher NR base and who are able to mobilize a higher share.
Gurmeet, what is your pecking order for banks in this context, and who will do the best?
I think federal banks should do well. There's also been a change of leadership there, and it's been an outperformer. Assuming, and I think ICICI Bank should also do well. But the issue with larger private banks has been FII selling, Tamanna. And I think it's now reaching a point where, to me, it's not making much sense. But end of the day, markets are supreme, and you have to respect what market does. And I think this relentless FII selling, and they still own a lot of banks right now, especially the top banks, including some of the PSU banks. And whether they are making space for SpaceX, whether it is an AI trade, fact of the matter is we are losing 4,000-5,000 crores a day, and a lot of it is from these top private banks and IT companies and the Reliance and Airtels of the world. And I think this has to stop for all these things to start getting reflected on the screen. Hopefully, I think we are reaching to a point where I think it's looking oversold, but let's see how it goes. Very difficult to say at what time the tide will turn.
Okay. Thank you so much for that, Gurmeet, and for joining us with those views. We're just about 8 minutes left to go for markets to close. Shivangi, any BTST ideas?
Absolutely. We've seen the banking stocks in buzz. So, of course, the BTST would be from this space. Of course, we've seen a little bit of a fall from the higher levels, but overall Axis Bank looks quite positive, and it is, on the verge of the previous hurdle zones. It did surpass it today with a little cool off in the last hour. This one looks positive with good amount of short covering. So Axis Bank on radar for the next target of 1350 immediately, and with a support of 1290 levels.
Okay. I also want to get a nifty view from you, Shivangi, after the kind of loss that we've seen in the last half an hour of the highs of the day, actually at the day's low just a few minutes ago on the Nifty. The Nifty and the Bank Nifty, what are the levels that you're seeing? Both have given up a lot of the gains through the day.
So overall, we've seen volatile cues are continuing in the market, but Nifty, if we talk about, it has been kind of underperforming from the last few sessions. In fact, we've seen that from the last 8 odd sessions, follow-up has not been respected here. So some bit of consolidation and pressure would continue over here. 23,000 would be an important base to look at on an immediate basis. Positional supports are at 22,850 levels, with an upside hurdle intact at 23,550 marks. Talking about Bank Nifty, here, of course, we've seen some bit of profit taking at the higher levels, but strength is likely to continue over here. We've seen a good amount of buying interest from the last 5 odd trading session with buying at any small declines. In fact, very smart buying here. So heavyweights should do the heavy lifting, and the next levels that I'm looking at for Bank Nifty is 55,750 and then 56,000 levels with a support near 54,750 marks.
Okay. All right. We've been talking about auto for a few days now, and that's on the back of pretty robust retail sales data that has come through in the face of quite a few challenges. So let's head across to Puneet for a sharper look at what's working in the sector and the few themes that are at play. Puneet?
Well, thank you for that. The 3 ones that we're picking out, 8 months post the GST rate cut, you're still seeing structural themes being formed in. And these are the ones, 2 of them in the car market that we are seeing a structural change happening. Rural sales outpacing the urban markets now. CNG and EV car sales are booming because of fuel price hikes amongst others. And the two-wheeler EV market has also jumped by 300 basis points for the EV space specifically. So when you look at the first key point and what it actually means, this is the growth that you're seeing, 30% in the rural market on a YY basis for the month of May, compared to May 2025 versus 18% for the urban markets. Overall growth very strong at 23%. What it actually means is that the small car market has now come back very strongly after a hiatus of almost 6 years. You've also seen dealers point out that there will be a coexistence now along with the SUV mix, and Maruti's market share has inched up meaningfully in the month of May to 40.9 versus 37.8 on a YY basis. The second key one is on CNG, and what you have to watch out for is the numbers. So it's jumped to 23% of overall car sales out of 100 that gets sold in the country versus almost just 20% in the month of May last year. And then is the last row for EVs, jumped to 6.6% versus 4.5%. What this data means is that out of 10 cars, 3 of them are now in the cleaner and alternate fuels. CNG is contributing 30% of that, and the fuel price revision has actually accelerated this shift. And a big beneficiary, surprisingly, along with Maruti, is Tata Motors. Massive market share shift of 160 basis points on a YY basis. And finally, the third key trend on the two-wheeler EV space. Majority, of course, being driven by petrol, but the mix has now jumped to an all-time high of 9%, which was 6% earlier in the same time last year. And what this means is that structural growth in EV is here to stay, and TVS and Ather are gaining market share. Finally, what you have to watch out for is the price hikes will be impacting demand. That will be something to watch out for. But the EV momentum for entry-level cars and two-wheelers continues to be strong. But what's very interesting is hybrids have not seen that growth yet. So globally, it's a play, but still yet to play out in India. And that's the key takeaways from what the sales data is pointing out from people like you and me purchase right now.
Okay. Will those purchases stay up? Really is the question. Sudeep Bandopadhyay, May was a great month for the entire OEM pack. We haven't seen the impact yet of any consumption pain, West Asia crisis, fuel price hikes. All of that is not being seen yet. Would you bet on this momentum continuing?
Well, to some extent, yes, but I'll be a little cautious as well because, we are heading into an El Nino induced monsoon deficit, which will have definitely some negative impact on rural consumption. And as we have just seen, the rural demand has been growing much faster. So I estimate that there will be a bit of a slowdown as far as rural demand is concerned. But these trends will continue. I completely agree with the trend that small cars, SUVs, as well as EVs will continue to race ahead of the other modes. As far as two-wheelers are concerned, we do like Bajaj Auto. They are in EV. They also have a significant export business, and with the dollar doing what it is doing, we believe that Bajaj is in a very, very strong position. We also like TVS and Ather. I think all these three from a two-wheeler perspective can be looked at. As far as passenger vehicles are concerned, we do like Tata Motors PV because at the transition where they have been a beneficiary. We also like Maruti
as well. Sudeep, apologies, I'm cutting you off because it's just about a minute to go. But thank you so much for joining us today and for speaking to us and to you as well, Shivangi. But we're ending likely at the low point of the day with cuts of about 0.1%, but this is the benchmark Nifty 50. The problem lies in the broader markets, and that is evidenced by what we're seeing here. This advanced decline ratio that has worsened even in the last 1 hour.
Pull up the intraday of the mid cap and the small cap, and you'll see where the cuts have come in from. Here, there you have it, that deep dive over there on the mid cap 150, and the small cap actually pretty much the same, all closing at the lowest point of the day. So if you were closing at the highest point of the day yesterday, it's completely reversed. Let's pull up the Nifty heat map quickly, and then we'll get to the sectoral heat map to show you where the pain points are. Nestle, HUL have now come to the top of the pack. Axis and Kotak Mahindra Bank holding on, but Hindalco, the cuts have deepened. So has Coal India, so has Infosys now closing 3% down. So the worst has, the weak ones have gotten even weaker. India VIX is frankly okay, so no big issues there. Brent is still under 92, but the sectoral heat map will also give a clearer picture. Alex.
Yeah, let's pull that up, in fact. And you will notice FMCG on the top of the list, but gains of just about 1% or so. But the energy pack, and that's because of Reliance Industries, that is down as much as 2%. Reliance Industries ending the day with cuts of about 0.9%. So the swing intraday is as much as 3% from the high point to the down, and media losing ground. Realty once again making it to the bottom of the pack, down about 1.7%. And metal as a cohort, as a pack, has done particularly badly today. Whether you talk about aluminium or you talk about the ferrous metal names, they've all done badly.
Let's pull up the top gainers and losers on the broader markets before we wrap out of the show today and look at what's happening there. Okay, the rupee was actually a good chart to show. We can show it for a few seconds more if you want to go through it. But the rupee is ending okay, slightly off the best levels of the day, weakening a bit, but 95.26. Let's go to the BSE gainers and losers while we're at it. And Oil India actually is the one which has gotten hammered with a very critical note from Morgan Stanley. NLC, their offer for sale has now opened up. They've expanded it another 6% down. Manappuram Finance is mirroring what's happening with gold prices globally, as well as some other concerns about whether there's going to be scrutiny from the finance ministry. Sterlite and HFCL are both the kind of stocks that have boomed so much and now seeing a selling spree. Rajesh Exports, those concerns about what's been happening with Rajesh Exports continue after that SEBI order, and KNR Construction coming off as well.
Yeah, and among the gainers, you have Easy Trip Planners that stands out as one of the top gainers. You know, I've seen CCL products make it to this list quite a few times. We'll have to speak to the management to see what is really happening. Up about 4%. Raymond is doing okay. AB Sun Life, no real big theme that you say. Berger Paints is up about 3.4%, I guess, to a certain extent. You can say that crude is no longer above $100.
Fertilizers, a little bit of fertilizers.
Okay.
Yeah, Chambal Fertilizers doing okay.
Chambal maybe. And Berger Paints, I would think, is the crude angle. Maybe. It's not as high as it has been in the past. That's the only reason I would think. And the ability to pass on price increase.
Okay, so a bit of a mixed market closing, fairly muted. Important data coming out tonight. The US CPI data for May will be crucial to watch out for. That will also inform what global markets look like overnight and maybe a bit of the morning. But otherwise, we'll have another day where we're perhaps just chugging along. But for now, that's all the time we have from Alexa and the team that put the show together. Thank you for watching. Stay tuned. All of the action on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
India is rewiring. The way it builds, the way it connects.
विकसित भारत के निर्माण के लिए जरूरी हर क्षेत्र में भारत तेजी से काम कर रहा है।
From infrastructure to digital access, from reform to real impact. But the big question is, what will define the next India? NDTV Ignite, the Future India Summit. A closer look at governance, growth and the future of a new India on the NDTV network.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We've got a fantastic jury.
Good evening, you're watching Market Express with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that has happened thus far in today's trading session. But first things first, let's take a look at the markets then. A muted day on Dalal Street largely is what you were looking at. Benchmarks also really ended flat. Nifty holding above that 23,200 level despite seeing some bit of correction, especially towards the second half of the session. Now, when you talk about Sensex, managed just a marginal uptick, as you can very clearly see on your screens, as well, and broader markets also underperformed. Let's also talk about a tale of two sectors on the street today. FMCG names clearly in charge, remaining resilient despite an otherwise tepid market and leading the gains with steady demand plays also coming in. On the flip side, metals and energy stocks dragging their feet, really weighing on the overall momentum. Like I said, let's talk about FMCG stocks in greater detail now, because they led, in fact, the market higher, especially in the first half of the session as easing crude oil prices improved sentiment across the sector. The rally was driven by renewed investor interest in domestic consumption plays and defensive businesses amid broader market uncertainty. Heavyweights including HUL, Nestle, ITC were among the key gainers here as well, and you do have buying interest that also extended to names like Britannia, Dabur, Marico, Godrej Consumer Products and Colgate Palmolive. Lower input cost concerns and improving demand expectations really helped the sentiment across the FMCG space. Let's also talk about the entire fertilizer pack that was in focus. In fact, India's fertilizer subsidy bill could be headed for a record high, and the fertilizer ministry is seeking a 100% hike, taking the allocation from somewhere close to 1.7 lakh crore rupees to nearly 3.4 lakh crore rupees for FY27. The proposal is currently under review with the finance ministry, but a higher subsidy outlay would really help shield farmers from some of the volatile global fertilizer prices that we've seen and also rising input costs amid the Middle East conflict. Let's also talk about Afcon's Infra that has bagged a major order for the upcoming Vadhavan port in Maharashtra. The company has received over 5,000 crore rupees in terms of this contract that I'm talking about to build a 10.14 kilometer long breakwater. And once completed, this will be the second longest breakwater in the world. Let's also move on and talk about something like a Quality Power that is making it to our list. About 1% uptick coming in on this particular counter, set to acquire 100% stake in Win-Win Specialty Insulators. And the acquisition really strengthens its capabilities with insulator manufacturing of up to 1200 kV as well. And it also adds a fully automated production facility along with somewhere close to a 47-acre industrial land parcel. Let's also talk about Concord Biotech that was buzzing away in trade with about a 4% uptick coming in on the back of US FDA's approval for a drug that is used to treat autoimmune conditions, including rheumatoid arthritis as well. And the approval really provides the company access to a significant opportunity in the United States where the market for the therapy remains sizable. Now, the development strengthens the company's presence when it comes to immunology segment and also expands its portfolio when it comes to regulated markets. The company, in fact, is expecting this particular approval to really support future revenue growth while enhancing its position in the global specialty pharmaceutical space. And that's exactly why you saw the stock also buzzing away in trade. Let's also move on and talk about CleanMax in terms of the shares. Really continuing their strong upward momentum, as you can see on your screens, with that almost 11% gain really coming in, extending gains for a 7th straight trading session as well. And the stock has rallied more than 20% over the past week, supported by positive investor sentiment, some of which you can very clearly see being reflected on your screens as well with that shade of green following a major partnership announcement. When you talk about this particular company, it's partnered with Meta to develop renewable energy capacity of close to 900 megawatts, marking a significant step when it comes to expanding its clean energy portfolio. And the agreement is also being viewed as a key growth catalyst when it comes to this particular counter, reinforces the company's position when it comes to the rapidly growing renewable energy sector as well. Let's also move on and talk about reports really suggesting that the government is open to fresh bids for the IDBI Bank stake sale and may also ask existing bidders to really revise their offers. Now, the government is also expected to cut the reserve price substantially to make the deal more attractive while remaining committed to privatizing IDBI Bank and will consider all possible options to really push the sale forward. Let's move on and talk about Inox India, and the shares really surged sharply, as you can see on your screens. 10.2% uptick coming in, extending their winning streak to a 7th consecutive session. And the stock has gained nearly 40% during the period, driven by strong investor interest following a key order win also from a US-based space company. The development has strengthened confidence when it comes to the company's growth prospects, particularly in its specialized cryogenic solutions business. And management, in terms of some commentary coming in from them, they've indicated that similar high-value orders could really materialize in the coming quarters, further improving visibility when it comes to future revenue growth and order inflows. Let's also move on and talk about Macquarie, that has reiterated its outperform rating on Lenskart and raised both its earnings estimates and target price, and citing some of that sustained growth momentum in the country and improving international performance. The brokerage is believing that the growth tailwinds seen over recent quarters are sustainable and also expects some of that strong EBITDA expansion also over the coming years. Macquarie also, in fact, highlighted the promise of Lenskart's international business, noting that performance is tracking ahead of what the company achieved in India at a similar stage. The brokerage, in fact, is also highlighting that they're expecting earnings to see significant growth over the forecast period. Let's move on and talk about Nuvama, that has maintained its buy rating on Indigo and raised its target price, citing the airline's strong long-term growth prospects. The brokerage also believes that Indigo, in fact, is well positioned to turn near-term challenges into opportunities, supported by structural growth in air travel demand. International operations are expected to be a key growth driver here as well, and the airline's large aircraft order book, also something that they talked about, providing strong visibility on future capacity expansion. Nuvama also highlighting that Indigo's cost leadership and growing ancillary revenue opportunities, which could further strengthen profitability over time, is also something that makes it to their radar as well. Let's also move on and talk about JP Morgan, that has maintained its overweight rating when it comes to HUL following a management interaction. So about a 2% uptick coming in on this particular counter. And you do have JP Morgan really highlighting some of that confidence in the company's growth outlook. Management is reiterating a stable demand environment supported by calibrated pricing actions and a resilient rural franchise, continued urban premiumization as well, in the company's organizational restructuring. Let's talk about that as well, because that paired with focused omni-channel strategy are really expected to improve execution across business segments, and that's the word coming in from JP Morgan. In terms of some other key growth drivers, they're talking about that being premium beauty and well-being brands as well, liquids within home and personal care, and the expanding foods portfolio. So that's something that makes it to their radar, and they're also believing that an improving revenue growth trajectory could really act as a next major catalyst for the stock. Let's also keep it going with brokerages and talk to you about JP Morgan in terms of their stance coming in on Aegis Logistics, and they're maintaining an overweight rating here, talking about raising the target price as well following a management interaction. And the brokerage is noting that LPG supply conditions are steadily improving with shortages easing. In recent months, management expects healthy EBITDA levels to be sustained through operational efficiencies and improved procurement. Aegis, in fact, has also diversified its LPG sourcing beyond the Middle East, strengthening supply security. And you do have the brokerage really highlighting strong growth prospects when it comes to gas distribution volumes, supported by capacity expansion and infrastructure projects, and has consequently also raised its earnings estimates for the coming years. Let's move on and talk about India's fuel consumption that dropped 6.5% in the month of May, hit by high prices and global supply concerns amid the Iran conflict. You do have petrol and diesel that saw muted growth coming in. Aviation fuel demand stayed flat, in fact, and airlines cut flights, and that's the entire context that you're looking at for this particular fuel as well. But on the other hand, cooking gas consumption fell sharply, and naphtha demand really plunged with more supply redirected towards LPG production. Let's also move on and talk about DGTR saying that India is awaiting an administrative review of steep US duties on solar cell imports, in fact, imposed in the month of February. These include tariffs of up to 126% on shipments coming in from India, Indonesia, and Laos as well. And officials are adding that Indian exporters are likely to participate in upcoming hearings as part of the US probe. The government, in fact, is closely tracking this particular case, with the review outcome expected to really determine the way forward for India's solar exports to the US. Let's move on and talk about India's also considering additional steps to protect its steel sector as well, including possible anti-dumping and safeguard duties. You do have officials, in fact, saying that more measures are currently under investigation, even as several trade remedies are already set in place. Now, these include ongoing efforts to really shield domestic producers from cheap imports. However, authorities caution that fresh anti-dumping and safeguard duty probes typically take up to a year before any final decision is implemented. Let's also move on and talk to you about some business news. Mutual fund inflows slowed noticeably in the month of May, reflecting a more cautious investor mood amid market fluctuations. So you do have equity fund inflows that really declined sharply from the previous month, with both mid-cap and small-cap categories witnessing a moderation in fresh investments, while retail participation remained strong. You do have SIP contributions that saw a slight month-on-month dip, also about 1%, after hovering near record levels previously. Passive investing also lost a little bit of momentum, with index fund inflows really softening compared to April. Meanwhile, gold ETFs, that's also a very important story here because they've recorded net outflows after attracting strong inflows in the previous month. The latest AMFI data is suggesting that investors continue to participate in markets but are becoming a little bit increasingly selective in their allocation. Let's also talk about Anthropic that has launched Fable 5, its latest AI model designed for coding, analytics, and even advanced reasoning tasks. The company said that the model incorporates built-in safety guardrails and places restrictions when it comes to certain cybersecurity and biology-related queries. Now, Anthropic highlighted significant improvements when it comes to coding performance, analytical capabilities, and complex problem solving as well. Access to the model will initially be limited to select organizations under its Project Glasswing initiative. The launch underscores the intense pace of innovation and competition across the rapidly evolving AI industry. Let's talk to you about some national news now. Heavy monsoon rainfall across Telangana led to a tragic incident in Hyderabad where 2 people in fact lost their lives due to electrocution in an area as well. And you do have authorities really saying that a low tension street light cable was accidentally damaged during drain excavation work, later remained submerged in rainwater accumulated on the road. The victims reportedly stepped into the waterlogged stretch without realizing a live wire was lying beneath the surface. Despite rescue efforts, unfortunately, by local residents, you do have both the victims losing their lives. The rainfall also triggered severe traffic congestion across several parts of the city. Let's also move on and talk about the Kerala government that has announced free bus travel for women on ordinary KSRTC services under its flagship welfare initiative. The scheme is going to be rolled out from June 15th and will be available to all women without any age restrictions. The state government, in fact, is going to be reimbursing the Transport Corporation for the cost of the scheme in addition to the existing financial support already provided to KSRTC. The government expects the initiative to really boost public transport usage and improve the corporation's revenue performance over the coming months. Let's move on and talk to you about what the IMD is saying about weather alerts across Kerala and Telangana as the southwest monsoon really remains active. An orange alert, in fact, has been issued for parts of Kerala with forecasts of thunderstorms, moderate rainfall and strong winds reaching speeds of up to 50 kilometers per hour. Now, several districts are expected to witness adverse weather conditions through the day. The IMD has also issued a yellow alert for isolated heavy rainfall when it comes to multiple districts of the state. Meanwhile, heavy rain warnings, in fact, remain in place when it comes to 4 districts in Telangana, raising concerns over localized flooding and travel disruptions. The Union Cabinet has adopted a resolution congratulating PM Modi after he became India's longest continuously serving elected Prime Minister. The milestone was achieved after completing 4,399 consecutive days in office, surpassing the record previously held by India's first Prime Minister Jawaharlal Nehru. During the cabinet meeting, in fact, in New Delhi, ministers gave PM Modi a standing ovation and hailed his record-breaking tenure. The resolution recognized the achievement as a significant milestone in India's political history. Let's get you some international news now. The United States has launched airstrikes on Iranian targets after an army helicopter, in fact, crashed near the Strait of Hormuz, an incident that President Trump blamed on Tehran. According to U.S. Central Command, you do have fighter jets that targeted air defense systems, ground control stations, and surveillance radar sites in what Washington described as proportional response coming in to recent attacks on U.S. forces and commercial shipping. Iran, in fact, confirmed strikes near Bandar Abbas and Qashm Island and vowed really to respond. The latest escalation has also raised concerns over regional stability, ceasefire efforts, and potential disruptions to global energy supplies. And the US House of Representatives has approved a major funding bill for immigration enforcement, ending a prolonged political deadlock over resources for border security agencies. The legislation, when you talk about it in greater detail, in fact, it's providing funding for US immigration and customs enforcement and the border patrol through the remainder of President Trump's administration. The measure was passed largely along party lines and now heads to the White House for the president's signature. The vote highlights the continued political divide over immigration policy and border management in the United States. Let's also move on and talk about the world that has recorded its second hottest May since modern records began, according to the European Union's Copernicus Climate Change Service. Global temperatures remain well above pre-industrial averages, reflecting the combined impact of climate change and the emerging El Niño weather pattern. Western Europe endured one of its most intense early season heat waves on record, while parts of the Pacific Ocean in fact registered exceptionally warm temperatures. Last month also saw deadly floods in China and Turkey. Scientists are warning that El Niño is expected to strengthen in the coming months, increasing the risk of extreme weather, disrupted rainfall patterns and higher global temperatures worldwide. Let's also move on and talk about Northern Ireland, that witnessed a second night of violent unrest after a Sudanese man was charged in connection with a knife attack that left a man in his 40s with serious neck and head injuries. Masked groups targeted homes, set vehicles ablaze and clashed with police across Belfast and some of these other locations as well. Authorities are saying that several families were forced, in fact, to flee their homes amid the violence, which has been widely condemned as anti-immigrant in nature. Political leaders have appealed for calm and urged communities not to allow tensions surrounding the criminal case to really escalate into further disorder and attacks. Let's also move on and talk about a rare public protest in Afghanistan's western city of Herat turned violent after Taliban police in fact used live fire to disperse demonstrators protesting the detention of women accused of violating strict Islamic dress codes as well. Witnesses and protesters in fact said that both men and women joined the rally following reports of arrests targeting women deemed to be improperly really wearing the hijab. Medics reported fatalities and several injuries, although Taliban authorities denied any deaths. Officials acknowledged responding to the protests, saying security forces acted to maintain public order. The incident has renewed attention on restrictions imposed on women under Taliban rule. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
Is rewiring. The way it builds, the way it connects.
विकसित भारत के निर्माण के लिए जरूरी हर क्षेत्र में भारत तेजी से काम कर रहा है.
From infrastructure to digital access, from reform to real impact. But the big question is, what will define the next India? NDTV Ignite, the Future India Summit. A closer look at governance, growth and the future of a new India on the NDTV network.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairman of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the
Market loses steam in last hour of trade as benchmarks give up most gains while broader indices turn negative. Nifty holds above 23,000 mark while Nifty IT falls for the 6th consecutive day. Rupee ends near yesterday's closing after whipsawing in trade, and the currency closes at 95 rupees 27 paise against the dollar after hitting on the intraday high of 95 rupees 8 paise against the dollar. Equity mutual fund inflows saw a sharp slowdown in May, falling from the previous month's levels. SIP contributions also eased marginally, while gold ETFs witnessed outflows as investor preferences shifted during the month. Fertilizer stocks surged after reports that the government may double this year's fertilizer subsidy outlay. The move comes as the West Asia conflict drives up the global nutrient costs, raising expectations of stronger policy support for the fertilizer sector. Banks raise FCNRB deposit rates after RBI's support. HDFC Bank sets FCNRB deposit rates at 6%, while Yes Bank keeps it at 7.1%. RBI support drives returns higher, attracting fresh foreign currency inflows, strong interest. Oil prices remain volatile amidst the renewed tensions as Iran downs US military aircraft and US retaliates to that. But Brent crude hovering around $91 a barrel. Prime Minister Narendra Modi surpasses Nehru's record as the longest continuously serving elected Prime Minister of India. Cabinet passes a resolution applauding Prime Minister for becoming the longest serving Prime Minister for consecutive terms. Hello and welcome to Profit 360. I'm Nisha Podar, and over the next half an hour, I'll tell you all about the important developments of the day so far. And as usual, we'll begin with the market update. It was a quiet day on Dalal Street, especially in the way it really ended. When the benchmarks really ended flat today, Nifty held above 23,200 despite the late selling pressure. While the Sensex, that posted just marginal gains, broader markets, they lagged throughout. Now, sectorally speaking, well, FMCG emerged as the top performer while real estate led the losses today. Let's take it across to my colleague Parth, who's joining in with the entire market action for the day today. Pat, tell us.
Nifty has closed flat today with Nestle India and Kotak Mahindra Bank being the top gainers, gaining over 2%, while Hindalco Industries and Coal India were the top losers, losing over 3.5% today. The broader market underperformed the benchmark, with Nifty Midcap 150 closing in red, down by over 1.2%. This was led by Oil India and NLC India as well. Oil India saw a downtick of 10%, while NLC India was down by almost 6% today. Nifty Small Cap 250 also closed in red today, down by over 1%. This was led by Gujarat State Petronet and IFCI, both of which saw a downtick of 7% today. Moving on to the sectoral side, we saw all the sectors ended on a red note except Nifty FMCG and Nifty Financial Services. The top gaining sector today was Nifty FMCG, up by almost 1%, led by Nestle India and HUL, gaining over 2% today. On the other side, Nifty Real Estate was the top losing sector, down by almost 2%, led by Anantraj and Lodha Developers, both of which were the top losers in Nifty Realty, down by over 3% today. Now moving on to the sectoral trends as well, Nifty IT has fallen for the 6th consecutive day, while Nifty Financial Services and Nifty FMCG managed to close in green for the second day in a row.
All right. Thanks, Parth, for the entire roundup. Let's also get a market expert view. We had Pratik Agarwal today, who says that the growth stories in India are really currently concentrated in the small caps rather than the large cap stocks. Listen in.
So let's not talk of it in terms of large, mid, small. If you speak to sales guys who speak to FPI, foreign brokers, etc., what they will tell you, first question they ask you is, what are your AI stories? Now, when they say this, it means what are your growth stories? While we may not have so much of AI, but we have lots and lots of growth stories. Just that they are not there in the indices. So FPI never came to India to buy value. It doesn't exist in this country.
All right, so that was all about the equity markets, and money market also equally important with the rupee movement. Well, rupee closes at 95 rupees 25 paise against the US dollar today. Now, the domestic currency, remember, paired the gains, but trades remain cautious amid the global currency moves, and also remember the evolving risk sentiment. Overall, the rupee traded largely near the previous lows with limited directional cues today, but it was comparatively a good day, especially with a lot of measures being announced by the Reserve Bank of India. Well, talking about the central bank after RBI's measures and the leeway on FCNRB deposits for the NRIs, remember, well, banks have started hiking the interest rates for the same, with HDFC Bank, Yes Bank already increasing the rate. And Piyush, my colleague, is right here with more details on what this development entails and what's the impact. Piyush, tell us.
That is right. Banks have actually started hiking the interest rate on 3 and 5 year tenure FCNRB deposits. We have seen banks such as HDFC Bank, AU Small Finance Bank, Central Bank of India, and Yes Bank and CSB Bank hiking their FCNR deposit rate. These are the first lenders to take the lead in hiking the FCNR deposit rate. Now, depending on each bank, the hike that has been done is around 175 to 325 bips, which is on the higher end of the expectation that economists had. And if we see HDFC Bank and Central Bank have raised their FCNR deposit rate to up to 6%, whereas Yes Bank and AU Small Finance Bank and CSB are offering an interest rate of as high as 7.1% on 3 and 5 year tenor FCNR bonds. Now, why are banks going aggressive? First, lower borrowing cost, as the RBI is managing all the hedging costs for these fresh FCNR deposits. And second, the more deposits the banks get, the more credit they can provide to the financial system. And apart from that, we have seen the RBI has also given some dispensation on these deposits with regard to SLR and CRR. So banks are finding this a very attractive sort of offering for their investors, and are offering rates as high as 6 to 7% on the fresh FCNR deposits.
All right, thanks, Piyush, for all those details. Now, following RBI's recent measures to really boost the foreign currency inflows, well, Punjab National Bank has announced the revised FCNRB deposit rates. Let's listen in to their chairman and MD, Ashok Chandra, on the rationale.
Today morning only, in fact, first you are the first channel where I am going to announce. Today morning we had that ALCO committee meeting, and we have finalized the rate for 3 years, 4 years and 5 years. Up to 1 million FCNR deposit rate will be 6%. 3 to 4 year period will be 6.05, and 4 to 5 years it will be 6.10.
All right, so that's coming in from the banking space. Let's hop across to the equity mutual funds. And the equity mutual fund inflows, that saw a sharp slowdown in the month of May. This is data that is really revealed by AMFI, and falling 40% on a month-on-month basis to 22,900 crore rupees, according to the AMFI data. Now, investor sentiment was weighed down by, remember, the heightened market volatility as well as the global uncertainty that we have been seeing. Let's now go over to my colleague Alex, who breaks down these numbers and gives us the trend of the investor sentiment from the AMFI data. Alex.
Some key takeaways from the mutual fund data that was put out just a short while back for the month of May. The bad news first. The equity inflows, and this is active equity. This is where there is a fund manager making decisions about what stocks to buy. That category as a whole has seen net inflows fall very dramatically by as much as 40% to 22,908 crore rupees compared with the previous month, that is the month of April. Now, several categories within that have actually seen a drop, and most significant though is the flexi cap category, where the net inflows have halved. One good thing here is that the inflows into small cap and mid cap as a category have remained above the 4,000 crore mark on a net basis. What has happened here though is that fresh gross inflows have dried up quite significantly. Whereas they stood at 70,000 crore rupees in the month of April, they've fallen to about 57,000 crore rupees in the month of May, and the redemptions have actually gone up just a tad bit as well to about 37,000 crore rupees. Now, what is beyond that? You have gold ETFs and silver ETFs where inflows have dried up quite considerably. In fact, gold ETFs have seen an outflow of 725 crore rupees compared with an inflow of about 3,040 crore rupees in the previous month, and a high of 24,000 crore rupees in the month of January. There's also an important data point in the way of SIPs, and here's where this is the good news, and I'll end with that. SIP inflows have remained robust, and that is a good thing. They've stood at 30,954 crore rupees compared with 31,115 crore rupees in the previous month. So the regular investments have continued. Seemingly the lump sum investments have dried up just a tad bit, and that could be on account of what we saw in the markets in the month of April. They hit a bottom at the end of March, but across the board they gained quite considerably in the month of April. Whether you had the benchmark Nifty 50 gaining about 7 to 8%, or the mid-cap index gaining about 13%, and the small-cap index gaining a further 17%. Now, because of that, it's possible that investors felt uncomfortable with deploying significant sums of money on top of that, as a result of which you saw the gross flows reduce quite considerably. That's how the numbers looked in the month of May.
All right, Alex, that was a very exhaustive and detailed summary of the AMFI data. Now let's take it across to another important development which means a lot for our economy as well, because sources tell NDTV Profit that the Fertilizer Ministry has sought 100% subsidy hike and the government is mulling the request. Shremi, my colleague, is joining in with all the details on the requirement and the government thinking. Shremi, tell us.
Well, India's fertilizer subsidy burden could rise to a record 3.4 lakh crore in the current financial year, nearly double the budgeted allocation of 1.7 lakh crore, as elevated global prices and supply disruption threaten to sharply increase the fertilizer import cost. Now, according to top sources, the Fertilizer Ministry has sought a 100% increase in the subsidy outlay, citing, of course, the sustained rise in the international fertilizer and feedstock prices. Importantly, the demand comes less than 3 months into the current financial year, reflecting a growing concern over the impact of geopolitical tension on the fertilizer import bill. But do remember the fact that India relies heavily on the import for key fertilizers such as urea, DAP and natural gas, etc., used as feedstock for domestic production. Any prolonged disruption, could push, of course, cost even higher. However, sources said that, the government is keen to shield farmers from rising input cost and is unlikely to allow a significant increase in the fertilizer prices during the ongoing sowing season. Now, as a result, a large part of increase is expected in the import cost and may have to be absorbed through the higher subsidy support. But the sharp rise in fertilizer subsidies could also add in fiscal pressure, and that's very important when Centre is targeting a fiscal deficit of 4.3% of GDP in the current financial year. However, officials maintain the stance that budgeted capital expenditure plans will remain intact, will continue despite the potential increase in the subsidy spending.
All right, Shrimi, thank you so much for all the details coming in on fertilizers. Now, India's fuel consumption dropped 6.5% in the month of May, hit by the high prices and also tight global supply amid the Iran tensions. According to Petroleum Planning and Analysis Cell data, petrol demand rose 3.3%, while diesel saw a modest 1.5% uptick. ATF sales, they remained flat as the airlines cut their flights and LPG consumption fell sharply by 20.5%, while naphtha demand dropped 29.5%, partly due to the diversion towards LPG production. So that's the update coming in on the overall fuel consumption in a very trying time for India. Now, India is also weighing more steps to protect its steel industry, and anti-dumping and safeguard investigations are underway. The government is evaluating additional protection measures for the sector, even as several trade remedial actions are already in force. Officials say that anti-dumping as well as safeguard duty probes can take up to a year. At the same time, officials say that the India-US trade pact could really open up significant market access, boost the exports and also create jobs. Listen in to what Amitabh Kumar, the additional secretary at DGTR, had to say on this.
We'll talk about the Indo-US bilateral trade agreement. So these are some of the highlights. What benefits will India get? That's why we are working towards it. And it all obviously will provide some new employment opportunities in some of our, employment intensive industry like textiles and leather, which also happens to be our strong point. And trade opportunities for young people in digital and advanced technology sectors will become easier and more accessible.
All right, so that was Amitabh Kumar outlining the government's thinking on trade protection and also market access. But what do these developments really mean for Indian exporters, the steel sector, as well as the ongoing engagement with the US on solar imports? That's also a very critical aspect in the entire negotiation. Rishabh, my colleague who's been really tracking the developments closely, is getting us the key takeaways and also the government's agenda. Rishabh.
Right. What we're picking up from the Director General of Trade Remedies is the fact that India is mulling more and more sort of measures in order to safeguard India's domestic steel sector. Now, there are several trade remedial measures that are already in place, but what we've picked up is the fact that some more measures are being investigated currently, and this does not rule out the fact that further anti-dumping duties or safeguard duties could actually come in, and this is to, of course, protect the domestic steel sector. The sort of representations that the government has been getting when it comes to the steel sector, those have also been flowing in, and the government is actively investigating them. The only point is that it might take 9 months or up to a year to decide on these investigations. These are very long-drawn processes, so that's what we're picking up when it comes to the sort of steel duties that could be coming in. What we're also picking up is that the US probe on Indian solar cell imports, that is also something that India is actively working upon with the US. There is, of course, the 126% duties that Indian solar cell imports were facing, and that is now pending an administrative review. So that's something that will be coming up over the next few months or so. Remember, the same duties were also put on countries like Indonesia and Laos, and now India was also hit with these. And what we're seeing is that Indian exporters are likely to participate in those hearings as well. That is the second sort of point that emerged from the DGTR briefing. Another one was, of course, India's stance being reiterated on the fact that India does not have overcapacity or forced labours in the textile as well as other sectors. That's what India's stance has been, and India is ready to showcase evidence. This is, of course, in direct refutal of the Section 301 investigations that are happening against Indian companies and Indian entities as part of the US probe against 60 different countries. So that's what we're picking up when it comes to the Director General of Trade Remedies.
All right, Rishabh, thanks so much for getting us all those details. Now, tensions between the US and Iran have surged again after an Iranian attack on a US Apache helicopter near Oman. Now, the escalation has disrupted air travel across the Middle East. Iran's IRGC claims strikes on the US Fifth Fleet in Bahrain, a base in Jordan, and attacks impacting Kuwait. Now, Iran called it retaliatory attacks. Meanwhile, the CENTCOM says that it carried out self-defense strikes after Iran downed the US helicopter over the Strait of Hormuz. Oil prices remain volatile amid renewed tensions, with Brent crude hovering around $90 a barrel. All right, so that was the update on war and how it has been impacting the crude oil prices. Now, despite Mumbai's dry spell, remember, the IMD, or Indian Meteorological Department, says that the conditions remain favorable for the further advance of the southwest monsoon over the next 3 to 4 days. Now, the monsoon is expected to progress across more parts of Maharashtra, Karnataka, Telangana and even Andhra Pradesh, while covering the remaining parts of Tamil Nadu. And it is also likely to advance into parts of West Bengal, Odisha, Jharkhand, Bihar and Chhattisgarh, bringing much needed relief and rainfall to several regions as the seasonal weather system really gathers momentum. So looking out for the rains at the current moment here in Mumbai. All right, on the political front, remember, Prime Minister Narendra Modi has become India's longest-serving elected Prime Minister in India in continuous office, completing 1,399 consecutive days and surpassing the records of Jawaharlal Nehru and Indira Gandhi. Now, the achievement comes as Prime Minister Modi completes 12 years in office, continuing his third consecutive term. In fact, NDTV's Gauri Dwivedi breaks it down for us. Tell us, Gauri.
Today marks an important milestone as far as Prime Minister Modi and his government is concerned. Today, in fact, he's become the longest-serving Prime Minister of India in a consecutive term, which is 4,399 consecutive days as Prime Minister. And he has surpassed the record of Pandit Jawaharlal Nehru, who served consecutively for 4,398 days. Now, it's an important milestone. The Union Cabinet, in fact, passed a resolution to this effect. There was a 7-point agenda that came out of the Union Cabinet, essentially congratulating the Prime Minister in terms of his public service record. Broadly and more importantly, there were also, in fact, messages and congratulatory messages coming in from heads of state, including Italian Prime Minister Giorgia Meloni, whom, of course, Prime Minister Modi had only recently met at his 5-nation tour last month itself. So essentially, you have global leaders congratulating Prime Minister Modi. You have the Union Cabinet, of course, passing a 7-point resolution. And the Prime Minister himself also pointed out that the public service record essentially reiterates his commitment with regard to ensuring that the public delivery system of India continues to serve the poor. Importantly, in the last 12 years, the government has said that it has lifted crores of people out of abject poverty. The PM had put out a number yesterday. It was 81 crore people. And remember, there are abject poverty numbers, then there are relative numbers. All of that put together, the government's entire focus has been towards poverty alleviation and also ensuring that welfare schemes, which is a very key and an iconic part as far as this government is concerned, that remains the central focus of the government going forward as well. Welfare schemes to ensure that all those who really need the government's backbone in terms of public delivery mechanisms, and that model, it's best served for people who need it the most. So essentially an important milestone of a day for the Prime Minister, for his government, and also a day where he has reiterated his commitment with regard to welfare schemes being one of his primary focus amongst many others for his vision going forward.
All right, Gauri Dwivedi, a very good account and summation of what a landmark moment this is for Prime Minister Modi and for the Parliament, Constitution and the country. With that, it's a wrap on this edition of Profit 360. Thank you so much for tuning in and keep it with NDTV Profit.
India is rewiring. The way it builds, the way it connects.
विकसित भारत के निर्माण के लिए जरूरी हर क्षेत्र में भारत तेजी से काम कर रहा है.
From infrastructure to digital access, from reform to real impact. But the big question is, what will define the next India? NDTV Ignite, the Future India Summit. A closer look at governance, growth and the future of a new India on the NDTV network. India Inc.'s most respected names chose India Inc.'s best and brightest.
These kind of awards and jury lineup, you are truly giving it the right weightage.
I think it's heartening to see talent that there is across India Inc.
We should be awarding companies and individuals who have focused not only on growth but also on bringing good governance.
Be part of jury and vote on the people, the men, the women, the companies in India who have the right stuff is a great opportunity for us.
For us, the biggest thing is trust. That's what we provide.
We need leaders in India that can help take India being a global superpower.
We've got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon.
This is where the future shows up first. Conversations with the biggest names in tech and AI. Putting tech through its paces. No fancy jargon or spec sheets, just what matters. If it's shaping the future, you'll see it here first. The Tesla Model Y. This is Tech 360. Real talk, real reviews across the NDTV network.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. India Inc.'s most respected names chose India Inc.'s best and brightest.
I'm delighted to be chairing a committee of such distinguished fellow businessmen, bankers. It's just lovely to be back on this NDTV jury. I have been a fan of NDTV for a long time.
Many of the nominees are extremely close together in terms of what they've done.
Gender parity to be reflected while we choose leadership as well.
It's also important that how they are reshaping the industries.
We got a fantastic jury and we've left all decisions to the wisdom of the jury.
Who will earn India's top business honors? Find out at the NDTV Profit Business Leadership Awards. Coming soon.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300
Hello and welcome to KYC. You are watching NDTV Profit with me, Sharad Dubey, and this is the show where I get you interesting mid caps and small caps, and at times even large caps also, and try to give you the story behind the sector and the company as well. But before that, try to guess the company which we are getting today in KYC. First one, hint is, it's a dairy company founded in the year 1992. Second hint, it's backed by ace investor Sunil Singhania's Abacus fund. Pretty interesting, right? Let's talk about the third.